Everyone, I declare open this meeting of the House of Representatives Standing Committee on Economics for its review of Australia's 4 major banks. Today the committee will hear from the ANZ and the National Australia Bank. I want to start by acknowledging the Ngunnawal for the lands on which we meet today, pay my respects to elders past and present, and I extend that respect to any Aboriginal or Torres Strait Islander people that are with us today. I welcome representatives of the major banks, as well as members of the public and the media in the room and watching online. As I said yesterday, these public hearings have an important role to play in public scrutiny, so we do have some requirements to enable us to productively do that. In accordance with Committee's resolution of 31 July, this hearing will broadcast on the Parliament's website, and the proof and official transcripts of the proceedings will be published online. With obvious great public interest in the proceedings, it's important to emphasise to everyone present that these are parliamentary proceedings which must be conducted by respect. Those present today are advised that filming and recording by the media is permitted during the hearing. However, we do ask that members of the media present or listening report the committee's proceedings fairly and accurately. Media present are also asked to conduct themselves in a way that doesn't interfere with the proceedings and must not encroach on the committee's work area or film or photograph documents or devices of committee members, witnesses or others. With that, I welcome representatives of the ANZ. For the benefit of Hansard, can you please state your full names and the capacity in which you appear before the committee? I might start with you, Mr. Matos.
Of course, good morning. I am Nuno Gonçalo de Macedo e Santana de Almeida Matos, and I am the CEO of ANZ.
And good morning, I'm Tony Warren. I'm the Head of Corporate Affairs at ANZ.
Tremendous, thank you. I remind you that although the committee does not require you to give evidence under oath, the hearings are legal proceedings of the Parliament. They do warrant the same respects as proceedings of the House. The giving of false or misleading evidence is a serious matter and may be regarded as a contempt of Parliament. And with that warm introduction, Mr. Matos, you may wish to make an opening statement, and I invite you to do so now.
Thank you so much, and again, good morning to all of you. Thank you for the opportunity to appear before this committee. I am joined by Dr. Tony Warren, who leads our Communication and Public Affairs team. Since joining ANZ in May, I have spoken to many of our customers about the part we play in the success of Australian families, businesses and communities. Across the country, I have been made to feel welcome and confident of the opportunities before the nation. In an unsettled world, Australia is an attractive, stable economy. ANZ's role is to help our customers, including home buyers and small business, make the most of these opportunities. I have also listened to customers, regulators and community leaders about the standard behaviour that they expect from ANZ. That standard is clear. We must put those we serve at the centre of everything we do. Unfortunately, ANZ has not always lived up to this expectation. In April, the bank entered a court enforceable undertaking with APRA relating to our management of non-financial risk. This is, at its most simple, about how we care for our customers. And in September, ASIC and ANZ made a submission to the Federal Court to resolve 2 matters relating to our markets business and 3 relating to our Australian retail business. The failings of non-financial risk management that led to these regulatory actions were serious and unacceptable. Some of them occurred when our customers were at their most vulnerable, facing hardship, bereavement, or relying on us to act with integrity. The fact that they happen means that while ANZ sought to implement the very clear lessons of the Royal Commission, this was not always done effectively and successfully. As CEO, allow me to be direct. The bank fell short of what is expected of us, and for that I offer an unreserved apology. In accordance with APRA's CPS 511 regulation, executives have been held accountable for their failures. From my first day at the bank, which started 6 months ago, I have been clear that the bank must change to better service our customers. The work is very much underway. We have appointed the right leadership to reshape the bank, and I personally oversee our actions on non-financial risk to ensure progress, drive accountability, and remove roadblocks. Importantly, APRA recently approved our plan to address the root causes of our risk shortcomings. These root causes are extremely disappointing and show we have a significant amount of work to do. However, we'll address them through a comprehensive program of work over the next 3 years. Through oversight by an independent reviewer, we'll be transparent about our progress so that you can judge us by our actions. In parallel, last month, I announced ANZ 2030, an update on the bank's priorities and strategy for the next 5 years. At this center is putting our customers first and managing risk better. To do this, ANZ needs to be simpler. With Suncorp and our ANZ Classic and Plus platforms, we have been effectively running 3 separate retail banks in Australia. This duplication adds operational complexity, increases risks, and limits our ability to serve customers well. Staying on this path was not an option. We are now accelerating both the delivery of the ANZ Plus front end and the integration of Suncorp Bank, with these customers joining ANZ by June 27. But simplifying ANZ involves some very difficult decisions. One of those is that we need to let go of around 3,500 employees and 1,000 contractors. We know that this is a very difficult time, in particular for staff leaving the bank and their families. As part of this, I have asked my team to continue to work closely with the Financial Service Union to ensure that together we can support its members, our employees. While we have different perspectives on what is happening at ANZ, my hope and our actions is that we continue to have a constructive relationship with the union. I also want to assure you that there will be very limited impact on front roles in branches, contact centres and customer support. In fact, as part of a new strategy, we'll put more homelanders into our branches, aiming to increase them by up to 50% over the next 5 years. And we are also aiming to increase our small business bankers by close to 50%, allowing us to better help business succeed in their communities. As we make these changes, there will be more resources directed to our non-financial risk management to improve capability, and we will meet our governance obligations in respect to the purchase of Suncorp Bank. Thank you so much, and I welcome your questions, including how our customers are doing and any other topic that you would like to address. Thank you.
Thank you, Mr. Matos. I appreciate a number of elements of your opening statement. I think the unreserved apology has to be noted right at the start, and I want to be able to go through some of the things that have prompted that apology. And I do hope in some of the measures that you've just announced, particularly around branches and small business bankers, that the 3,500 people that are looking at an uncertain future might be able to be redeployed into those roles so they can maintain their connection and you can hold on to their expertise in your institution. And again, we can explore that through the course of questions. Obviously, this committee has been set up at a time where governance nearly 10 years ago was a big part of the national conversation. It led to a Royal Commission. That Royal Commission examined the role of our 4 banks in the way in which they make decisions and the impact that they have on the community, on customers in the community. So I want to start with that, if I may. Now, I think The recommendations from the Royal Commission were made nearly 7 years ago. They remain effective. I've got a number of questions relating to culture and governance at your bank, because I am concerned that the lessons of the Royal Commission are being forgotten and that the misconduct that prompted it continues to occur today. Implementation of governance isn't one and done. It's ongoing, obviously. So to your unreserved apology, which I appreciate you've made that statement before, you can understand if it was over one instance or two instances, but in ANZ's case, ASIC has taken action against your bank 11 times in a decade. So more than once a year, your bank's behaviour, its conduct has fallen short of expectation. In September of this year, you were hit with the largest single entity fine issued by ASIC in history, finding that you'd acted unconscionably in the dealings with the Australian government while managing a $14 billion bond deal, risking government raising less money for public services. The bank failed to respond to hundreds of customer hardship notices, failed to pay promised interest rates to tens of thousands of customers, failed to refund fees charged to thousands of dead customers, and nearly 65,000 customers impacted. So my question is ANZ comfortable taking advantage of a national government in mishandling a $14 billion bond transaction? If your bank is prepared to take advantage of a national government at that scale, what assurance should ordinary customers have that the ANZ won't do the same to them, to everyday customers?
Again, as I believe I was clear, our shortcomings are unacceptable. And the question is, why did they happen? We need to understand the root causes of the situation if we want to address it for the future in a sustainable manner. My recollection, even though I arrived 6 months ago, it was very important to me and to us to understand why did that happen. And as you know, there was a lot of work done on it by us, but certainly by independent advisors. So the recent published root cause analysis, it's quite clear on why did this happen. And I want to remind that the things were absolutely clear in terms of our culture, which on one hand, and it's important to say, it's a collaborative, positive culture where people support each other. But it was also quite clear that that positive environment did not translate in good outcomes for customers due to lack of accepting the facts as they were, lack of challenge, lack of recognition of shortcomings, a good news culture, and complacency. I'm just quoting some of it, right? Because the report, it's quite clear, and transparently we publish it. Acknowledging why did we fail, and why did the organization, despite intending to not fail, failed, is what is going to take us to the right place in the next years. It's going to be a thorough work around culture. And in my very first day as CEO, I published the priorities of the bank. Culture and NFR were two of the three. My first day. Since I recognized that was going to be at the center of this journey. And culture means that we need to be more clear about what we do and what we don't do. We need to be more decisive and taking decisions today and not postpone it for tomorrow. We need to be more self-aware of the things we don't do well. We need to execute on time and be accountable. And that's the culture we are creating every single day at ANZ at this point in time. Now, culture takes years to transform. And if I say to you that after 6 months the culture is different, I would be naive. It will take a long time. And together with culture, we need to improve the governance, how we organize to deliver, how systematic we approach the work, our capabilities, do we have the right people to do the job, our policy and procedures, Are they adequate? Are they simple to understand or too complex? So in a nutshell, what I would say, Chair, is the following. The company, ANZ, intended to deliver. If there is one positive element here is that this is not about a company with bad intentions or ill-intended. This is a company that has a good heart, but is a company that was not effective because the culture did not allow it to be effective. That's what we are now taking care of.
So, Mr. Matos, I appreciate that, and I also appreciate that my hard words land on someone who's just joined the organisation, of which these instances occurred prior to your appointment, but you're in a leadership position, and obviously I do see in your words a reflection on how serious you do take it. But picking up on your point, you've reflected on the report I think that's been issued in the last week that referenced a good news culture that exists in your organisation, and with 11 cases of action by ASIC over 10 years, that is going to take a hell of a lot of work to repair. As you've noted, culture does take time to repair. You also said in your opening statement that executives have been accountable. So my next questions would be around how is that happening? How's that accountability occurring? And for the breadth of work that you just outlined in your response to my first lot of questions, who is going to be responsible for that? How's that being done? Will it be done transparently? Are there metrics that you'll be following on that? And also to the root cause remediation plan, are you going to be making that plan public? And if not, why not?
Sure. First, the accountable for this work, the number one accountable for this transformation, for this evolution, it's the CEO of ANZ, it's me. And it's me since May 12, since my first day in the job. That's how I operate, and that's how I expect the company to operate. There's no place to hide in terms of accountability. That's clear. Second, the way management and the board are collectively applying accountability, I think has been quite obvious, and I hope quite evident when we published the recent remuneration report of ANZ. You saw that all management got no variable compensation, was a zero to everyone, including myself, because I asked the board to be part of that pain, because I wanted to show clearly that I'm part of the team. I wanted to lead by example. A company that is not performing well makes no distinctions at the top level. A company that collectively is not working well does not distinguish between one and the other. We are all on the same boat. In terms of publishing the root cause remediation plan, we believe, and by the way, we certainly are open to deliver a report to you personally on confidence, and to the committee to that matter. We believe that the root cause analysis tells clearly what are the issues, and the Promontory Independent Advisor report also explains exactly what they think about the plan. The plan itself is a series of actions of what we need to do. It's the good thing we need to do. It doesn't add a lot of information, and we thought that from a transparency perspective, these two pieces of information were the right things to deliver. But again, for the committee members, we are open to explore other options.
Well, I mean, I obviously can't speak on behalf of my colleagues, but I, in part, welcome that. But it's, as you can appreciate too, always better to be a lot more transparent about these things than just giving it to us. I think there'd be a lot more stakeholders interested, including financial regulators. Are you sharing that work with regulators?
Of course. The root cause remediation plan was worked in absolute collaboration with the regulators, in this case with APRA, being the regulator that enforces in the EU, and they approve it formally. So they obviously receive the plan, they work on the plan with us, they comment a lot, They did a lot of suggestions for change, which we took gladly. So the final piece of work is one that has the strong advice, comments and suggestions of our regulator, and then it was formally approved by the regulator. So it's completely, if you want, it's completely in the hands of the regulator, as it should be, because it has to be formally approved. I also want to say the following. Every 6 months, we'll publish the report of the independent advisor, which will issue quarterly reports on how we are implementing the root cause remediation plan.
Is this Promontory or?
Promontory.
Yep.
Promontory will issue a report every quarter on how we are going through this journey. We are committing to publish those 2 reports every 6 months. So full transparency, Australia will be able to measure, to observe how ANZ is delivering to its commitments.
Mr. Matos, so I do appreciate some of those steps that you're taking, and I want to come back, if I may, to the executives will be held accountable. There is an uncomfortable perception, if I may put to you, that I'd like you to respond to, which is you've said you're going to hold executives accountable while there are 3,500 people in your organisation that are going to lose their jobs. And the worst thing I hear that occurred to the executives that oversaw culture and are in a leadership position in your organisation is they didn't get a bonus. Do you think that that is a reasonable outcome in that situation? You've got 3,500 people that are looking at their lives being upended, but 65,000 customers were treated in a way that I'm sure you don't agree is in their interests. But the worst thing that happened to those executives is they didn't get a really big bonus. Is that fair, do you think?
Chair, and I also would like to add the following. Many of the executives are not in the company anymore. So it's not about just the compensation that happened in 2025. A significant percentage of our senior team, it's not with us anymore. Roughly half of our senior team is not with us. That is, in my opinion, one of the most severe demonstrations of accountability that you have observed, I have observed in my professional life. But I see your point, and I understand absolutely the question. I need to say the obvious. Letting go approximately 3,500 people and impacting them and their families is not something I'm proud, is not something I would like to do. It's not something that a human being likes to do. It's very, very tough. Now, it's absolutely unrelated with the other topic, except in one element, which is crucial to us. The company needs to work in a simpler manner. The company was, and still is, too complex, with a lot of duplication of roles, with a lot of initiatives that were not aligned with the objective of the company, with being a bank. And those elements, that complexity, that duplication, those initiatives that frankly were too many, were not allowing us also to do a proper job for our customers. It's in the best interest of our customers to have a bank that concentrates in one simple thing, doing banking.
Understood. But if I can just clarify, because I think it's important that this not be left hanging. So to your point about the decisions that you're making that impact on the 3,500 employees, I no doubt, I'm relatively confident that'll be explored through the course of our time today. But you referenced those senior executives that are not there. I need to ask an obvious question because I think it's important that the record show, when you say they're not there, why are they not there? When did they go? Like, can you please clarify that for the record?
Of course. So, on our executive committee,
So the most senior leaders of your organisation?
Yes. So on the executive committee of the bank, if you want. Obviously, I am a new member of that committee. I arrived 6 months ago. And then on the team, which is composed of 9 elements, 4 are not there anymore. You need to say the names?
Is it, no, I don't need names, but what I want to know is, were they specifically let go because of their role in the regulatory actions undertaken by ASIC?
They are not in the company because we thought new leadership was needed to weather the remediation and the new journey of the company, clearly.
Since 2019, ANZ executives and board members have consistently stated they will commit to ongoing efforts to reform non-financial risk. So what's going to be different this time under your leadership, and how can the public trust that things will be different at ANZ?
And Chair, allow me to repeat some of what I said. Obviously, the number one accountable is the CEO and its ExCo team. We together, we have to really drive this remediation and this transformation, which is beyond remediation, of the company. That demands us to understand why we get here, and I believe culture was, or the way we operate as a company, was a big driver of it. Our lack of self-awareness, our lack of recognition, our resistance to change, a culture that confused collaboration and good news with absence of the right tension to debate the problems. We are operating, if you want, in the following elements. Transforming the culture, and the transformation of a culture is done in many ways. It's beyond what you say. It's how you act, how you behave, how you lead your people. It starts from the top. It also starts in how we incentivize people and how you make them accountable. So accountability is something that is raising to the top of the agenda. The governance, how we ensure that all parts of the company operate in an homogeneous way, that we have a standard that cuts across all divisions and all functions, that we bring the right people that understand the topic. And a small parenthesis, you are right. We are trying to ensure that anyone that is potentially losing his job can have an opportunity in other parts of the company where we are increasing.
Good.
Every time that's possible, it's good for everyone. It's good for the individual and for the company. We are also upgrading our policies and procedures, not because they are not there, but because they are too complex and difficult to understand. And finally, the way we do change management, the way we transform the company has to be done in 2 different ways. First, we have to do much less. We were trying to do many things at the same time. That's not a good recipe for a company to do too many things at the same time, and then many would not reach the end. And second, the way we do change management of the company has to be a capability that cuts across the company. So those elements, plus metrics, which I'm sure which, as you mentioned, we are measuring this transformation in many ways and forms. Not that we didn't have metrics, but we are making them more specific, more bespoke to the problem, more adequately measured. The transparency that we are using, including to publish to society and obviously to all our stakeholders, all this is a new way of doing things, and I believe we'll succeed. I am full confident that we'll succeed.
Thank you. Out of respect to my colleagues who want to have time to ask questions, I'm going to just limit my next ones to questions on notice around the program PACT, People, Accountability, Customers and Trust. And I'll just ask on notice, you don't have to answer now, the specific KPIs you're using to evaluate that program and how often this Les Vance person that you've got will be meeting with your executive and board. But with that, I'll hand over to the Deputy Chair.
Thank you, Chair. And just for the record, fully support the Chair's line of questioning. And ANZ has clearly failed Australia and its customers, but I think your forthrightness, your honesty and openness and accountability in taking accountability and dealing with that, I congratulate you with that, encourage you to continue to do so. I want to ask on housing and talk about the Australian economy, which is critical. And I'll be drawing on, you're obviously new to ANZ, but also new to Australia. And I think that's an opportunity for us to learn from some of the things you've seen elsewhere. But firstly, in Australia, the non-government loan books of Australian banks have shifted dramatically away from business towards housing over the last 30 years. There used to be roughly 2/3 of the total loan books were business and 1/3 retail mortgages. It's now actually largely the reverse, 2/3 retail mortgages and 1/3 business. And that's largely people trading houses with one another rather than productive capacity. Do you have any insights on what's led to that and how that compares or is different to other jurisdictions?
Well, I have insights, Deputy Chair, and reason being what you called out. I lived in many parts of the world and I manage global business that had mortgages cutting across the world, including my country, my lovely country, Portugal, which is one of the highest house versus income prices index in the world. So in my country, where housing used to be very inexpensive, today is at the top of the world almost in that index. The world has changed dramatically, and a lot of forces have contributed to housing inflation, if you want, in the world. I can't say it's specific to Australia. What I can say is that Australia is a fantastic place to live. We have a fantastic country. Many people want to live in this country. Like in my country, Portugal. That creates a flow of capital that naturally contributes to prices going up. So yes, immigration is one. But I also want to highlight a simple thing. The world went for 15 years of rates almost at 0%. And that created a lot of inflation in financial assets and real estate assets. And that was the price to pay for rescuing the global economy. So there are many things. The issue is complex in nature. Coming back to Australia, it's fair to say that Australia has a lot of capital coming into real estate. And I am not so sure that there is an easy solution for that in the short term. I know that public policy is much more difficult than running a bank, that I know. So I don't envy you. But I understand that you can always see one topic from multiple angles. But fact of life is that globally, real estate as an asset class has spiked tremendously in the US, in Europe, in the UK, in my country, in Australia. And I'm not sure it will stop here, to be honest.
And just on Australia, how does Australia's APRA risk weightings, which is about how much capital the banks have to keep versus lend out, on business loans and mortgages compared to other jurisdictions that you've been working in? Is that having an effect in, I looked at SME lending before this and it's flat for the last 10 years for the small end of the market. Is that having an effect on us lending to businesses versus other countries, in your opinion?
I believe, and I see it in my own company, that the system, the industry, it's very eager to grow in small business. Actually, if I had to say, the hottest part of the market in terms of intention of the industry to grow is in small business. I don't feel that, in general terms, there is any bank in Australia not wanting to engage with small business, to be honest. We certainly want. We want to grow as much as we can. We need to do a better job, by the way, in that regard. We are not comfortable with that. On the mortgage side, there are also very interesting elements.
Just on small business, so
yes,
why
sure.
are we not seeing that growth over a decade then? When we're saying everyone wants to do it, we want to serve it, but over a decade it's been relatively flat. Why? And you're new to the bank, you're new to Australia,
Yes.
looking for your learnings for the economy and as policymakers rather than assigning blame.
I'll be honest with you. The numbers I see from the industry is that the industry on small business, and again, small business depends on how you classify it. One of the issues we have to improve, in my opinion, is the definition of small business. It's very heterogeneous in Australia when you go one by one in terms of regulation, individual regulation. In 2025, meaning ending in September, small business grew around 3, 4, 5%. It was not flat. We actually grew 3%. And I'm not pleased with that at all. Our peers did a better job than us, just to be clear. And again, accepting what we don't do well. It's not as high as 9% in the middle market, in the mid-corps, meaning the next segment of the wholesale of the corporate segment. But I don't see it as flat in the list year.
But over a decade, it's, or at least my numbers.
I don't have those numbers. Sorry for that.
But do you have a view for why that's happening in Australia? And did you see that in Portugal or other places where you've worked? And is there something different in what we're adhering to in Australia versus these other countries?
I frankly do not, and not in that timeline of 10 years. What I see, to be honest, is that all banks are very much fighting in that space and trying to deliver as much as they can. It's a profitable business. It's good for customers. But it's not growing as fast as middle and big corps, and that might be to your point.
And is that related to our risk weightings here and how we do it, or what's driving that? Why aren't you, if the small businesses are wanting money, I'm hearing that all the time, they're being forced to private lenders, the private market. I'm getting complaints from people in my electorate about that. You're telling me you want to do it, it's profitable. I'm not hearing that from small business lobby groups. What's the blockage? Like something's not adding up here. When I'm hearing the small businesses saying, I can't get the credit, you're telling me you want to do it, you're telling me it's profitable. Why isn't it happening?
There are some elements that certainly could help, okay? And on the multipliers of RWAs, as you just mentioned, I think I can come to you. I need to do my work on that regard and comparing with the rest of the world on that specific question. But things like making homogeneous the definition of small business in all regulation, I would suggest public policy to address that. Things like making available the tax information on small business if the company wants to disclose it. That would make much easier because it's a very rich data to approve to small business, as another suggestion. Third suggestion, maybe allowing for more what we call standardized underwriting for small business, increasing the size of the loan at which I can use more simplified models to approve it. Those things are practical suggestions that I will leave on the table.
Thank you.
On the RWAs, I'll come back to you with pleasure, by the way.
Thank you, on notice, yeah. And just on that mix, the 2/3, 1/3, do you have a view for the effect that's having on productivity of the Australian economy? If we're lending our money to trade houses as opposed to invest in businesses?
One thing that is not unique to Australia at all, Europe has the same situation, but Australia is in the extreme, is that most of the assets that the banks lend, they stay on their balance sheet, which is very different from a US model, where most of the mortgage don't remain on the balance sheets of the banks. Banks originate mortgages, they get a stamp of a guarantee of a public utility, the Freddie and Fannie, which means they can rotate faster, and their balance sheets have much less mortgages. But in percentage terms, they originate much more than what they have in the balance sheet. Australia has not that kind of construct. That's a structural element to consider for the future. Can we create a market that just takes out mortgages from the balance sheets of banks and make banks be able to churn fast, recycle the balance sheet, right? Now, and I'm sure something you will ask me. The financial system in Australia is unquestionably strong. And those are APRA settings. And I would say very simply, that's not wrong or that's not right. That's a choice. It's a system that is very safe. And that's great, to be clear. And that has a lot of benefits, right? Including the fact that we can always have this perception that our system is one of the safest in the world. That's great. And on the other side, obviously, that asks for more capital. This balance will always be there. But it's for APRA to decide.
Would it be fair to say, looking at overseas jurisdictions, Australia is more focused on managing risk than enabling growth in our business sector compared to other nations such as US or much of Europe? Is that a fair characterisation?
Yes, because after the GFC, the global financial crisis, 2008, 2009, where Australia, by the way, went in a very nice way. Australia was almost untouched. All the world, the developed world, turned into a more safety approach, which is just normal. When you have a problem, a big problem, you have to read it to it. Australia did the same. So nothing wrong about that. And by the way, the Australian banking system is different from many of the other developed worlds in one thing. It's highly dependent on foreign funding. For banks to deliver the lending that they have to do to families and businesses, we need to take loans from the rest of the world, which means we naturally need to be safer than the rest. How safer than the rest? That's for APRA to decide. But it's important to understand the differences so we can modulate well public policy. So yes, the world shifting to a risk approach. The world as we speak today, is now shifting to a growth approach. The US started some years ago. The UK this year, the regulator said very clearly, publicly, we've been managing for risk. We now need to manage for growth and risk. It's public. So this is just how the world evolves in cycles, understanding what it has in front of it. So everything is explainable. It's up to us to decide, up to you.
Yes.
Not me, to decide how this will work in the future.
And is it fair, I've heard the rest of the world has started relaxing, either not taking Basel 3.5 or walking it back. Is it fair to say Australia is now slightly an outlier to the rest of the world in relaxing some of that, shifting towards growth? Is that a fair characterisation or not?
I think the decisions to be safe and sound and to understand the specifics of the system, it's an APRA decision.
Sure, understood.
Okay.
I won't push you any more on that. Housing affordability in Australia. Do you think housing is affordable, and do you think it's gotten worse or better in the last few years from the data you've seen?
The data I have tells us that in some states got worse, and in some states is basically the same.
Yeah.
If the data I have, and this is a short-term data. I don't have the whole series, okay?
And that's over what time period?
This is 12 months, I believe. So it's not the whole series. Obviously,
but it's not getting better.
It's not getting better, and if you take a long series, it's not getting better. Now,
yeah.
I want to be fair. This is a world problem. This is not an Australia problem.
Sure. Understood.
And again, the country is so nice, such a beautiful country. You have a lot of people wanting to live in this country.
So I'll come on to immigration in just 1 second. As the housing market grows, do banks, and you cut bigger mortgages, do banks increase profits in doing that? Not a gotcha question, just a simple question.
Banks should be doing business that is good for customers and it respects its shareholders, right? So mortgage is a profitable business. Now, two things on that. Not all mortgages are profitable. Mortgages were much more profitable 15 years ago. Mortgages were 3 times more profitable than they are today. Today, mortgages in Australia are probably one of the least profitable businesses that banks do today. Some mortgages are quite profitable, especially if one originates them, and if the customer really becomes a customer. If it's not you originating it, depends on how rich is your cross-selling with customers. So it's a profitable business in general terms, but not all segments of mortgages are profitable.
So when you're saying it's not that profitable, let me just get the stat. I've got here the average household in Australia pays Australian banks $200,000 in lifetime profits per household. Would you say that's not profitable?
Profitability is, and you know this very well because you already commented on it, profitability takes into account the amount of capital that you need to put aside to deliver that service to a customer. Okay? So it's not an absolute number. It's the relative equation between the absolute number that you just called out, deducted with the costs and the cost of capital, that capital that you need to put aside.
Yes.
That's the equation.
But from an Australian household's perspective, if I'm at home and I'm sitting there in my lounge room and I'm saying they make $200,000 on average on each one of us, do you think it's fair they would see that as a profitable business?
They would see it as a profitable business, of course. Of course.
And so as the housing market increases, though, regardless of the size of the margin, the bank's absolute profits will increase. Is that fair?
Yes.
Yeah. Okay. And so I don't. It's not a gotcha there. It actually is helpful to government. We increase, as demand increases and we grow population and things, we get more taxpayers. It's good for government. It's good for our tax base. It's good for banks. It's good for a lot of corporate Australia. So I don't think there's anything wrong with that. I think it's just a fact of life. But we've been often talking about supply in this committee, and I agree we need more supply. But I want to talk about demand a little bit, and 2 areas of demand. One is immigration, which you've touched on, and the other is incentives, whether it's deposit scheme, anything that actually allows people with less money to enter the market. Maybe we start with immigration. Is immigration, stronger immigration levels in Australia, which in the last few years they have been historically some of the highest, is that, in your bank's research opinion, adding to house price growth?
More customers, more demand, all other things being equal, by definition, puts pressure on prices. It's just economics.
And would that be true as well with demand-side schemes, be it 5% deposit schemes or tax treatment that allows, favourable taxation of housing? Is that also adding to house prices?
The question you're answering me, I believe it deserves a 360 answer in that case.
Sure.
Because if you just look into one variable, the answer might be simplistic. As I said, the previous one, yes. Now, both in the case of immigration and both in the case of a scheme to incentivize first home buyers, you have to see many, many angles. In this case, in this particular case, the social benefit of having population, our citizens, having access to their first house, I think in itself, it's a tremendous plus.
Got it. No, that's fair. Can I just ask one more question? Because I know I'm watching the chair and I know he's very good on time. I want to get one more in there before I go. Energy prices. In your research team, do you expect energy prices to decrease in Australia in the next 5 years? And can you talk about any effect you think they might be having on inflation?
Sure. And I don't have that data here. I know that energy prices have come up in Australia for quite some time. It's not specific to any period in time, okay? Now, what I would say is the following, which is again another obvious thing, and it is not for Australia, it's for the world. Ensuring that an economy has productive inputs and available inputs to its economy, it's in the best interest of all citizens. And that's for labor inputs, for capital inputs, for energy. And I have no doubt that all administrations are trying to do this. And it's a very difficult balance. I don't envy your job in doing that. It's very tough because it's not directional. You have to take into account many things. But yes, energy costs has been going up, and that's not good, as we know.
And do you expect them to go up? That was just the question. Sorry, you can take that on notice, or maybe a colleague.
Yeah, if you can.
We'll come back to you.
Thanks, Deputy Chair. We'll now cross to the member for Wentworth, who's online for her 10 minutes of questions. Good morning, Allegra, over to you.
Morning. Thank you so much, and thank you for being there. Apologies I couldn't be there today in person. I wanted to start with some comments yesterday made by the CEO of CBA, who noted that around 50% of CBA's customers are not currently profitable for the bank. It struck me as a sort of surprising number. I was interested to know if you had a view on whether that was a similar number currently with ANZ.
What I would say is the following. In any business, in any industry, in any country in the world, in your customer base, you always have customers that are profitable and some that are not. It's just how business works. And if there was a solution for that, it would be simple. I just pick the ones that I want to do business with, and that's not how the world plays out. So of course we have a set of customers that if I go individually, they will be either less or not profitable. But as a business, we try to make the collective work in a seamless manner. So we are not trying, especially on the retail side and small business side, we're not trying to identify who is profitable or not profitable. We know that they are there, but we'll continue to serve them.
I'm interested in the impact, however, that other players may have on that decision and desire to serve the breadth of customers that you just described. Particularly, say, for instance, banks that are addressing particular sort of segments of the market. Do you think that will have an impact over time in terms of your ability to serve the breadth of the economy?
We are a universal bank in Australia and also in New Zealand to that extent. And we have the ambition to serve all segments of customers, being it retail customers, small business customers, mid-corps. We have an implicit purpose of serving all customers in this country.
Okay. And just in terms of the broader dynamics in the banking sector, I'm interested again in how the growth of particularly big technology companies is affecting, this part of the economy. Do you have any comments about how sort of the growth of big tech is affecting your bank, or the sort of, I guess, particularly your sort of economic model as a bank?
Very, very interesting question, Allegra. It's another sign of a new world in which we are operating, okay, where there are what we could call hyperscalers that cross the entire planet and deliver service in many different jurisdictions. And it's a reality that we have to take into account. For example, and I would just highlight one, no great business wants to be disintermediated from its customers. We always like to see our customers. We don't like anyone to be between us and our customers. We want to be the ones delivering the service. And those business models, those global business models, they clearly challenge all industries, not only banks, in that regard. If you are a commodity and you don't face your customer, you are less relevant. One of the big challenges we have as an industry is to make sure that our services, our people, our brand is strong enough to be the one that customers want to see. That's a very important challenge facing the big techs and the hyperscalers that you just mentioned.
Mm-hmm. I would then probably like to move to an area about perhaps a different area of technology and its impact, which is on your workforce. You mentioned previously you've undertaken a very large restructure of your team, and that obviously has a really big impact on hundreds and thousands of people. I'm interested to think about how do you see your sort of staffing levels change over the next few years? Obviously, sometimes there's about moving people out of one area and into other areas. Do you have a perspective in terms of how you expect staffing to evolve over time?
I do. And at the same time, I must be humble. Things are changing so fast that every time we stop to plan, we realize that the last planning was already consumed by reality. Having said that, clearly in our case, we would like to expand the number of people that faces customers. In our restructuring, the one we announced, as we said, we are not touching frontline people. We're not touching employees in branches. We're not touching employees that face small business. We are doing minimal touch on employees that do customer service. So both on our front and our back, those that directly deliver to customers, we are not touching them. And on the front line, we committed because we want to grow. We want a better business, a bigger business. We committed to grow mortgage lenders, small business lenders. At the same time, at the center of the house, or where we have most of our management and processes, we certainly have the ambition to be more nimble, to be simpler, less complex. So I would expect the center of the headquarters to be smaller, if you want. In terms of automation, and AI is just, we talk about AI, but let's be clear, AI is just a continuation of thousands of years of automation that the human being has been doing, with more mathematical power, with more computational power, with more data. I can't predict how this will evolve. There are many cases saying there will be massive unemployment in the world, but there are also cases saying there will be more employment because there are many other jobs that are being created. I'm more in the middle, if you want. I don't think the extremes will happen. It's still at the beginning of this journey. The realization of benefits of AI in companies is at the beginning, I must say. In our case, we are very much eager to use it for the benefit of customers. I will give 3 or 4 examples. How to deliver better services in our scams, anti-scams and anti-fraud. Clearly, AI, by putting more data, is much more effective. On how to underwrite better, getting more data and be able to approve more loans to customers. On how to do a better service in a call center because I know who is calling and I can directly immediately to the right service. So a win-win in terms of better for customers and fairer for the company is the first phase of AI. How this will end, I don't know. My recommendation to any society is if you resist evolution, assuming that the evolution is done in proper terms of no bias, no abuse, no uses of data, undue use of data, assuming that to do it properly, resisting to change is going to place the economy in a bad place. We are not isolated.
Well, that was going to be my final question, was really how do you see Australia in its current position in relation to AI in terms of being able to manage what is going to be a significant transition for everyone, I think?
Not surprisingly, the debate is happening, and I think that's great. And I know there are many different opinions. There are people that are more optimistic, more eager to, that there are other stakeholders more resistant. And I can understand all angles. My humble suggestion is I would always recommend do it properly, use it properly, but try to educate Australia to be a leader, because otherwise Australia could be a victim. And that's my recommendation, but do it properly, again.
Thank you for your time. I'll hand back to the Chair.
Thank you so much, Member for Wentworth. I'll now hand over to the Member for Moreton for her 10 minutes of questions.
Henry? No, sorry.
Thank
you very much, Chair, and thank you very much, both of you, for giving evidence today. I might pick up where the member for Wentworth left off in terms of AI and automation. And I was going to ask, given that ANZ is currently planning redundancies of 3,500 plus 1,000 contractors, are any of the roles or functions or responsibilities of those employees going to be replaced by AI or automation?
The answer is no. Not to this restructuring that we announced. It's not driven at all by AI. It's driven by eliminating duplication. As I said, we had 3 departments of retail in Australia. We are collapsing 2 of them. Driven by reducing complexity and functions that are replicated in the bank and stopping activity that we should not be doing, in our opinion. So not surprisingly, we did not take a flat approach, which is everybody takes the same pain. Not the case. We did a very targeted evaluation of where we were department by department. 2/3 of our reduction, it's done in 2 departments, retail and technology, and it's public. The rest is spread apart from across many divisions and functions.
So do you see that application of technology being used by yourselves to reduce costs for customers?
I think productivity is, as we know, should be a goal of any society, being it public administration, private sector, and I see a very deep debate on productivity going around today in Australia, rightly so, and it's a collective debate. So by definition, productivity means you will get better outcomes with less resources or more outcomes with the same level of resources. So by definition, it's something that economic agents need to be doing. The pace and how deep that will happen, that will go, I can't predict at this point in time. To be honest, we are still at the beginning of this revolution in the world. Whoever says a lot about it, I suspect it's still based on hopes, but I have no doubts it's a reality. It will not necessarily reduce the number of roles, but for sure it will shift roles from one part of the economy to the other part of the economy.
No,
and the issue would be to avoid that, because then you lose both. Right?
Understand. In terms of the protection of customer data, as you know, you increase in using that technology, can you take us through what safeguards are in place, where data is being held, what processes are being put in place to ensure that?
Data management is one of the most difficult exercises in a bank. Banks are a huge repository of data, as you know. And regulation, rightly so, made us accountable for keep that data very well stored, ensuring data privacy, eliminating data when we don't need it anymore, and making sure that we can only export data when regulation allows it. Our organization is trying to make sure that we comply with all those regulations. It's certainly a topic where we need to evolve. We store data in thousands of applications. Our bank has thousands of applications, platforms. Many of those platforms store data, and the exercise of complying is complex, but we do it, and we'll continue to do it according to with requirements of regulation and also to our standards of storing data.
I might just add, can I just add one point to that? Of course, one of the critical things is you don't use your data in the public AI. So it's quite common, but we're very cautious that we never expose our internal data to an external AI. We use the AI tools, but we do it on private premises.
Okay, thank you. I want to move on to home loan offsets. Presumably you're aware of ASIC's concerns around potential issues with the operation of home loan offset accounts and them not operating as they were intended. Can you please let us know when you became aware of that issue and what steps, practical, tangible steps, ANZ took to ensure that their offset accounts were functioning properly?
I'm aware that we had in the past some offset issues, meaning linkage between offset accounts and mortgage accounts in a way that the offset was working as intended and as announced to the customer. I'm also aware that those issues were remediated, including a last one which should be remediated in March 26, if I understand. So what I can tell you is that we are on top of it. The comments I did to the chair at the beginning, they are broader comments. We are not just remediating and transforming what specific issues we found with APRA and ASIC. We are looking into the whole ecosystem of process of the company, and we are reviewing them to the benefit of the customer. This exercise is not a regulatory exercise, it's a customer exercise. So, to my knowledge today, we are executing well our offset operations, but I will take another look on top of your question.
Thank you. And when you say remediated, what do you specifically mean by that? Do you mean that you've identified a challenge, you've paid back that person, but then you've gone back and looked through all of the other places that may have happened and also paid back those people?
It's a great question. I should actually use the word transformation and sustainability. Thanks for that. And sometimes we use the word remediation, and what we are saying is the following. To change sustainably, you need to do the following things. You need to fix the specific situation that you found. Then, to your point, you need to do a backbook review. You need to understand which other situations might be there, and you need to do a backbook remediation. Those two resolve the past. But as we see in the case of ANZ, that's short. What you need is to ensure sustainability for the future, which means you need to re-engineer your processes, ratify them, either with people or with automation, to make sure that it doesn't happen again. And on top of that, you need to implement the right controls on the pain points of the systems, on the process, to ensure that you have information that tells you that things are working well. This is what sometimes we call remediation. We should call it transformation and sustainability.
And so taking up those sort of 4 points that you've just raised in relation to the Chair's earlier line of questioning around the specific challenges around bonds and around the taking of fees from people who had passed away, can you take us through how those 4 things, i.e. fixing the specific situation, looking at previous applications where that might have happened, re-engineering the system. Can you tell us how that process would apply to rectifying those 2 specific issues?
Of course. In all cases that you mentioned, obviously, the specific element was remediated. In some cases, was an event, so that event was a unique event, not to be repeated. We did the backbook review, the C-state, hardship, online server, to mention the three that ASIC find to us. And full transparency, ASIC mentioned in his report 65,000 customers were impacted. To answer to your question, we went well beyond the statute of limitations, and we remediated 260,000 customers, way more than the ones that ASIC mentioned, because we went to the full timeline. If we had information about the customer, even beyond the statute of limitations, we would still remediate that customer.
So 260,000 people were actually underpaid.
Remediated from the past.
And sorry, for clarity, those were people who were underpaid. Oh, sorry, not underpaid. Those were people who were charged fees that they shouldn't have been.
They were either charged fees, or we did not answer in the timelines that the regulation demands us to. So it's a variety of situations. But yes, if you want to simplify it, we did not deliver the right service, and in some cases the right financial outcome to those customers, and we remediate them all. Mm-hmm. Now, at the same time, if we don't want to be here having the same conversation in the future,
agreed,
we need to add on to. We need to make sure that the processes that we use to do that job are fit for purpose. Mm-hmm. That's what we're doing as we speak.
So,
unfortunately, we've hit time. I certainly welcome. I think we'll have a bit more time to revisit some of these issues later on, if we may. The member for Bowman, good morning. Coming to us live from Brisbane. Over to you, sir.
Thank you, Chair. We had yesterday. We heard evidence from CBA and Westpac in relation to their forecast for interest rates next year. I'd be interested to get ANZ's house view on, whether you expect to see the cash rate to be lowered at any point in 2026.
Okay. Well, as you know, that's a role for the RBA, and to the record, I think the RBA does a great job and is really very well respected in the world. Now, what I can tell you is what our research says. Okay. And I hope they are smart enough to be right, but I can't promise that. It's our opinion that there will not be more adjustments in 2025 to the cash rate, and there will be a final one at the beginning of 2026. Again, that's what our research team has at this point in time, and that's what we communicate to customers. Okay?
Okay. Thank you. And what do you think? I mean, you obviously across your books, you've got great insights into, many different industries, many different sectors. I'd be keen to get the house view from ANZ on what are those key components that are creating such a challenge for us to keep inflation down. What are the major factors that are driving it in from your perspective?
Well, first, to acknowledge the obvious, right? The developed world, for 15 years tried to create inflation and failed. And there was a tremendous monetary expansion in the world's scenario. And then COVID brought the solution to that problem, even though COVID in itself was obviously a human disaster. With COVID, inflation came back after being absent for almost 2 decades. And the COVID impact has to do with many angles, but certainly a further expansion of monetary mass and monetary policy in the world, combined with a lot of supply shortages, value chain limitations. Those two elements brought a reality that was absent from the world for 20 years. So I would not attribute inflation in Australia to Australia itself only. There is a lot of global components to that reality. Sometimes inflation, it's not a domestic issue. I'm not saying it's not. I'm just saying it's not only a domestic issue. Beyond this, I would prefer, again, to leave that to public policy and to the RBA to address those topics.
I'm sure you would prefer to leave it to us, but we're very keen to get your perspectives on it as one of the leaders of our industries. But would you suggest then, given your statements you've just made, would you say that increases in public expenditure are driving inflation?
Obviously, again, simplistically, which is never good, never the right answer, more spending, by definition, drives demand. And I'm talking about public spending, private spending, any kind of spending, by definition, pressures the demand curve. Now, you could debate, is it better to have public spending or private spending? I would say private spending is typically more productive. We know that globally. But we also know that socially, public spending is very important. And that's why I say I leave that to you, and that's why you have a much tougher job than I. But yes, to your question, yes.
Thank you. Would you accept that energy costs are now a structural driver of inflation?
I would say that energy costs have been going up for quite some time, not specific to a particular year. It's a reality. It's there. Not easy to fix that in 2 or 3 years, just to be clear. It needs consensus. It needs agreements on how we are going to transition the economy into the future. And certainly, it's in the best interest of the Australian economy, as it is in all economies, to reduce and contain energy costs.
Would you say that across your SME and commercial customers that you're seeing an increase in hardship due to energy costs?
I'll be honest with you, and I can bring information if we have. We don't have that link, okay? And actually, I must say the following. Delinquencies in Australia continue to be at a very, very low level. In our case, our small business credit losses are still less than half of what they were pre-COVID. Having said that, it would be unfair to not acknowledge that small business and business community in general is feeling the pressure of inflation on its inputs. That's quite obvious.
Okay. You mentioned productivity in an answer to one of the earlier questions, and obviously productivity is a topic that has had a lot of discussion within the Parliament and in the public sphere this year. RBA has lowered their productivity growth assumptions to 0.7% per annum. Treasury is using 1.2%. What's ANZ's house view on Australia's productivity trajectory, and how does that shape your lending and risk settings and outlook for Australia's economic growth?
I will bring that data, to be honest. I don't have the data specific for productivity. However, trying to answer your question, the GDP per capita of Australia, we all know, has been very much determined by population growth and some shy element of productivity. Australia has grown at 2%. On average, population grows at 1 point something percent. That tells you that productivity by definition is not growing a lot. In that regard, I applaud both the administration and society efforts to have a serious debate about productivity. Productivity is not a short-term thing, it's a long-term trend. It demands all parts of the economy to come together. So it's not high, it should improve, and should improve for the benefit of everyone in Australia, to be clear. And it demands everybody to work together, and we banks are certainly part of the equation.
Would you say that if it weren't for the level of, and I'm intrigued to get your insights on this given your international experience, would you say that if it wasn't for Australia's growth rate in terms of population growth, we would not be seeing the level of economic growth that we've seen over recent years?
It's quite obvious that demographics play an important role in Australia, as they play in the US and as they play in Europe. And a good demographic bonus, it's usually seen as a positive when, for example, foreign investors look into Australia. The fact that Australian population grows every year, all other things constant, it's a plus. Now, someone would say again, here we go, this is always a balance. You can't grow in an unplanned manner, right? So those two sides of the equation needs to be adequately considered. Again, I think I'm not the best opining on that regard.
No, that's all good. Thank you. Would you say that across your customer base that you're seeing in terms of the projects that people are applying for extra finance for, or the investments that they're making, would you say that they are investments aimed at boosting productivity?
Thanks, Mr. Pike, and that'll be the last question. If you can answer Mr. Pike's question, be
Thanks,
handy.
Joe.
Thank you.
Sorry, you mean on the small business space?
Yeah, I meant SMEs.
I don't have the data here, but I will try to bring data to you if you allow me. Okay, it's a good question. It's a good question. I'll try to bring the data for you. Thank you so much.
Thank you.
Terrific. I'm going to hand now to the member for Reid for 10 minutes and then the member for Deakin after that, and then we'll go for a break, and I think that'll be just before 11. So over to you, member for Reid. Thank you.
Thanks very much, Chair, and thank you, Mr. Matos. You've come into the organisation at a very interesting time. I wanted to ask about the opportunities that the bank sees from a commitment to net zero. I know that this is a commitment that the bank has signed up to, particularly around the financing of clean energy. Does that remain the case, and why do you think there are opportunities there?
We certainly remain committed to our 2030 goals. Some of them are annual goals. We just published our 10 commitments. We achieved 8 in totality. So we continue to be committed to 2030 goals, and we continue to be committed to the Paris Agreement. Okay? And we are not changing that. At the same time, we have to recognize that this is also a very dynamic arena. And it's dynamic because public preferences are dynamic, public policy is changing in the world, technology developments is constantly either accelerating or putting us back. There are a lot of angles we need to consider. Above all, what we believe is we need to get to an end state in accordance with the Paris Agreement event. We also have to acknowledge the starting position, and sometimes, if I might, just focusing on the end state and not acknowledging where we are starting from creates discontinuities and lack of pragmatism on how you can approach it. But to your question, we are fully committed, we are not changing, but we'll be listening to public policy into this, and we'll be listening into the world adding into this equation. It's still a very moving, dynamic environment, if you want.
Can I just, I think I understood your question also was about their commitment to renewables and expanding in renewables, yeah. So we put out a target a few years back to go $100 billion of lending into renewable and social investments. This year we just published that we're at 84.5 billion on the way there. So we do see, you know, really quite exciting opportunity in that renewable space as well.
Yeah.
And we are investing to be the leading bank in this space in Australia, and at the same time we are very clear about where this is starting. That's my point.
Yes, thank you. And given what you have described as a dynamic environment around the world when it comes to renewable energy and commitments to net zero, how important do you think it is that the Australian government commits to a net zero commitment to encourage business investment?
I think clarity is always important, and I understand that the position to the public policy today, it's towards the Paris Agreement. It's also aligned with our policy, okay? And a policy of the bank takes into account, on one hand, public policy, we read into it for obvious reasons. It also takes into account our risk appetite, which things are responsible to do, which things don't put the bank in unnecessary risks. Remember, we have depositors. So this is where we play. I believe clarity is important. I expect clarity to be there for us. It will help us define our policy in a continuous manner. But today, our policy is the one I just stated.
Thank you. And I recognise the apology that you made at the very beginning in your opening statement, and realise that you've come into the bank at quite a challenging time. But I wanted to ask you around the big agenda that you have set for the bank. And each of them is massive in their own right. So the response to the non-financial risks, changing of the culture and the processes within the bank, the acquisition of Suncorp, the bringing together of ANZ Classic and ANZ Plus, and then a huge change in your workforce. How do you think you will be able to manage that big program of work whilst trying to lift revenue and cut the number of staff? It sounds like a huge challenge before you, and I wanted to get some insights into how you think you can do all that work while reducing the number of people to do the work.
Absolutely a fair question and the right question to debate. At the same time, at the time we are doing the thing that you just described, what we call it our 5 immediate priorities. That's how we communicate it to our staff and to the markets. The 4 you just mentioned, including the NFR transformation, that makes the 5. At the same time, we are doing that work, which is unquestionably a very important book of work. We are stopping a lot of things that don't add necessary value as a bank or in the short term. So we are being respectful to this idea that you can only do so much at a certain point in time. Many projects that didn't align with our strategy, many initiatives that were not really relating with banking, we stopped doing it. That takes complexity out of the way of doing these important and crucial elements for the future. And again, even though it's very difficult to take a decision on people, those resources were being applied to activities that were duplicated, that were adding complexity, or they were not adding value to the organization because they were not banking related, for example. It's in the best interest of our customers to have a bank that dedicates to do simple things, which we call banking, good banking to them. So actually having less complexity, less resources, less projects makes these important undertakings more likely successful. That's the equation.
Understand, and I know that you had mentioned some of that the staffing cuts would not affect customers and your risk side, which is promising to hear. But I did note that they will be coming out of the technology part of your business, and just wanted to get some reassurance from you around ensuring that the technological advances that are being deployed to prevent scams, that work will continue and not be impacted by staff cuts. And I also wanted to ask you about, I note that a few weeks ago there was an outage of the bank's platforms in New Zealand, and that left your customers without access for quite a long time. Whether or not reducing your staffing levels in the technology space might have an impact on your digital platforms, and whether or not the digital platform that you use in New Zealand that was vulnerable to this outage is also the same that is being used by your Australian customers, and if there are vulnerabilities there.
Sure. On the scam side, which is something we are quite proud of what we've been doing, we added a tremendous investment in technology, in how customers can be self-served, how can we detect fraud using AI and scams. We have been reducing fraud for customers year after year, which is a great trend in a world where scams are just increasing. So we are proud of what we are doing there. Having said that, we are not stopping. Anti-scams, anti-fraud investments will continue to be quite important. This is what customers want from us, to protect their monies with us. Okay? On the tech side, most, not all, most of the reduction in technology was reducing engineers that were allocated to projects that we are stopping, that we are not doing anymore. Okay? Specifically to the New Zealand outage, it was a coding defect that was not well tested and stopped our mobile and internet banking. Those two components, not the whole bank, but those two components. And just to be clear, those two components are very important because those are the ones that customers use. It was a non-desired event, what we call a major event. We took the lessons. We did a read across, which is we learned from what happened in New Zealand and we brought those lessons learned to Australia to ensure that in Australia those things won't happen. Having said that, no bank in the world will be able to tell you that they will not have outages. We are a complex ecosystem of technology, becoming more complex by the day for the reasons you might understand. The three metrics that we use to measure the situation are number of events, number of outages if you want, and moments where the bank is not available in some of our platforms. The severity of those events, in this case, was P1, which we call the most severe because it's impacting customers, and how long it takes you to recover, meaning how many hours it takes to get back. On the first two metrics, we've been improving year after year. On the third one, we're not doing a good job, meaning how long it takes us to recover our services. That one, we are putting a lot of emphasis to train our teams to recover faster. So we are on top of it. You have my commitment.
Okay, thank you very much. Sorry, we are running out of time, and I was remiss in scheduling in the member for Casey, so I'll hand over to him now.
Thank you, Chair. Thank you. Does your organisation lend to projects involved in green hydrogen?
We have in the past. I'm not certain of any recent investments, but yes, I know we've done some work in the past.
And how have you found, I guess, the risk on those projects and the return? Are they, would you consider those successful projects, and are you planning to continue to invest in green hydrogen moving forward? Very good questions. I'll have to take that on notice for you. We can take that on notice. That would be great. I note Mark Vassella, the CEO of BlueScope, yesterday said, and I quote, "Australian manufacturing is at a tipping point. Energy costs are 3 to 4 times higher than they are in the US, and what was once our competitive advantage has gone." So I guess my question, given as a bank you're lending and you by rights have to look at risk profile, are you starting to assess Australian manufacturing businesses and how you lend to them with a different risk profile, given the continual, I guess, examples we're seeing of the exposure in Australian manufacturing due to higher energy prices at the moment?
Yes. So, and the answer is yes to all factors, meaning it is expected from a bank of our size, of our complexity, that, and frankly to a good bank, to take into account all factors when considering where we apply the money that we receive from our depositors. So by definition, we take into account the sustainability of a manufacturing company, including how dependent are they from energy and how dependent are they from sources that might be very expensive and they make them unprofitable. Undoubtedly, as I said, it is in the best interest of an economy to have efficient energy and available energy. So yes, we are taking that into account. If you're asking us if we are seeing moments where we are restricting credit for companies because of that specific factor, I don't have data to give you today. I can try to do it.
If you could, yeah.
And on hydrogen, it's obvious. Another, when I said in this committee that when we set our policy, we take into account technological developments. Clearly, that's a part of the renewables energy, which the hopes of a breakthrough are now postponed some years.
Yeah.
It's obvious. I think everybody recognizes that. Okay.
Yep. So very unlikely, based on that statement, that you'd be investing in green hydrogen projects at the moment, given the current economics don't stack up.
It would be a decision that we would need to consider, taking into account the fact that so far the cycle of development of that source of energy has been delayed for quite some time.
Does the ANZ Bank invest in gas projects in Australia?
Yes, we do. Yes,
and
we do.
There's nothing to preclude you from continuing to invest in gas projects as long as they stack up commercially in Australia?
I believe that public policy, which is one of the most important elements that is informing our own policy, it's pointing out to a very pragmatic situation. If we want to transition into a much more, into a greener economy, into a more sustainable economy, gas, it's part of that equation. I'm not the one saying it, I'm not the expert, but that's what many parts of society are realizing. Our policy has restriction on gas, but at the same time, our policy says that we should do everything in the best interest of the nation. So, provided that the gas project is in the best interest of the nation and we take that from public policy, we are open to participate with pleasure.
So just to clarify, Mr. Mattis, I believe you just said then that you have restrictions on lending to gas, did I hear?
Yes, we have today, yes.
So what are those restrictions and why do you have those restrictions on gas as it stands today?
We took a policy a few years back to look on essentially on a case-by-case basis around gas, because obviously it's still a significant emitter of carbon. For the reasons that Mr. Mattos just said, I think it's become very clear that gas is an important part of the transition to a lower carbon economy. And so we said at the time that obviously we would take account of national interest when, you know, we weren't going to be black and white in that policy. And so, as Mr Matos has just said, now we're taking a very pragmatic view on gas. So if clients come to us and say we would like to look at gas investment, we're open for those conversations.
So 2 years ago, green hydrogen was good and gas was bad, and now from the bank's perspective, you're not looking to invest in green hydrogen. Well, you were investing in green hydrogen 2 to 3 years ago and you weren't investing in gas, and you've just said you're no longer looking to invest in green hydrogen, you're now looking to invest in gas. So I think a fair layman's term summary was 2 years ago you weren't prepared to invest in gas, but you were prepared to invest in green hydrogen. Today that position has flipped. I think that's a fair summary based on what you've just said.
I don't think it's more complex than that, but I'll take the...
But at a very simple level, 2 years ago you weren't investing in gas. Today you're open to it.
2 years ago we had investments in gas. It was new upstream investment in gas. So ANZ is Australia's largest resource bank. We're very proud of the role we played in this space. We have significant exposure to fossil fuels, the highest of any of the majors, reflecting that history we have. So we've got a back book of substantial investment in gas. We a couple of years ago said, well, to meet the Paris commitments and to meet the 2030, it was clear that we had to start to reduce our exposure. We did, however, realise at the time there was a very active debate going on around the role of gas. And we've followed that debate, and as Mr Matos has just said, it is now very clear that that is bipartisan and clear public policy, that the gas plays an important role, and we will play the role that ANZ has always played in that space.
And have you adjusted your forecasting and ambitions around emissions, given you've moved from a focus on a base load that was zero emissions in green hydrogen to now flipping to a base load, as you said, which is higher emissions in gas? The logical conclusion would be that will change your trajectory on your emissions and ultimately where we would lead as a country. Just again, very basic, if you move from a no emissions to a higher emissions, as you've said you've done, have you...
We are not changing, just to be clear.
Okay.
We are not changing our targets, okay? Not changing our targets. And we continue to be committed to the Paris Agreement goals.
Okay, so...
Now, I think it's, again, fair to say, and I was very clear, that our policy takes into account public policy, technological developments, public preference, and all of those elements are dynamic. As an organization that manages risks, you would expect a bank, a good bank, to constantly read the inputs and adjust. And one of the things that the policy says clearly is that we will do always what is in the best interest of the nation, which by definition is not defined by us.
Yep, no, I agree. I'm just trying to understand a world where you can make such a significant change, but the end goal you're saying is not going to be impacted. But again, that doesn't really pass that logic test, and I think there's some honest conversations we need to have with the Australian people on that. But I'll move on. I appreciate the candour and the honesty on those discussions and the changes that the bank has made. I think, Mr Matos, to yourself, in the national interest, having lower energy and reliable energy is always in the national interest, so I appreciate your honesty and your feedback on that. I just want to move to ANZ Bank at Post, so a bit of a shift here, but until recently you were not part of the Australia Post Bank at Post scheme. Why was that?
The bank simply was not offering its services through the Bank at Post network. What I can tell is that we are already finalizing all our developments, and in the first quarter of 26 we'll be live and very happy to extend our coverage of basic banking services whatever Bank at Post it is.
And I guess what changes has the bank had to make to join the scheme, and how do you view the costs associated with joining the scheme?
It was obviously a negotiation with Bank at Post, and as such we believe that the terms that were negotiated are in the best interest of both parts.
Perfect.
Okay, thank you. That wraps it up. We'll go to the break and be back at 11:15. And then when we resume, the member for Deakin, you can start your questioning. Thank you.
You've spoken about a preference of the bank to deal directly with customers rather than relying on intermediaries, and I assume that was in the context of mortgages and other products. I was wondering whether that approach translates to regional banking and whether that means that ANZ intends to maintain its regional branch network at this point or expand it, and what work it's doing with others in the banking sector to ensure the longevity of regional banking.
Sure. We have today a network which is composed of ANZ branches. We also have Suncorp with its own branches. That's what we stand today. Putting all the things aside, we believe we have the right network today. At the same time, we certainly believe that regional banking, access to basic banking services in all Australia is crucial. I understand that the industry reached an agreement to keep its regional branches at the same level until 2027. And what I would say is that we should find a sustainable solution to extend that support into further years. So full support on our side. We acknowledge how important it is to deliver basic service to Australians in remote areas, and we'll continue to comply with all our obligations.
Terrific. Do you think there's opportunity for the bank to assist other financial institutions providing a base for banking services to be provided across institutions, or are you looking at different models of delivery?
Yes, and again, this is not a specific issue to Australia. Having said that, due to Australia's geography, it's more relevant in Australia than other parts of the world. Solutions like remote ATMs should be further explored. Solutions like banking hubs, which basically are multi-bank branches, should be explored. And I think between the ABA and Treasury and society in general, we should continue to evaluate those options. I certainly would be committed to find a sustainable solution for that reality.
Excellent. Could the same be said about availability of cash, which is also another topic where the ABA and other banks are working together? Can you update us on what stage that work is at?
Absolutely. It applies the same principle. Access to cash is a basic banking service. As I'm sure you know, some issues arise around cash distribution. The ABA has stepped into it, worked hard with the major provider of cash, distributor of cash in the country. I understand that the new pricing scheme is being finalized, and I would hope that that pricing scheme will offer stability both to the provider of the service, to the banks, and above all, for Australians.
Terrific. Going a little more in-house now, if I could. The McKinsey review made very clear that substantial cultural reform was necessary across the bank. However, what short and medium-term interventions have you got in place to ensure customers are not exposed to the impacts of those cultural shortcomings while that longer-term journey is taking place?
We know which services either are not operating sustainably, which services are the most relevant services to customers. We're talking about retail and small business for the most part. So we know which interventions we need to prioritize. Not surprisingly, putting in order our process of disease states, hardship, complaints management, events management, breach reporting, customer remediation, all those basic services are being dealt as we speak. At the same time, we are designing processes for the future for the whole company, but these ones, we are acting in parallel to ensure that we minimize the likelihood of customer harm.
Speaking of that, could you expand upon the specific work you're doing to identify, mitigate and respond to financial abuse among your customers?
Can you talk about that, Don?
Yeah. So first of all, we obviously welcomed the committee's report on the financial abuse. There's quite a lot there. I think that we participated in that inquiry and we were quite appreciative of the detailed recommendations, and we really appreciate, for example, some of the legal changes that were recommended around, particularly things like changing the way the privacy laws work so we can provide information across to relevant agencies, etc. So we welcome that. We're doing quite a few things. As you know, I'm sure you're aware, there's quite a list of things which we're working through. So we're doing things like the quick exit button on our desktop on apps, so people can obviously get out of doing something if an abuser is potentially around. We're doing some extra care flags. We've got the extra care hubs up and running, so that's going well. We're looking at putting more friction into the services. So how do you stop abuse leading immediate? And this is a broader problem than just abuse. It's also a scam problem. There's issues there around things like NPP. It's very hard to put friction in, but we are looking at how we put just those extra checks and just slow things down so that if there's a red flag, it's a lot more likely to be spotted. There are other things like multi-offsets, which we're struggling to see the benefits of, but we're trying to just work through that list quite consistently and just see what we can do to meet the objectives.
Does that work extend to ensuring that customers' accounts aren't being used as mule accounts, facilitating scams?
Well, 100%. Mule accounts are, as you know, a bigger problem than just abuse, and many mule accounts have been sold, in fact, into that thing. And this goes back to the AI point, one of the beauties of AI is it's really good, not perfect, but it's good at spotting possible mule accounts. It's then very much a customer-by-customer process, because for some accounts you want to be very careful you don't close them or stop access if these customers didn't realise and had no other option to access the money. So yeah, we're doing a lot in that space.
That takes me led me to another thought. The root cause analysis summary that was published spoke about the bank having a propensity to over-rely on technology rather than increasing human capability in this space. Is there additional investment in training and development now, not only to address issues like that, but to make sure that staff can be part of a future with AI rather than just victims of it?
Absolutely. And technology is a great tool. It should improve how human beings manage a company, but not the other way around, right? So when we said we need to simplify the company and get back to basics, and I repeated this many, many times, it's about ensuring that we are in control and we don't delegate to technology what technology cannot be the solution. The fact that we stopped many initiatives that had a lot of technology incorporated because they were not delivering to basic services, they were not delivering to banking basic services, it's in line with what you just said. On the other hand, our training on NFR, on what is identifying risks, on how to map a process end-to-end, on how to spot and include the right controls around the processes, it's critical. And it's a significant part of the remediation plan that we are committing to deliver in the next 3 years.
Excellent. So I note that some of the kind of cultural issues in banking and things like that have been raised by APRA relating to CBA years ago, I think before you even started, Dr. Warren. We've had the Royal Commission and things like that. Are you confident that this report, the McKinsey report and the follow-up will actually lead to the cultural change that seems to have been required for a very long time, and these issues are far from new?
The culture is probably the most structured component of a company. You can change your strategy. You can almost change it every year, but your culture is impossible to change every year, and if it is not the right one, whatever you have as a strategy is a piece of paper. Acknowledging that, and that has been my experience in my life, the first thing you need to address in a transformation in an organization is the way you behave, the way you think about, the way you approach, your attitude. And to change culture, it demands you to say the same thing every single day, 1,000 times, and not change course. You need to behave the way you say. And undoubtedly, it starts with the CEO of a company. I'm the #1 accountable here. In every meeting, in every town hall, in every interaction with my teams, I behave or try to behave in line with the culture that we are putting in place. I'm always and expecting my teams to do the same, asking what could go wrong. I'm asking about the things that are not doing well. We want to acknowledge the shortcomings the same way we want to celebrate, but not just to celebrate. That is how we behave every single day now. That's not enough. We need to incentivize people in line with the culture. And then we need to make sure that they are paid in line with the culture. And I think that it's very obvious that it was done, very clearly done and published to the world. The incentives should be absolutely aligned with the culture. That's what we are doing. It's an eternal battle. Culture can only degrade if you don't act on it every single day. It's an eternal battle, but the next 2 years will be critical for this journey.
Thank you. We'll now move on to the member for Brisbane. Over to you, Madam.
Mr. Warren, appreciate you being here today. Look, I look at it and I go, big corporations like yourselves have a licence to operate, and if your licence was a vehicle licence, I think it's fair to say you've probably taken a few hits on the demerit points at the moment. But I do acknowledge your apology, and I acknowledge the huge work program that you have in place and what you're trying to achieve, and importantly, Mr. Matos, your personal accountability. I think that's very, very strong. I did want to go back to the 3,500 redundancies, and you mentioned earlier that some of those redundancies will be potentially moved into other positions. Some of those people will be moved into other positions. So is that 3,500 a net figure, or is the net figure likely to be lower than that or higher? Yeah.
The 3,500 figure is a number of redundancies.
Yeah.
Okay. In parallel, the company continues to do changes. We operate in 29 markets in the world, by far the most international bank in Australia. So a lot of dynamics going on. So we can't just stop it in that regard. So the 3,500 are redundancies. It's our obligation, and we are doing it, to identify if some of those redundancies can be and should be utilized to move resources to another part of the company. It's in the best interest of the people, and it's in our best interest, just to be clear. And I hope that's our intention, and that's what we are asking from our teams, that we are maximizing that opportunity. Taking into account capabilities, we also can't ignore the fact that one of the root causes was lack of capability, meaning the right people on the right job. If you just move someone that does not have the capability, you are not getting the right outcomes. We also have to be mindful of that.
Yeah, I appreciate that. And ANZ does have an offshoring capability, correct?
It does.
And are you going to be growing that offshoring capability at the same time as downsizing your Australian capability? And if so, will roles that are currently being fulfilled in Australia be fulfilled in your offshoring capability?
The 3,500 redundancies do not include any offshoring exercise. Okay? All is to say a lot because I can't go to 29 markets, but the redundancies are happening in all parts of our geographies, including the offshore capabilities.
Did you say? In all parts?
In all parts of the geography.
In all parts, okay.
Part in Australia, small part in New Zealand, a part in India and in Philippines, and some parts in other markets. To be very transparent, the vast majority is in Australia because, as I said, the vast majority are in the headquarters, and the headquarters are in Victoria in Australia.
Yeah.
But this is not an offshoring exercise, by no means. We are contracting all components of our franchise.
Okay, thank you, thank you. I just want to move on to the low-income earners and the bank incorrectly charging low-income earners. You weren't the only one.
Sorry.
And
sorry, just have some noise on the back. Could you just repeat the question?
Sorry, yeah. So I just want to go back to low-income earners and your bank being fined for incorrectly charging low-income earners. You were not the only bank, I acknowledge that. And obviously returning what's owed to your customers is a good thing. My question is about looking forward and trying to understand what is, because I have a lot of young people in my electorate, people on youth allowance and disability allowances, etc. What proactive steps are you taking to ensure that that won't ever happen again? Is there an automated part to this as well in terms of keeping track of customers and how their accounts are going to trigger for you also that, oh, maybe we've got some issues here and we need to consider offering them different products? Sorry, there's a lot in that question.
No. Thank you so much. I understood the question. I believe you are referring to, obviously, the better banking equation. Yes, we were one of the banks that did not perform in line with the expectations, clearly. The total population was identified. We are remediating 100% of those individuals. Again, that's the back book remediation, as I mentioned in the previous part of the session. This is a basic service. This is a very clear service we need to deliver in line with regulation expectations. It's one of those that is priority to make sure that it doesn't happen again. It's not happening today. It has been remediated, but we want to ensure sustainability, meaning the process is either very well controlled or sufficiently automated to give us the right confidence that it will not reoccur.
And do you feel confident that, so I'm just thinking there's a young student in my electorate who's about to open their first account. We've got a lot of school leavers, for instance. So proactively, your bank will offer them low fee products off the bat rather than wait for them to try and work it all out.
I don't want to be imprecise. I'll get back to you in terms of our process to approach customers, but I would expect, my expectation is the following. When ANZ is in front of a customer, it should offer the most adequate solution for each customer. And if the customer has some characteristics that point out to a low-income solution or low-fee product, we should do that.
Good. That's good to hear. It's
and I'll come back with more on that specific.
Yeah. Thank you very much. Have I got more time, Chair? You do. Fantastic. Just in relation to that situation, ASIC made some recommendations to you and to others. How are you going with the implementation of the ASIC recommendations? Are they all done yet, or are you still got a little ways to go, or does that get folded into what your current big projects?
All the recommendations of ASIC, meaning the ones included on the settlement agreement that is now in front of the court for approval or confirmation, and all the interactions that we have with ASIC, all those recommendations are included on the transformation and sustainability project that we have, which Les Vance is leading in the company, which Les Vance is coordinating with a program at the center of the house, with teams in each of the divisions and functions. Okay. All the elements included on the APRA EU, ASIC settlement agreement, all other regulated comments, and all our own findings, which I want also to say it clearly, many of the issues were spotted by the company, are part of this major undertake, this major remediation and sustainability and transformation program that we have in front of us.
Okay, thank you. I need to go on to another subject, Chair, so I might leave it for the next lot of questioning.
Oh, you have 2 minutes. So
I do? Okay, good.
And then I'll let you know at the 9-minute mark, but go ahead.
Thank you. I just wanted to move on to scams and scam prevention, following a little bit on from the other members' questions. Do you have a clear picture of the number and the monetary value of the reported scams of customers of your bank, and do you keep track of those?
Absolutely, we do.
You do, okay. And what would be the oldest?
Sorry,
The one with the longest tail, like that dates back to how far? 2 years, 5 years, 10 years?
I don't know how long we have captured that information.
Right.
Okay, I don't know. I have here in front of me the data of 2025.
Right.
Okay. Where we have customer losses, how much we're able to reduce customer losses from 24 to 25, which was a reduction, which is great to see. How many cases we had in 2025. And there is a lot of analytics, which I'm absolutely open to share with the committee, which tells you the detail that we use to manage this activity. This is a highly data-driven analytical operation. Has a lot of modeling, a lot of AI, if you want, to make sure that we spot sooner and we stop scams or fraud as it happens. We also have information about the industry, other markets. We are very much on top of the issue, and I would like to comment that I believe this is one area which I would like to recognize. The bank is doing a good job, but it's a continuous exercise because the threats are constantly changing the way they operate.
Okay, thank you. We can come back. You'll have another round of questions. Can I just start off my 10 minutes just on the better banking questions that you were just asked by the member for Brisbane? Can I just get clarity? How many customers, ANZ customers affected? How much money in total needs to be handed back, and how soon, how quickly will that happen?
I don't have it.
And if you don't have it, you can take it on notice.
I will send with pleasure today.
Terrific, thank you. Just going back, obviously I'm very focused in the terms of the corporate governance mechanism. I sort of see in part that we're at this stage, I dare say, and particularly through this committee, that will be engaged in a bit of governance weeding, identifying bad practices, and I think it's important that we yank those practices out of existence. So we do need to go through and have a very open, and I do commend you, Mr Matos, on the approach that you've taken to the committee today, and I think it's an important first step. Now, ANZ has appointed Parliamentary, as you've identified earlier, to provide independent assurance of ANZ's progress against the remediation plan. Parliamentary's establishment report states that the ongoing weakness in the non-financial risk management practice and risk culture, quote, were first identified in ANZ's 2018 self-assessment over its practices for governance, accountability and culture. So I just wanted to ask, have you seen that self-assessment? And if so, what details and conclusions did it contain? If you're committed to accountability and reform, as you've indicated, will you release, or have you already released, that 2018 self-assessment? And if those weaknesses were not first identified in 2018, they must have been through the very public focus on risk culture in the Commission. So who's being held accountable for that? Sure. A lot of questions, I know, and if you need me to repeat, please let me know.
Chair, I am aware of that self-assessment exercise done at the end of 2018. I am also aware that that was not published, as you said. From a transparency perspective, I believe that what we are doing today and what we did last week in publishing our root cause analysis and the full promontory report demonstrate that today we are fully committed to transparency. That report was done 7 years ago. And as you say, that report highlighted a lot of the issues that were repeated and unfortunately were not fully addressed and took us where we are today.
Sorry, can I just clarify? So you're saying the 2018 self-assessment, the issues raised, that not all those matters had been thoroughly addressed as recommended?
Of course, because if they had been, we would not be in the situation that we are today, from a culture perspective, from a governance perspective, from an accountability perspective. Some of the elements of that report, obviously, are present today.
Sorry, I appreciate that you could make the assumption in the way that you've said. I completely understand that. But in terms of transparency, can you detail? I mean, I think personally, let me take it back a step. I think personally it would be best, given, I mean, there's been a lot of water that's flowed under many bridges since 2018. I'd put to you, I think it's in your interest to release that 2018 self-assessment. Would you do that so that you can then have a very clear take on where you've been, where you are now, and where you need to get to, frankly?
Understood. Chairman, allow me to evaluate it and come back to you personally in that regard.
Right, okay. Can I, just following on from that, put to you a scenario, if I may. Say, for example, you had members of your team in either small business banking or helping your retail customers, a branch manager noticing a product that you offer is not, while it's good for ANZ, it's profitable, it's probably not in the best interest of the consumer, and that restructuring that product would help them in terms of satisfying their needs as to why they took the product out in the first place, and also satisfy the bank. A number of people report this situation where something is going against the interests of consumers and think that it should be dealt with from an ethical and company organisational perspective. How would you imagine that should be dealt with? I appreciate sometimes just one instance doesn't necessarily suggest that there's some sort of problem, but multiple reports of a product not acting in the best interest or operating in the best interest of the customer would be a concern. How do you see, as the leader of your institution, that type of process would be managed and rectified?
And I'll be very direct, as I think I've been. All employees of a bank are responsible for the services that we provide to a customer, including internal audit. Everybody. Everybody is an agent in non-financial risk management, which means that there is no exclusion of responsibility in what concerns great outcomes or good outcomes to customers. To your question, if a frontline employee believes that a product is not fit for purpose, it should escalate immediately.
To who?
To his line manager, to compliance. If he believes he cannot do it in a safe manner, he can use whistleblower mechanisms. We have plenty of mechanisms to ensure that's possible. But beyond that, what is important is that that person believes it's his responsibility to escalate it. You have to have the processes, which we do. More important is that it's in the culture of the company that everybody thinks customer first.
That's the point I want to raise. So if you've had reports in the last week that suggest you've got a good news culture operating, where people may feel not entirely comfortable to report something that may be received poorly or badly, if he or she as you say, goes to their direct line manager or to, was it audit, I think, or even whistleblower. I think in this day and age, some people do worry about going to whistleblower, what impact that might have on their career. I mean, this is your opportunity to send a clear signal, not just to the public, but to your own employees. Is your expectation that if they've got bad news, that the good news culture won't stifle that bad news from being brought forward?
Absolutely. And let me talk about two angles of this equation. First, I expect all employees to escalate the issues that they see. Mm-hmm. It doesn't mean that they are right. It's their view. It's in their best judgment.
Agree.
In their best judgment, they believe there is something wrong, not adequate, we can improve. Use the channel that they believe is the right one for the moment. Second, and I personally looked into it, our whistleblower mechanisms in ANZ, I believe they work properly. Mm-hmm. If there is one element I believe is working also well, is the whistleblower mechanism. By the way, the Australia regulation in whistleblowing is extremely advanced mm-hmm. versus other markets. The protection to the reporter of the issue, it's maximum. Keeping it anonymous through the process is a religion in accordance with the regulatory expectation. So both from a culture perspective and from a process perspective, there is no good reason for someone in our bank to not escalate something that is not working properly. Okay. And it's for us to evaluate and to make a judgment and to protect this individual. Okay. This is full commitment, and I believe in many ways is operating, but from a culture perspective, we need to do a better job. Even though from a process perspective, it's working quite well.
Okay. Look, I had one more question, but I think we'll go over time and I don't want to chew up other members' time. So I'll hand over to the Deputy Chair for his 10 minutes. And if we have time, I'll come back in relation to financial stability.
Thank you, Chair. Look, just on energy and returning to where Mr Violi was at, do you agree restrictions to lending that we were talking about earlier to gas across the sector drive up the cost of capital of these companies and drive up the cost of energy? Any restriction to a business to get capital from the maximum possible sources, by definition, causes an increase on the cost of capital. And that's how incentives and signalling into the economy works. It's part of the public policy.
Sure, yep. And that cost of capital then leads to the cost of the actual product increasing as well.
I think it's fair to say that's possible, yes.
Yep. Then I'll come back to that in 1 second, but a question in the interim. Do you, as a bank with your economic research, think the world is on track to hit a net zero 2050 target?
I don't recall if we have a clear research on that. What I would say is most of the studies today, globally, indicate that to reach 2050 will be a difficult journey to get there on time. And some still believe it's possible, but I would say at this point in time, it seems to be difficult to reach. With the current dynamics, with the current technology, with the current public stance in many parts of the world, is becoming more difficult.
Sure. Thank you. Do you think Australia is on track? Let's start with to meet our 2030 targets, 82% renewable energy and 43% reduction in emissions.
It's one of the topics I have not yet dived sufficiently. I know it's an ambition target, that I know. How likely is to get there? If I would give you, it would be just an opinion. It's irrelevant because I don't have data to support it. I would prefer not.
Yep.
But again, ambition is ambitious.
It's ambitious.
It is.
And why do you call it ambitious?
because it demands a significant change, and the time is short. But I can't have a full opinion, because I'm not in the details at this point in time yet.
And are you aware that over the last 3.5 years, emissions have dropped about 1%, and we'd have to increase that by almost 10x to actually meet our obligations?
I am aware that the emissions have been dropping at a low rate, not dissimilar to the rest of the world.
And well, given the first answer where we started on the increase of cost of capital, would you say it's fair to say that actually potentially pushing to achieve these targets will increase Australia's cost of energy at any cost? If you want to say we want to achieve these targets at any cost, is that likely to increase the cost of energy, given the answer to your first question?
I'll be honest, you answered the question also. At any cost, by definition, means more cost.
So unless we put a price target on energy, if we just have this emissions target, we're going to be incurring extra cost.
And again, this is a balance. Nobody knows when the world becomes so unsustainable. Nobody knows where the costs will be significantly bigger than what any other scenario. Nobody knows. You don't know if it is in 50 years, 25 years, 100 years. What we know is the following. We can't forget where we are coming from. And just breaking with the past, it's very difficult. It would create even more. We could kill with the medicine, let's put it this way.
We could kill what, sorry?
The medicine could kill the patient if you want. Okay?
Medicine, okay.
So the transition has to be balanced. That's what I would say. Now, how balanced, which pace, not for us to decide.
And do you think, just to use the phrase you just used, the medicine could kill the patient, when you see some of your customers, I don't know whether you bank
and I'm not talking about Australia, just to be honest. I'm talking about conceptually.
I want to ask you a question about Australia. When you see, I don't know whether these are your customers, you said you bank a lot of resources. Whyalla Steelworks going bankrupt, NiStar going bankrupt, Mount Isa Smelter going bankrupt. CEOs of Cadbury, Mars saying manufacturing's at a crossroads, they're not going to invest here. BHP CEO saying energy costs are 2 to 3 times in Australia of comparable nations. BlueScope Steel saying yesterday gas costs are 3 to 4 times Australia in Australia compared to the US. So when you hear that and you're telling me you're the largest bank of the resourcing companies, are you hearing from your customers, or do you worry in Australia the medicine? Or do you worry, let me rephrase, do you worry in Australia we are at risk of deindustrialising and damaging our economy?
I will say again what I told you, which is in the best interest of any economy to make energy available and at an efficient price.
Yeah, and look, for the record, I think it's a very difficult job. We care about the environment. We agree we must stay in Paris and reduce emissions, but we do need to balance the economy, and I think that's what I am really concerned about. And I think as banks, you play such a critical role in the economy, in making sure Australians improve their living standards and manage the cost of living. So, I don't envy you always in that task. How am I going for time, Chair?
Just under 4 minutes.
Okay, great. Just quickly on illicit tobacco, just to change topics. On illicit tobacco, I just had another question I'll find here. You worked in Mexico, is that right, previously? And interested in your...
10 years ago, yeah.
Yeah, and were you familiar with how Mexico dealt with illicit tobacco in banking and how they cracked down on that? And is there any learnings from your time in Mexico that we could be applying here?
I was working for an organisation, so I can't go into many details. What I can say is that I had to certainly work significantly in the topic of money laundering and sanctions, financial crime in general, if you want. And Probably that was a very challenging part of my work there. So I have some experience, maybe more than some, on how to deter and how to spot financial crime in banking system.
What can we learn? Because illicit tobacco in Australia is running, I think we've had 250 places firebombed. In my electorate, I've got illicit tobacco everywhere. I'm getting a lot of complaints about constituents. It's a big policy problem I think we're all focused on. What learnings do you have for us and advice you have for us as policymakers in this space?
Financial crime is a systemic issue. It's not an issue that you can address with individual actions. Many issues in the world are systemic issues, and sometimes we don't apply systemic solutions. I must say that in the case of Australia, I see AUSTRAC collaborating in a very agile way with the banks. I believe we have been one of those banks that have contributed a lot with intelligence to AUSTRAC and vice versa. We have been, in the case of tobacco, we have been in constant communication with AUSTRAC. And you go back to elements like, believe it or not, culture, having the right systems to identify the profile of your customers, making sure that when you onboard a new customer, you know well about his activity, you know your customer, having very deep automated systems to monitor the activities of these customers and understand their profile and compare their activity with what they said when they were onboarding, what kind of activity they say they were conducting, what they are actually doing, being very agile to investigate what is going on when you find mismatches, and being very fast to submit information to the authorities and exit customers when they are not doing what they should be doing. Now, this is what one organization is doing, but you can only defeat this problem if everyone is doing the same at the same time, because otherwise the problem just flows from institution A to institutional B.
Thank you.
Very helpful.
Okay, member for Brisbane and then member for Deakin, and I'll let you know when you've got the last minute.
Thank you, Chair. I just want to go back to continue my questioning around scams. Thinking of customers who've actually lost money in scams, what's the average time frame for your organisation to get resolution with those? Now, resolution could be varied. It could be money paid back, or it could be, going to through legal proceedings. What would be the average time? What's the average process?
Do we have the here?
I don't have the details on the average time, but it's an important question, so we'll get to that pretty quickly.
I'll give you the exact details.
Yeah, thank you.
We have them.
Thank you. And the process you could put on, I don't mind on notice if that's helpful. Yeah, thank you. But I understand from what you said earlier that you're doing a lot in terms of customer security, financial security. With your expertise and what's going on, what are the trends that you're seeing in terms of scams? And I'm thinking, how can we help inform customers of what they should be looking out for? That's the purpose of my question. Are you seeing anything new arising, or what are you seeing?
1/3 of the scams are investment scams. That was not the case some years ago, which means that customers are becoming aware of the most traditional ones, where basically I'm inviting you to pay a fine or inviting you to give me your credentials, which is phishing or smishing or other types of appropriation of your identity and your credentials. So fraud went to, I will appropriate your credentials, to I don't need them, you are going to do it for me, scam. Within the scam families, they went from very simple reasons for you to do a transaction into more complex, like investments in digital assets, cryptocurrencies, and other types of typologies. We also have all the statistics on our bank of the typologies, and maybe I could send to you, and you have all the information we have on that. But you should expect that the typologies will continue to evolve as they become more aware by the public. Keeping customer education at the right level is critical here. And I expect us to continue to do what we are doing, not only when the customer is going through a transaction, and we warn them, make sure, think twice before you push the button and you go into the transaction, but even before that, at industry level, at bank level, we should continue to educate customers to think twice before they embark in any transaction.
The other thing I'd just add on that, sorry if you allow me, is gambling. You may have heard of this. This is online gambling, essentially illicit, illegal gambling, targeting, in many cases, remote communities. It's pretty, and I'm sure the consumer groups will walk you through that if you talk to them as well. It's pretty, it's probably the growing part of the scam ecosystem that's really concerning.
Okay, thank you. If I could just move on to a different topic, gender equity within your organisation. Generally, the gender pay gap across the Big Four is 24%. I'm interested to know what it is at ANZ, and has it shifted much over the last 5-10 years?
We measure two metrics in that regard.
Yep.
One metric is we just divide the population between women and men, and then we do the average. That gap is 17%, which I suppose it compares with the number you just mentioned. The other metric we publish is if you just go comparable job by comparable job,
yep,
our metric is almost zero.
Okay.
Okay. I believe the bank has been doing a good job in this regard. We are committed to fair pay, and will continue to evolve in this regard, including gender diversity, especially in the top levels of the company.
Is that what's driving that 17%, the disproportionate inequity at the upper levels versus the lower levels?
I would say two elements, and
yep,
this is global, by the way.
Yeah.
Actually, these numbers are, I would say these numbers are particularly good when I compare with other parts of the world. Yes, undoubtedly you have less women at the top of the house, on the upper levels of the company. In other parts of the world, you also have more women in part-time jobs because they prefer to, and that just influences the number. And there is a specific element which is also global. The markets business, which pays on average more than the other divisions, it has more male concentration. Even though in our case is now at 40%, which is a great metric, we want to go to a better place, but all those things contribute to the metric that you just put.
Yeah. Do you, is your executive 50-50 at this point? Is the board?
You mean the ExCo?
Yes, your ExCo. 40% yeah.
40% is composed of women
okay,
at this point in time.
Okay.
Yes.
Okay. And is there metrics as part of your performance metrics?
It is.
Have a gender equity element to that? And is that... Okay, thank you.
It is. So all the metrics around diversity, including gender, but not only gender, they are part of the scorecard of the top of the house, of the top of the company, yes.
The top of the company, including yours?
Mine,
yes, okay,
and the ExCo.
Okay, thank you. And if I could just ask, so to help close that 17%, are there specific programs that you have in place to do that, and is that evolving as part of your cultural change program? I know there's a lot in that for probably 2 minutes.
I'll just add quickly. Sure. Markets is a particular issue in financial services, and unfortunately it's been male-dominated for quite a period of time. So one of the programs, as Nuno says, there's lots of different components to this issue. One of them is to get more women into markets and into market leadership, more senior roles. We've got a Markets Acceleration Program, MAP, and that brings young women in and tries to get them into market roles. Seems to be working, but it's a toe in the water.
Yeah, thank you.
Last one.
No, I'm done.
Oh, you done?
Yep.
Tremendous. Member for Deakin.
Thank you again. I was just wondering if you could explain any initiatives the bank has brought in the last year or so that have been designed to capture more of that small business market or make it easier for small businesses to access your loan products.
Yes, there have been, and I would highlight a couple of them. One is we built a platform called GoBiz, which is fully dedicated to small business lending. It's an app, and it's very customer friendly. You can apply, you'll receive an answer very fast. And we've been growing nicely in that platform. So that's one. And second, in our underwriting models, meaning our approval models, we have been including automation to make it faster and to ensure that we are able to approve more customers within a responsible frame, obviously.
Excellent. I was also wondering around the 5% home deposit scheme. I understand that ANZ has been the last to sign up to that. Would it be fair, as some reporting indicates, that reluctance may be derived from the fact that you do lenders mortgage insurance as well?
No, not at all. Having said that, what I would acknowledge is the following. I believe a bank of our size, one of the 4 majors in Australia, needs to be absolutely involved in driving public policy. And the soon I realized we were not contributing to the FHB program, I immediately took the decision with my team to embark on it. I would like to highlight that you need to be approved as an institution to participate. Mm-hmm. We are on the final stage to get that approval. We are running as fast as possible to also be operationally ready. So we are fully expecting to participate as soon as possible, as soon as we got approval. That's what I would say at this point in time.
Terrific. Also in the home lending sector, have changes been made to make it easier for borrowers to access funds for prefab homes that aren't yet on the land but are being built in a factory or warehouse?
Yeah, I'm aware of the fact that some types of loans, due to the fact that they depend on the completion of the property, they are less efficient in approving those kind of activities. What I can say is I was made aware, and we are reviewing our policy to make sure that we don't put those kind of activities at a disadvantage versus a normal construction pace, if you want.
Terrific. I'll ask one final question, if I could, Chair.
Sure.
A few years ago, ANZ developed an algorithm to identify abusive messages attempting to be sent from ex-partners and the like. I was just wondering what is the scale of the problem that application has picked up, and how ANZ goes about circumstances where it finds that its own customers are the ones sending those abusive messages.
I don't have the most recent data on the scale, so it's a really it's a good question, one we'll take on notice and get back to. But obviously, if a customer is engaging in that activity, we have to take a case-by-case basis. Sometimes it's something you would say to an authority to deal with, but often as I understand it, we just warn and close. But let me get the details on how we roll that through and get back to you on those.
Terrific. Thank you, Chair.
Thank you. We'll now cross to the member for Bowman.
Thank you, Chair. I did appreciate your hesitation there, but you got it right.
No, I didn't know if you're still online.
I've got a question just in relation to net zero and the Net Zero Banking Alliance. ANZ have been members of that organisation until it ceased to ceased to operate in its current form last month. I know you when you were previously with HSBC, since you left, they were one of the first global banks to depart from the alliance. I was just wondering if I could get your perspectives on what the closure of the Net Zero Banking Alliance will mean for how you are going to be, revising potentially lending policies, or, particularly in relation to fossil fuel projects and critical mineral projects, and also any insights you could offer in terms of what there was a number of international banks that withdrew from North America and Europe. Keen to get your perspectives as to what the concerns were with that, and how it's going to impact on ANZ's operations moving forward.
Yeah. So the Net Zero Banking Alliance, I would say, played an important role in some very important elements. And if I might say some elements, I might say something again, is this is still a very binary arena. All this, let's say, this discipline of knowledge is evolving tremendously, including, in the case of banks, what kind of disclosures, reports, approaches the industry as a whole should have. The Net Zero Banking Alliance played a very important role in trying to harmonize many of those elements. And then it's also obvious that reached a moment where dispersion of public policy made that association more ambiguous and more difficult to be sustained. It's just obvious, and it's public knowledge. Again, it just reinforces what I'm saying. It's changing, it's dynamic. Parts of the world have different stances on this topic. And lack of clarity is the enemy of a project or initiative. And at this point in time, globally, one could say we don't have anymore the same level of alignment that we had for, I would say, at least a decade. We will continue to read public policy in Australia, as we said, and we'll continue to read our own risk appetite and form our internal policy. But tougher days are in front of us in this topic, that's clear. And when I say tougher days, just to be clear, is about clarity, is about moving with confidence, moving in tandem with all society. It's not easy for us. It's not easy to nobody. But in the meantime, as we said, we will continue to pursue the Paris Agreement goals. In parallel, we'll adjust our policy with everything we saw and we see in front of us.
Mm-hmm. Thank you very much for that answer. I think that is very accurate. Just to dig a little bit deeper on that, then I hopefully want to get on to a couple of other issues. The concern that I would have, and I'd be keen to get your response to this, would be if Australian banks are holding Australian clients to a different standard and a different level of accountability than the rest of the world. If our competitors in agriculture or whatever other industry, their banks are now saying, right, let's go for it. We're going to focus on growth rather than climate objectives. What does that mean for Australia? And my sense is just, we don't expect you to solve all the world's problems from where you're sitting. But what does, will your considerations include what's happening in the rest of the world? You mentioned that there's global shifts happening on this topic.
I believe is always savvy for societies to look outside and not ignore that the world is so interconnected to a point that one can just ignore what is going on outside. At the same time, societies have to have their own beliefs and their own goals. and not over-deviate from them. In that regard, we as a bank, we certainly are reading what is happening in the world, even more in a bank like us that operates in 29 markets, starting in the US, UK, Europe, Middle East, all other countries in Asia and Pacific. We need to take that information into our operations, including how sustainability is understood. But we certainly believe, as an institution, that we all should walk with confidence to a more sustainable world, a world that is able to produce goods and services in a more sustained way, without impacting so much our climate.
Thank you. Which sectors across your books are showing the greatest signs of stress or elevated risk from a lending perspective?
Our book continues to be quite resilient in general. It's fair to say that, and the industry continues to be on the same pace, the credit quality of Australian customers is extremely high versus any other indicator that you could have. And this includes consumers and companies. The specific elements we are watching, they are typically more related with particular events. For example, drought in some parts of Australia. That puts some agri businesses at risk. But in general terms, we are not seeing important dislocations of credit quality.
Chair, have I got time for one more?
Yeah, this is the last minute. You're at 7:15.
Thank you. Do you believe that the current economic conditions pose an increased risk for business insolvencies over the next 12 to 24 months?
If you could answer that quickly and
Sure.
take it on notice and respond.
What the data says at this point in time is that as interest rates are coming down and consumer confidence going up, the Australian economy is actually improving slightly and most likely reaching the 2.5% of growth in the next 2 years. So in the next 12 to 24 months, unless the world really goes into a different place, Australia will continue to grow at that level.
Terrific. Thank you. Member for Reid.
Thank you. I wanted to go back to the work you were doing to reform ANZ and just put this question to you. So the ASIC chair said that time and time again ANZ has betrayed the trust of Australians. It's quite a broad question, so you can take it in whichever way you'd like, but what are you doing to repair the trust between Australians and your institution?
And undoubtedly, our stance in front of the community is not the one we would like at this point in time. I want to say one important thing. Our more than 40,000 employees, they try hard. They have the right intentions to deliver good for customers. The company collectively did not execute some of its tasks appropriately. Again, not because we are not trying, but because the governance, the culture, the capabilities, the pace of change, the policies and procedures were not strong enough. Regaining our reputation takes time. There is nothing I can say today that will fix the issue in 24 hours. It would be naive. What we have in front of us is a journey, but it's a journey that already started. A journey that invites our employees to reflect, to act, and to every single day, as our strategy says, think customer first. And I hope that our customers, our regulators, society in general, you will recognize that. But it's a journey.
I appreciate that. And you mentioned your workforce. Arguably, given the job cuts, the morale of your workforce would be at quite a low point. How would you get them on board with your agenda for reform when they have concerns about the security of their job?
First, we have to acknowledge it's very difficult for our employees to go through this change. Change is always tough to take. Human beings, they don't like change, especially if it impacts themselves. It's very difficult, but it's needed. We are trying to produce the change as fast as we can, so anxiety and uncertainty reduces. But we also know if we try to do it too fast, it's not sustainable. So we are, again, balancing these two elements. And we know, we expect the morale to decrease, but if that's driving us, our action, if that curtails our change, we will not achieve our end goal, which is to deliver a great company to customers. So we are acutely aware it's an uncertain and an anxious environment. It will get better, and we are trying to do it as safely as possible and in a very respectful way. But we can't avoid uncertainty at this point in time. But we are respecting them as much as we can.
I would hope that that respect is extended to your employees, and I note that there was an unfortunate incident where they were emailed to, I think, return their laptops before they were told that they were being let go. So I hope that the way you approach your employees is done with as much empathy and compassion as possible, with the view of being able to retain as many of them in other areas if that is appropriate. And I just wanted to ask you one final question around, you made a comment about being self-aware about the shortcomings of the institution. Would you mind just elaborating on where you think the real shortcomings are?
Of course, I would say two things. The first one is the culture element, how are you addressing the shortcomings from a culture perspective? We need an organization that leads with the opportunities and with the improvements. Meaning, if we are debating a topic, the most important thing to debate on that day is what we need to do better, what we need to improve, what are the opportunities, and spend much less time in celebrating the things that we believe we do well. That balance is absolutely needed. If we always have a positive view of life, which is important, in a very complex organization that has to deliver very complex processes to customers, we might fail. So we need to make sure that people are acutely aware of the things that we don't do well and have the attitude of always better, always customer first, always put them in front, think about what they expect from you. That's the attitude we are talking about in the company every single day. But to reach out to 40,000 customers or more, it takes a long time. It's cascading. It's a repetition. It's like an athlete. You have to train every day until you become savvy on that exercise. It's about that. Culture is a muscle. You have to exercise every single day. It takes time. But that's one element. The other element is how we govern the organization, how consistent is the governance, the people knowledge on the topics that we failed or that we were short, how do we introduce change in the company, how disciplined are we in changing processes so they are sustainable, they don't fail the very next day. Are your policies understood by your employees, or you just write them and then they are so complex that people don't get it, or they are so complex that you actually can't execute them? This is a book of work. By the way, all banks went through it in the world. Many still have to go through it. The journey started. We'll succeed. It's tough.
Thank you. We will now move on to the member for Moreton, please.
Thank you very much, Chair. And Chair, obviously there's been a lot of discussion about culture today, and given that ANZ has some serious challenges with misconduct, given that not only that, you've seen a 10% profit drop as well, with that dynamic in play, what do you think the major challenges are going to be internally and externally to achieve your ambitions of major cultural reform and a customer-first approach?
What I've been saying every time I'm asked that question, which is, okay, tell us, we have to do a lot of things, the corporation have to do many things, what are the most important ones? I always answer the following. The first one is culture, not surprisingly. Why culture is the most ingrained element of an organization, as I said, is very structural. It's part of what people expect from the company. It's how they behave. It's how they react. If you don't change that, everything else, Suncorp plus our strategy, our business growth, will not occur in an effective way.
I was going to say, I understand that that's your big focus. I guess I'm asking whether or not, in the context particularly of a 10% profit drop, whether you expect to see pushback on those outcomes that you're trying to get to.
I believe all the stakeholders around us want us to change. I believe you want us to change. Our regulators very clearly want us to change. Our customers, especially those impacted by the issues that we mentioned, want us to be a better bank. And we are very eager to be a better organization. And by the way, I want to be clear, our organization has tremendous positive elements in many parts of the business. However, things happened, and we are acutely aware. Resistance to change is normal, especially when you address more than 40,000 employees. And explaining them why we need to change, that has been one of the major elements of this exco. Explaining to our employees why there is a case to change. Why staying as we are is not the solution. And we expect them then to cascade down. This is an exercise of convincing more than 40,000 employees to embark in a new journey. That's the key point in this journey. It's to bring them along. It's to explain to them why there is a case for change.
The member for Reid asked about how you would restore trust with the Australian public. I note that the Wyman review pointed directly to a loss of trust in the staff as well. So I was going to ask, how do you restore trust in your employees at the time when you need it most?
I want to point out that the Oliver Wyman report,
the market specifically,
it's from the past, but it's on the markets business and also precedes me. Having said that, it's fair to say that when we are changing, trust is a fantastic fuel to drive evolution and transformation. So again, trust and culture are very important factors on this journey. The reason we are communicating constantly with our employees about why do we need to change, what are the problems. It's critical. One of the things that I constantly do is to read to our employees what customers are saying about us. Because when you listen to what an employee is saying, what a customer is saying, it's so powerful. I receive from customers every day. Every day I receive comments from customers. I read them all. I send them to the right departments to be fixed and for reflection.
So I understand that you're saying you communicate with the employees and you read them the customer reviews. Is there anything else that you're doing practically that could help build trust with employees?
Well, this is an internal communication, and also it's how we behave as leaders. We behave the way we want others to behave. In all our interactions, we tend to lead by the example. We ask about the things that are not going well, much more than the things that are going well, especially in an environment where we need to change so much. We ask for simplicity in the company. We ask for so many elements, and we behave that way.
Thank you. I might move on to payments. So broadly, the banks have said that that they're supportive of banning surcharging, but not necessarily supportive of the RBA reducing interchange fees. What's your position on that?
There is not a good logic, in my opinion, to have a surcharge mechanism in the economy. The reason I say that is the following. Incentivizing cash as a payment or other non-electronic payments doesn't look very in line with an economy that wants to be on the digital era. So I agree with the RBA that surcharge should not stand in any economy. Very few economies, by the way, in the world use or accept surcharge. So that's there. Second, on the interchange, what I would point out is two facts. Australia already has one of the lowest interchanges in the world. I have no evidence, I don't, studies will have, that lower interchange will result in lower prices for customers. I have no evidence that worked. I have more evidence that it ends up hurting customers because their benefits are reduced. They're using payments. The next one I would say is payments is a very complex and expensive infrastructure. Reducing the interchange will not incentivize further investments in payments as the industry has been doing. I would advise that should be taken into account.
So some people have said, in terms of what you're talking about, well, certainly some banks have previously said that any reduction in interchange fees would result in a potential reduction to fraud and other protections. Do you agree with that?
The economics of any business incorporate all variables around the business. If you reduce so dramatically one of the components, decisions will be made to restore the returns of those business. How they will be done, I can't anticipate at this point in time, but certainly it would be illogical to believe that you change dramatically the economics of a business and there won't be consequences.
Last one. All good.
I have to, if you've got any other questions,
No
please
worries.
put them on those because we've gone over the allotted time. The final questions will be from the member for Casey. Over to you, please.
Thank you, Chair. Mr Matters, thank you. Just on payments quickly. 15th of October 2024, so last year, the Prime Minister said, and I quote, "We are prepared to ban debit card surcharging from the 1st of January 2026, subject to the consultation undertaken by the RBA." is it your understanding, based on your conversations with the RBA, will debit card surcharging be banned from the 1st of January 2026?
I believe that the consultation process that includes all the elements I was debating at this point in time were extended.
Yep.
So I can't, and by the way, it's up to the RBA as it should be, I can't anticipate at this point in time the dates of implementation of any of those metrics.
Perfect, thank you. Just want to move across to illicit tobacco. Has your bank taken note of Austrac's recent statement on illicit tobacco and cash-based laundering risks?
Absolutely. So we received, by the way, a formal communication from Austrac, and our teams have been in constant and very positive interaction with Austrac. So the communications go well beyond the formal communications. We are fully committed to, as much as we can, identify, deter, prevent those illicit crimes that you just mentioned.
And what steps, and the reason I ask is I just want to show you some images. So we've got a couple of images here of illegal tobacco stores, clearly identified, and also within those, you might not be able to see them, but I can hand them to ANZ logo. So clearly ANZ terminals in illegal illicit tobacco stores that shouldn't be operating in this country and are playing a significant role in not just this illegal trade, but things like fire bombings, underwriting many criminal organisations, etc., etc. So what steps is the bank taking to ensure that it is not providing merchant services to retailers of illegal goods and particularly illicit tobacco?
Sure, and I'm going to repeat a little bit of what I said. It's about when you onboard a customer, being it a retail customer or a small business customer, you need to know as much as possible all the activity of the customer, what's the purpose of their business, who they bank with, what kind of cash transactions do they accept. This is what we call the Know Your Customer, the due diligence, which is a critical component to start a new relationship. And then we need to ensure that our transaction monitoring systems are able to identify typologies, or even in a more complex perspective using AI, combinations of patterns that would induce us to think that some of those activities are occurring or others to that extent. And by the way, if you could then hand over to those, because I would like to obviously.
Yeah, absolutely. And do you have,
act on
and
it.
you can potentially take this on notice, but I would love to understand how many of these situations your organisation has identified and how many you've shut down in the last, let's call it the last 12 months, because there is clearly an ongoing issue where these organisations are getting access to terminals that they shouldn't. So while you might have a process in place, I'd love to understand how many you've stopped, how many you've identified, and how many have been shut down and are no longer getting the merchant services.
We'll do so.
Thank you very much. Just want to move across to, I guess, deposit deception and bonuses on interest savings accounts. An ACCC inquiry found that 71% of bonus interest accounts did not receive the bonus interest rate on average each month over the first 6 months of 2023. So I want to understand, does your organisation offer personal savings accounts that require consumers to meet hurdles to gain interest?
We do. We do.
And how many hurdles does a consumer need to meet to receive that interest?
Typically, those hurdles are about monthly contributions to a savings account and also absence of withdrawals from that same account. Please take into account that this is a saving instrument and the product is built to incentivize customers to save for their long term.
And again, you can take this on notice if you need to, but can you provide for each of your bonus savings accounts the percentage of customers who did not get the advertised bonus rate in each month over the last 6 months? And also, can you provide us the average interest customers actually earned on each of your bonus savings accounts and how this compares to the advertised rates?
Absolutely, of course.
How many of your customers do not earn interest on their deposits, so have a non-interest bearing retail deposit?
I don't have the number. Those are at-call accounts.
Yeah.
I'll come back to you.
Perfect,
I'll give you the number, of course.
And has your bank implemented any transparency measures in response to the 2023 ACCC retail deposits inquiry?
I believe so, but we'll get the detail. I believe so, but we'll get the detail.
Yeah,
I
that would
believe
be
everything was implemented, but
Yeah.
we'll send you the evidence of that.
Yeah. And I guess just as a question on, I guess, the broad principles, do you think it should be easier for Australians to earn interest on their deposits that they have with banks like yours?
I believe that we should put in front of the customers all options, and the customers should choose which one suits them better. If a customer needs full liquidity on a certain amount, obviously a net call account is the adequate one. If a customer wants to save money and he wants to incentivize himself to put every month to put apart some of his disposable income into an account, I think an account like saving with bonus is the right one. If a customer believes that its savings are not so permanent and it needs to do some withdrawals from time to time, a savings account with a flat rate without bonus, it's an option. We also have it. And finally, if the liquidity is, if the customer doesn't need the money, term deposits would be a better option. I believe we offer all options. If the customer wants to save, he doesn't need to be in an account with bonus. It can be one which gives a flat rate. So I honestly, when I compare what Australia does versus other markets, I don't see an obvious difference. I see more optionality, and provided that we explain that well to customers, they have all instruments to decide what fits them well.
But can you appreciate the concern many people have that the perception, they see a big headline saying, 4, 5, 6%, and then there's a lot of detail hidden below that they've got to hit all these hurdles. Can you understand the frustration that delivers to many people?
Quick response, please.
I can understand, and the solution for that is full transparency. That's what I would say. Perfect. From the start.
Thank you. We'll obviously be putting questions on notice, Mr. Matos, and be forwarding them to you and all the other organisations in due course. I just want to end quickly. Yesterday we had one of your contemporaries say, quote, "When you have, as we do today, many banks earning below the cost of capital in the most benign credit cycle most of us have ever seen in our lifetimes, I'm not sure that augurs well for the sorts of macro and geopolitical tail risks we're going to see." I did want to ask a question about how significant is that pressure in your organisation? What are the risks it poses to financial stability or the availability of credit? And if you could answer that quickly or take it on notice would be great.
I'll give a very summarised answer to that. The Australian banking sector has been reducing its profitability for more than a decade. It's fair to say that on average the industry is probably 60% less profitable than it was 10 years ago. For many reasons. More compliance costs, capital, competition is much more fierce today, which is great for customers. Many elements brought a 14-16% return on equity to roughly 9-10%, which is broadly aligned with the cost of capital. So I think the comment of my peer highlights that trend, and I think it's fair to say that it's in the best interest of a nation to have a solid, profitable financial system that has capital to lend to the economy. And it's in our, and I don't want to take that accountability from me and my team. We need to improve the profitability of our organization to make sure that we can lend more to the economy. And that's how it goes.
Tremendous. Okay, thank you. Now, Mr. Matos, you did indicate through your responses that you take on board your customers' feedback, and I think there might be some here in the public gallery today that are keen to meet with ANZ. So if you're able to do so, it is a request, not a requirement. I just want to emphasise that. I thank you for your appearance today, and as I said, the Secretariat will contact you in relation to any matters arising out of today's hearing. You'll be sent a copy of the transcript of your evidence, and you'll have an opportunity to request corrections to transcript errors. I just want to make a quick final statement. I'm a big believer in our Parliament being able to be open and accessible to all, and that people have an opportunity to bear witness to some of the proceedings that are here. I restate the points I've made at the start of the hearing, that these are formal parliamentary proceedings that need to be conducted with respect and decorum. There's also been a resolution of the House that has been passed that says that all witnesses need to be treated with respect. I appreciate these matters are of weight and import, and that they have affected the bank's behaviours in times past, have affected on the livelihoods and the way in which people conduct their own lives, and so I appreciate these are not easy matters. What I am seeking is that members of the public continue to be made able to be here today, but there are a number of points at which I would have intervened, and I am just giving notice I will intervene if I believe that the level of chatter is interfering in the delivery of a witness's statements to the committee, or that behaviour is occurring in a way that detracts from the conduct of the hearings. You have my firm commitment that I will maintain the presence of the public in this hearing because I believe genuinely in it. All I ask in response is that we abide in a way that allows the committee to conduct itself properly, and I will just leave my statement at that.
Support your comments there, Chair.
Thank you. And with that, I'll suspend proceedings. They will be resumed at 1:30 p.m. Thank you. Recommence the public hearing, and I welcome representatives of the National Australia Bank. For the benefit of Hansard, I'd be grateful if you could state your full names and the capacity in which you appear before the committee, and Mr Irvine will begin with yourself.
Mr Andrew Irvine, Group Chief Executive Officer and Managing Director of National Australia Bank.
Thank you.
And Peter Whitelaw, I'm the Acting Group Chief Risk Officer.
Tremendous, thank you very much. I remind you that although the committee does not require you to give evidence under oath, the hearings are legal proceedings of the Parliament and warrant the same respect as proceedings of the House. The giving of false or misleading evidence is a serious matter and may be regarded as a contempt of Parliament. And with that, Mr Irvine, I'd like to invite you to make an opening statement if that's your wish.
Thank you, Chair, and good afternoon. This committee continues to play an important role in the conversation that we have around banks and the broader economy. At the start, I do want to acknowledge the Ngunnawal people, the traditional owners of the land on which we meet, and pay my respects to their elders past and present. NAB's ambition is to be the most customer-centric company in Australia and New Zealand. That means listening to our customers and understanding what they need to be their best. And I'm proud to represent their views today. Australians have good reason to be more optimistic about the year ahead. Economic growth is gradually returning to trend rate growth levels, and real GDP is forecast to improve to 2% over 2025 and grow to 2.3% over 2026. Household incomes are benefiting from moderating inflation and the cash rate cuts we saw in February, May, and August of this year. Some customers do continue to feel the impact of cost of living pressures, and we are here to help them. But most of our mortgage customers have kept their repayments at higher levels so they can pay down their home loan faster. This is a good sign that they are managing their money well. We expect monetary policy to remain on hold at 3.6% for the foreseeable future. Businesses are also feeling more confident. The NAB recent quarterly business survey shows conditions have continued to improve through 2025 and are now in positive territory for the first time since 2022. Key to Australia's long-term prospects is an economic and policy environment that encourages more dynamism, more investment, and more entrepreneurship. Together, this will create an Australia that is more productive and globally competitive, which will in turn lead to better jobs and higher living standards. However, after a century of progress, productivity has stalled. Intergenerational inequity is on the rise. Unless we turn this around, future generations may not surpass their parents' living standards. A reversal of everything we've come to expect in this country. And there are 4 key areas that can lift productivity, make us more competitive, and get us back to stronger economic growth. And I certainly acknowledge the positive role banks like NAB can play in each of these. Firstly, the housing crisis is Australia's biggest societal and policy challenge. A stable and secure home is crucial to well-being and to an equitable society. Yet no sector of our economy has suffered more from complex regulation, from lengthy planning processes, from fragmented coordination, labour challenges, and declining productivity. NAB embraces the responsibility that we have to support housing solutions. Recently, we announced our housing affordability financing ambition of $60 billion by 2030, and this target equally addresses both supply and demand-side levers. Secondly, as Australia's biggest business bank, we hear regularly from our business customers about the need to move faster to reduce complexity and red tape. A recent NAB survey of small business owners found 37% of small businesses identified government policies and regulation as one of their primary concerns. While there has been some recent positive interventions by governments to make things simpler, we can and need to do much more to unshackle businesses and to let them focus on what they do best. The third area I want to focus on is artificial intelligence, which is rapidly changing the way that we live and work. It is my strong view that AI will be as transformational to us as any of the previous industrial revolutions, offering profound change to what we do and how fast and how well we do it. NAB cautions against broad and premature frameworks that may inhibit low-risk innovation using AI. NAB is focused on providing our colleagues with the AI skills they need to be more productive and deliver better services to our customers. And all Australians must have the opportunity to build these skills of the future. The final area is energy. Higher energy costs are holding back manufacturing growth and hurting households. NAB supports the government's focus on energy security, including the accelerated rollout of renewables and the important role of gas in providing firming capacity. At the same time, we maintain our commitment to achieve net zero by 2050 across our financed and facilitated emissions and operations. NAB looks forward to working with government, with regulators, industry groups and our customers on each of these issues so we can increase productivity and continue Australia's track record of growth, prosperity and being a great place to live and work. Thank you for the opportunity to speak with you today, and Peter and I look forward to your questions.
Thank you, Mr. Irvine. I do have a number of questions that go to the heart of why we still maintain this inquiry, which is effectively wrapped up at that point nearly 10 years ago around banking behaviour and was then captured through the Royal Commission into misconduct in banking, superannuation and financial services industry. Firstly, NAB's provided a formal update on its implementation of the Royal Commission recommendations. That happened in September of 2021. We've had banks, I would characterise it this way, in shorthand, saying to us they've fully implemented their recommendations, so they don't need to report again. I guess I want to reiterate many of the recommendations, especially those related to governance, would require or intend for banks to continually look at their performance in this space. For instance, recommendation 5.6 requires, quote, all financial services entities to assess as often as reasonably possible the entity's culture and governance, identify any problems, deal with them, and then determine whether the changes have been effective. So with that, I've just got four questions. What have you done to determine whether the changes you've made to governance and culture have been effective? What metrics does that self-assessment framework involve? How frequently do you assess that? And finally, you know what, I'll leave it at that and then I'll ask you another question because I'll just overload you with questions and I don't want to do that. Why don't we just start with those?
All right, thank you, Chair. Well, a little bit of context. I came to Australia in September of 2020, so I personally was not here through the Royal Commission. But it was clearly a traumatic period for our bank. And I know when I came to these shores, I spent quite a lot of time learning and understanding around what happened, where things went wrong, and both what the recommendations were for the industry more broadly as well as for our bank. And, you know, it was difficult reading. It was pretty confronting. Yeah. And, you know, I've been a banker in a number of jurisdictions for over 25 years, and I think about banking with real noble purpose. You know, ultimately, we put people into homes. We allow people to have the dream of starting and owning a business. We help people plan for retirement. You know, so we allow and enable people to live their best lives. And I've always think about what we do as a very noble profession. And so reading those types of things was difficult. I think it's important that we never again enter, you know, a period like that as a bank, as an industry, and as an institution. We did outline and publicly disclose our self-assessment at the time of, I think it was 2018. We have executed and deployed all recommendations that were pertinent to NAB following the Royal Commission. But as you highlight, this is something that needs to be living and breathing in how we run the bank and our culture. We have a regular set of conversations on risk culture. We, twice a year, do a survey of all 40,000 plus employees on how they think we're serving our customers, how our processes and controls are working, how we think of risk and risk management, and importantly, we ask risk culture questions specifically. We look at how we're doing regularly and discuss that in our management forums, in our risk committees, as well as at the board. And we do an annual self-assessment on our risk and risk culture, and a triannual a triannual independent review with a third-party firm who come in and essentially hold us accountable on how we're going and deliver that report to ourselves, to our board, as well as to our regulators. Maybe I'll see if Peter wants to add anything further.
And Peter, before you do add, I am interested in exploring, just to get the handle, you said you published your self-assessment in 2018.
Correct.
Mr Whitelaw, if you were around at then, is there anything in there that you might be able to, given that there's been a bit of time that's progressed since then, that you might want to reflect on that was raised then and where you're at now?
Yeah, thank you, Chair. It was a very visceral experience, quite frankly. There were a number of in the culture, governance, and accountability self-assessment that we published. There are a number of cultural attributes that we identified ourselves, and we set in train a program of work to essentially fix those root causes. It was really important to identify what is driving the outcomes and trying to sustainably fix those. That was a
Can you reflect on some of those? What were they, off the top of your head?
Okay, it starts with accountability, but culture, which has been much discussed over the last 2 days, is a very strong part of that. But also identifying and fixing issues quickly, providing the cultural willingness, the psychosocial safety, if you will, for people to be able to escalate bad news and feel comfortable in doing so. We want bad news to take the elevator and good news to take the stairs to some extent, because if we don't know what's going wrong, then we can't fix it. And that's absolutely the message. You mentioned the Royal Commission. I think it was recommendation 5.6. There's a very strong nexus between that and APRA's prudential standard on risk management, which is called CPS 220. And as Andrew has mentioned, that requires us to present to the board a self-assessment about the adequacy of our risk management arrangements, our compliance arrangements and our culture. And triennially, that is independently assessed, and we submit all of that to APRA. And as you would expect, there's a wide range of metrics and information that we sift and assimilate, and we look for hotspots and trends over the course of the year, and that is reported up to the ELT, the risk committees and the board.
So you both referenced going through the Royal Commission, being horrified at some of the things that you read. Was there any particular behaviour that you saw that you thought you would, again, relying on the phrase horrified, that you would be horrified would occur in your organisation with respect to its customers or employees, frankly?
Yeah, I think the ultimate thing that you want is to be a company that puts its customers at the centre of everything that we do. Because if you look after your customers well, ultimately they'll look after you. It's simple as that. And they'll give you more of their business, they'll refer their friends and family, and they'll enjoy doing more with you. And so we have, and I have, a very deep-rooted view that customer centricity is critical. Now, we're a large bank with over 40,000 people. We have technology that's very, very good, and we have some technology that's dated and we're looking to improve. And so it is also true that I think while we're a significantly better bank today than the bank that I joined 5 years ago, we have to continue to improve, and there will still be issues, and there will still be mistakes, and there will still be problems. I don't, however, think that that's what defines the company. What defines the company is a curiosity to find issues, fix them, be transparent about them, raise them up, have a speak-up culture, and essentially be a learning company, a continuous improvement company. And if we can do that and really own that narrative and live that from a values and culture perspective, I think we'll keep improving. And hopefully over time we'll have fewer issues, we'll find them faster and we'll fix them quicker.
So you say that, or you've told the committee that you encourage your employees. I think that phrasing that you used, Mr. Whitelaw, was quite good, that bad news takes the elevator and good news takes the stairs. That one has landed, well done. How do you encourage that, though? I'd be interested to... Is that an expectation of your managers that their performance reviews would assess?
I mean, I might go first, Peter, and I'd love you to also jump in. But first of all, we have a practice in our bank where every paper that goes to management forums or to our board has a risk view, an independent risk view on how that paper is written, how well it's thinking about processes and controls, and how strongly it's putting the customer at the centre. And that's literally on everything that we do. And that's a practice that I really think is valuable. I think we may be one of the only banks that have a customer committee in our board of directors, where we talk only about customer outcomes, customer improvements, customer detriment, and how we're addressing customer detriment, which really serves a terrific purpose because it flows through all of our management forums as well. And so, it's about us creating a visible culture of always wanting to learn and improve. We've just implemented a very significant program of customer voices where we are trying to increase by 10x the volume of feedback that we're getting across all of our businesses and frontline teams, again, to simply listen, learn and act to improve. And so this essence of being a learning company, a continuous improvement company, is really at the core of who we are and who we're trying to be as a bank.
Yeah. Now, I don't want to cause heartbreak for the people that put your annual reports together. It's a big job, but I can't recall the last one, whether or not you do include in your annual report the work, summarising the work of that board committee that you said on customer... What was it, sorry? The customer committee. Do you highlight in your annual report some of the things, I don't expect it to sort of be in great detail, but do you detail the work of the work of that committee, what it's found and what it's trying to or seeking to improve?
Yeah, let me follow up specifically on that, but I'm pretty certain that we do disclose the terms of reference of that committee, who's on the committee, and the types of things that they focus on in that committee.
Because I was going to ask you, Mr. Irvine, about, do committees of the board actively assess NAB's response to the management of the Royal Commission, and how often it's a feature of board and executive management business and discussions? You've given us a flavour of obviously your executive committee focuses on it, but the board as well?
I wouldn't think there is a single board meeting where management isn't providing strong governance, interjection and questioning of management across the range of dimensions: risk, customer conduct, financial outcomes. That's their role and they take it very seriously.
The annual self-assessments, you referenced two things: the annual self-assessment plus the triennial independent review, where you get someone to assist you with that. Who is the firm that assists you with the triennial?
I think it's changed.
It's changed. Most recently it was PwC in 2024, but we have used KPMG and EY over them. It was a requirement that came in with CPS 220 in 2015, and the requirement is to do that every 3 years.
I think there's value in having different firms do it, so they're not, they don't become too close.
What was the reasoning behind not using PwC, can I ask?
We did use them last time.
No, I know you used them last time, but have you made a decision to change PwC's role in the last, say, 12 months or 24 months?
In terms of the triennial review, the next review will be in 2027, and at that time we will make a we will put a tender out. We will discuss with the consulting firms and align that with what we think is the appropriate scope, which is also agreed with our prudential regulator.
Would you weigh up, given there's been a bit of focus on PwC's, the best way to describe it is ethical conduct?
I think we would.
Is that something that would weigh?
It would. Yeah, I think we'd take that into account in 2027. Obviously, we'd want to see how they've progressed in that time to address some of those matters, but it would certainly be part of our decision set.
Yeah, no, I think that's a fair position. Given it's 2027, I think that's a fair position. If firms have taken steps to rectify what have been concerns previously, then fair call. But in terms of the appointment of such firms to do that, what assessment do they go through to make sure that they are fit and proper to conduct the triennial assessment, given its significance?
Well, we would go through an independent tender process where we would be asking for their credentials, their capabilities, the specific partners that they would be putting on the work, and what they have done. So we'd thoroughly assess their credentials for the work before appointing any firm.
Understood. And can I ask, in terms of your annual self-assessment, is that published, or is it more an internal document but that you share it with the regulator?
It's shared with the regulator, Chair. So under CPS 220, the board of the bank is required to make what's called a risk management declaration to the prudential regulator, and that's a document that we provide confidentially to APRA.
No, I understand that. Has there, in the interest of transparency, with the provision of those self-assessments, have issues been documented in those self-assessments that the regulator has felt needed to be attended to? And if so, can you describe some of those?
I can talk to that.
Thank
Chair.
you.
The thing about risk management is that it's not static, and that in fact the bar is rising every year. It's rising because some of the place, how we're operating, the environment that we're operating is getting more difficult, more complex. The world's a more dangerous place today. You have international actors that are trying to penetrate Australian government and critical industries. From a cyber perspective, we have the fraud and scams vector that's increasing. Recently, APRA introduced CPS 230, which is a significant requirement to understand the operational risk and controls that you have in the bank, and not just limited to your own company, but your vendors, and more recently, their vendors, to understand, how they do business, because ultimately, your vendors can impact your own stability and delivery of services to customers. And so that's something that's a new standard. We've deployed that standard in our bank, but I think it's fair to say that we have more work to do to strengthen and embed that over the course of the next few years, and we've made that very clear to APRA. And one of the things that's really important is that we don't say, or just focus on how well we're doing, but we're equally focused on where we need to lift. And so all of our self-assessments would be quite even-handed on both where we're pleased with progress and where we have more to do.
And obviously anything that comes up in that self-assessment gets submitted to the board and is expected to be reported on to determine that everything's done.
Absolutely.
My last question before I hand over to the Deputy Chair. Yesterday, one of your peers said, quote, "When you have, as we do today, many banks earning below the cost of capital in the most benign credit cycle any of us have seen in our lifetime, I'm not sure that augurs well for the sorts of macro and geopolitical tail risks that we're going to see." I guess the question I'd put to you is, how significant is that pressure? Do you have the similar sort of pressure on your organisations? Does it pose a risk to your financial stability? Has it been something, and also does it pose a risk to the availability of credit? And is this something that you report on, these risks, to the RBA, because they obviously look at financial stability in their reporting regime? Can you comment quickly on those matters?
Yeah, we would, along with the bank that made that comment, be one of probably the only banks in the country that returns in excess of our cost of capital today. And so many banks, particularly smaller and mid-sized banks in our country, are not earning a return above their cost of capital. And over time, what that means is that, you know, investors may not want to back that bank, if you will, and that causes prudential risk because ultimately,
smaller and medium sized.
Correct,
Yep.
because ultimately, who's going to backstop that bank if shareholders won't? And I think there is a conversation to be had about why that has happened. And there are a number of reasons for that. Australian banking is more competitive today than it was 20 or 30 years ago. You can see that most specifically in mortgage net interest margins, which are significantly lower than they were 10 or 20 years ago. Competition's very strong, and most banks, particularly through broker-originated home loans, don't earn the required returns on those mortgages. And, you know, that's a huge change from not that long ago.
But you and CBA, if I understand correctly from what you said, earn above the cost of capital?
We do today. I think a big driver of why is because NAB is Australia's business bank. And more of our loans and activity as a percentage of our total book is with business customers, and that's something we're incredibly proud of as a company. And the business market has, up until now, sustained a higher return than the consumer market for banks in Australia.
Okay, I appreciate your responses, and I'll hand over to the Deputy Chair.
Thank you. Thanks, Mr Irvine and Mr Whitelaw. In your opening statement, you said higher energy costs are holding back manufacturing growth and hurting households. Can you explain how these higher energy costs are hurting these two sectors in the Australian economy?
Absolutely. I'll start with this comment. Australia should be an energy superpower. Australia should be an energy superpower. We are blessed with incredible amounts of sunshine, with incredible amounts of wind resources, with some hydro capacity, and one of the world's largest reservoirs of natural gas. So the fact that we are in a situation where we have a possible issue with a supply and demand imbalance on energy is sad and shouldn't have happened. And, you know, I think this is something that we need to be pushing into as a country. Simply put, we need to be focusing much more of our time and energy on getting resource and energy projects approved. We're not getting enough renewable projects approved. We're not getting enough gas projects approved for domestic uses. And the AEMO is forecasting a shortage of gas on the eastern seaboard by 2028, 2029. And we have significant issues with our renewal of our transmission grid, electricity grid, to operate in this new environment. And you know, I think this is something that should have been avoided. And I think that's the conversation that we should be having as a country. How do we get more energy supply into our economy so that we can bring down energy prices? Because that's one of the key drivers of a very productive economy.
I could not agree more. We should be an energy superpower, and we do need to bring down prices. Just on prematurely taking out capacity, be that agnostic to what it is, whether it's renewables, coal, gas, do you have a view on, you know, should we be, you know, I think you said energy abundance or energy superpower, let's get as much as possible. Should we just be aiming to keep as much supply that's cost effective on there to bring down prices?
I do think it's important for us, wherever possible and as fast as possible, to try and decarbonise the grid and get thermal coal out of the energy mix. And we have absolutely got abundant gas and renewable sources to do that. So one of the things I do worry about is that we're going to have to continue to use thermal coal for longer because we have not been successful in bringing enough renewable energy and natural gas to our energy mix. And there's been a vilification of gas in Australia that has been, I think, a bit surprising. The carbon intensity of gas is much, much lower than coal. In fact, the decarbonisation value of moving from coal to gas is as or more significant than moving from gas to renewable. In terms of reducing emissions. And so it's very clear that with the technology we have as a world today, gas is going to be an essential fuel in the transition to renewables. In fact, I would go so far as to say is there is no transition to a renewable mix in our energy ecosystem without gas.
Yeah. I couldn't agree more as well. And I fully agree with you. Let's try and decarbonise. And I agree with your comments there as well. You're originally from the UK and you're talking about all our energy resources. And I think there was one I noticed you missed, which is uranium. We have the world's largest uranium deposits. From your time in the UK, could you talk about the role nuclear's played there in decarbonising and to their...
Yeah,
or elsewhere in the world, being a global banking
most of my
exec.
life in the UK and Canada, both of which
Canada too.
have nuclear power. Look, this is a difficult topic. The one thing I've always felt is important is that when we talk about topics like nuclear, that we have a very rational and economic debate as a country on the relative merits of the fuel. And sometimes I feel that the debate turns into a very religious debate on the merits or not of nuclear, and that's not always helpful.
Can you say more about that?
Well, I just think it becomes emotional, highly charged, politicized, and therefore, whether or not this country chooses to move on into nuclear power should be based on the facts of whether or not it would be good for our country and provide cheaper and cleaner fuel. Other countries have made that decision. We have not as a country. I can understand why. We have sufficient sources of other fuel that maybe we don't need nuclear energy in our mix, given the significant proportion of natural gas and renewables that we're so fortunate to have compared to, say, the United Kingdom. Is it necessary? I don't think we need nuclear in our mix of energy to be one of the lowest cost providers of energy. We have sufficient resources with all the other sources of energy to do that. If the government of the day decided that it was a good thing to have nuclear and they won an election on that standpoint, then maybe we would seek to bank it. But until that time, I think we're comfortable with our position on this.
As we head towards 2030, and we have 2030 targets on renewables, on emissions, are you confident through NAB and your research arm, what you're seeing with your customers, that Australia could reduce energy prices heading to 2030?
I think we need far more sources of energy entering the energy mix for me to be comfortable to say that we can both meet our decarbonisation targets as well as manage the cost of energy. And so I think that it's always back to the economics of supply and demand. And we're also in a situation where demand for energy is now rising in the world. And energy demand for the best part of 20 years in the Western world, at least, has been flat. And with the emergence of compute and AI, we are now seeing the energy draw, the demand for energy starting to increase at a pace we have never seen before. Wow. And so I think the other thing that we need to be sure to be doing is updating our demand forecasts to more accurately reflect what's more likely to happen in terms of demand. And I don't think that's fully happened yet in Australia. So, that demand-supply mix really needs to be managed, and what we need is more sources of energy.
Yeah, and my shadow portfolio is AI, and I've been meeting the AI industry, and they tell me we're at the very start of this uptick, in their view, which panics me. And when we talk about, becoming, to use your words, a world superpower, which Australia should be, I worry when we're not looking at all our sources, when we're exporting uranium for others to use to create clean, cheap energy, when we're exporting gas, to your point that you sort of alluded to the others. And what worries me is, just in the past 6 months, I've seen and read Tomago facing potential bankruptcy, Whyalla Steelworks going bankrupt, Mount Isa Smelter going bankrupt, Bell Bay facing bankruptcy, NiStar facing bankruptcy, CEOs of Cadbury and Mars saying manufacturing's at a crossroads, CEO of BlueScope Steel saying gas is 3 to 4 times more expensive in Australia compared to the US, the CEO of BHP saying our energy costs are 2 to 3 times that of comparable countries, and this is all in the last 6 months. Are we at risk on current course and speed of deindustrialising Australia?
Well, I do think, and when we talk to our customers, particularly customers that are exposed to rising energy costs, this is a material theme that's on their minds and that they worry about. I think it might not be quite as dramatic as you characterized it, but that is not to suggest that it's not a significant issue for many companies up and down the country that are in the manufacturing or industrial segment. And, it's my strong view that it can be addressed within the parameters that we've committed to with regard to Paris. And so the focus needs to be on getting more energy into the grid, more renewable projects. I'm aware of a number of projects where entrepreneurs and business people are trying to bring renewable energy to market, and they're finding it very difficult. We know that there's been very few gas projects approved recently, even for domestic usage. Narrabri, as an example, has been talked about for the best part of 2 decades. The Bass Strait is decreasing its production of gas, and we need more gas on the eastern seaboard. So many of these issues are known. The biggest thing we can do to decarbonize our country is to get those coal power stations out of the grid. And to do that, we need more renewable and more gas.
On gas, I recently had some industry gas experts come and see me and say Australia's east coast is on track to have shortages on peak days by 2028.
That's right.
Is that correct? And what are you hearing on that?
That's what the Energy Authority is currently predicting. If we can get sources like Narrabri approved, that will make a big difference. It's a significant energy resource, and it's right here, which means that its transportation and difficulty to get to market is quite low. We are now also starting to see more exploration again in the Bass Strait, and there was a recent headline of some success in that exploration, which is comforting. And so, back to my point, Australia has lots of gas resources. There are still resources on the eastern seaboard, in Gippsland, in the Bass Strait, in Narrabri, in Queensland. If we can get more pipelines done so that they can reach the southeast, there are absolutely ways here for us to avert that gas shortage.
And if we fail to avert that gas shortage, do you have a view on what that could mean for the economy or some of your customers?
Well, I think what may then happen is that, and there is discussion around this, is the potential for importing gas on the eastern seaboard to plug that hole. I don't think that would be the cheapest solution, but it would at least provide us with some gas that we would need when we have those peaking days where there isn't sunshine or wind available to provide us with reliable and stable energy.
So you're saying Australia, despite I think you characterise as some of the largest gas reservations in the world, we could then start importing gas down on an eastern seaboard rather than just piping it down internally.
If we don't get those projects approved, I'm hearing good noises, but we've got to get them done.
Yes, and would you think that would increase our cost of gas if that's how we had to supply it to the east?
I would have thought that gas that's close to the market is going to be the cheapest source of energy that you would have.
Yeah. We had the ANZ CEO in here just before you who said gas people were finding it, or they had a policy where they were restricting lending to gas at some point. And I asked the question, well, if people are restricting to lending to gas explorers or gas producers, is that reasonable to say that's increasing the cost of capital and therefore increasing the cost of gas? Two questions. Are you similarly have restrictions on that in your bank, or have you? And two, do you think that's adding costs to this resource?
Well, we are managing our financed emissions very clearly in accordance with Australia's commitment to Paris. And we've identified a number of sectors where we have clear emissions glide paths for those sectors. Oil and gas is one. We virtually do no oil in our bank, but we do finance natural gas. The primary restriction that we have as a bank is that we will not fund gas extraction for export. There is plenty of global capital that would love to fund Australian gas extraction. The Japanese, for example, or Korea, or near Asian customers. And so, frankly, Australian bank capital is not needed to enable that extraction. If I then move to domestic...
Just on that, why would we allow foreign banks to make the margin on the capital to finance Australian gas, but we wouldn't finance it ourselves? What would be the rationale for that? Economic rationale or
the rationale for us as a bank is because we've committed to financed emissions aligning to Australia's commitment to net zero.
So it's not that we wouldn't finance the gas, it's not that we shouldn't be digging it up, it's just that we'll allow another country to take the margin on the financing of the gas because of our internal targets. Is that just to check on understanding?
Our policy setting is to enable Australia's legal commitment to Paris. And so
which we support.
So that's very clear. Our job as a bank is to deliver Australia's targets, no more, no less. And so we have aligned our glide paths for all those 8 sectors to deliver net zero by 2050, and providing financing for natural gas extraction for export would be inconsistent with that policy setting.
If other countries are financing it and what you're seeing around the world, and if we're still taking the gas out, we're using it or exporting it, do you believe the world's on track on current course and speed to net zero 2050 from what you're seeing?
The IEA has published they're probably the best authority on what the world needs to hit its targets for net zero by 2050, and that's very clear in public. And they've highlighted what would need to be true for the world to hit net zero by 2050, and an example of a requirement to ensure the world is on track would be that there are no petrol cars sold anywhere in the world by 2035. That's an example of an assumption that's embedded in the IEA's projections for net zero by 2050. Given that there's been some significant customer reticence in moving to EVs, not just in Australia, but over the world, that's probably a projection that is starting to look less achievable. But there are a number of examples like that. What I would say, again, is that the best thing we can do in Australia and the best thing the world can do is to focus on getting more renewable projects built and more gas done, because it's a fact today, particularly in emerging economies, that they are building coal-fired power stations. And so it'd be far better for the world to be consuming Australian gas than coal.
Yeah, that's a good point. But yeah, and have them fund it as well. And then just on the on our own targets, is there a move? Is there, in your opinion, is there a risk? And for the record, I fully support achieving Paris and actually reducing emissions, and I agree with all your sentiments. But is there a risk of us moving too fast as a country and incurring a greater economic cost to decarbonise if we can't bring on that supply quick enough?
Well, I think it's the last part of that question that's the key point.
Yeah.
If. And, you know,
I'm just going on what you said, though, because I think you just said, like, listen, we're facing shortages by 2028 of gas. We're not yet getting the projects out. We should be an abundant superpower, but we haven't been because we've got all the world resources. We're not getting the projects on. So it's just tying together, you know, that earlier testimony you gave with where we're at, and I'm trying to just understand where are the risks. You're a banker. Where are the risks for us here as policymakers?
The risk is not getting supply to market and to not addressing the transmission issues that we have with our grid.
And that would do what to the cost and the economic, the industrial base of Australia?
Well, I think it could have implications to price, but there is a path here for this country to execute against. And can I give you an example of a role that we can play here as a bank?
Yeah.
Today, because there have been very few gas projects commencing for that would operate within our policy setting, which is to limit it to domestic uses, because we won't finance gas for export. Our lending to gas today is less than half of our 2030 target. We have significant capacity as a bank to lend to natural gas for domestic sources. And so the point here is that there is too much of a debate, I think, around net zero and energy prices being incompatible with each other. And I strongly believe that is the wrong narrative. And that, again, back to what I've been saying all along, as a country, we need to do a much better job of getting energy to market, both renewable and natural gas, to help decarbonize the grid, get rid of the coal, and become the energy superpower that we should be. And that I believe we could have one of the world's lowest energy costs and deliver net zero and be a wonderful exhibit to the world that you can do both at the same time.
Okay, thank you for that. I'll now throw to the member for Wentworth, who's coming to us from remotely. Ms. Spender, over to you.
Thank you very much for that. And for the record, I completely agree with you. I think that's what we should be aiming for, is a world where we get to net zero and we are energy abundant and show the world what is possible with lower prices. So but I want to talk to you about business lending. It's obviously a key focus of the bank. Actually, a number of different of your sort of colleagues in other banks have been talking about this sort of move out of at an economy level from 2/3 kind of lending that used to go to business, 1/3 to mortgages, which has now moved to 2/3 mortgages and 1/3 to business. So I really want to talk from in your bank's point of view. What are the barriers to lending to businesses, and with a particular focus on small businesses? What makes it hard to lend to businesses, or why do some businesses come to me and say they just can't get money from their banks?
Thank you for the question, Ms. Spender. One important point to note is that NAB is quite different from most of the other Australian banks. If you look at our balance sheet, 56% would be to residential home lending and 44% would be to businesses. We are the biggest lender to businesses in the country, and would be far the biggest lender to small and medium-sized enterprises in the country. And what's very pleasing is that over the last 5 years, since I've been at the bank, both as CEO and prior to that running the business bank, we've been growing our business outstandings at double the pace that we've been growing our housing outstandings. So for us, at least, it is not a case of us skewing away from businesses. We continue to lend into that part of the economy and have lots of appetite for lending to small and medium-sized businesses. I think that doesn't mean that everything is perfect in terms of access to capital for small and medium-sized businesses. I think it's true to say that Australia tends to focus on more secured lending than unsecured lending than I've seen in other markets that I've worked at as a banker. Now, some of that is because secured lending is cheaper for the borrower, and therefore, that could be the customer's wish to actually have security over a physical asset because it means that they can avail themselves of lower levels of interest. But it is still the case that, when you look at the mix of lending in our country, it does skew to secured versus unsecured.
And certainly, I think that's absolutely right, and certainly does in the small business sector. And I think with the housing market, which is increasingly unaffordable for young people, this is the concern that we're getting. Who can run and earn money, who can sort of put their house up against a business loan if there's, if they're unlikely to have a house. So I think this is, some of the challenge that you mentioned in the start from that intergenerational equity point of view in terms of that secured, unsecured piece. But I guess then the question is, are there things from a policy point of view that would make it easier or make it make sort of credit flow more effectively to small, medium businesses? And considerations might be things like the COVID securitisation program that was, or guaranteed loan that was there. I think some people talk to me about responsible lending thresholds and whether they should be raised. So you could look at different areas. I'm just interested if you've got any views on ways that could help unlock more capital, particularly for SMEs.
Yeah, I think one of the, and some of this is going to also involve non-bank capital. Australia needs a larger venture capital and private equity market so that particularly growth companies and companies seeking to scale can get access to growth capital. And, the US and other markets are just more advanced in having more growth capital. I think there's a little bit about the risk appetite in our country and questions around that. But I think that's an area that I hear from our customers that we could do more as a country. And now we have the Australian Business Growth Fund, and there has been a more emergence of potential solutions, but I think we still have a fair way to go there. And then, in terms of bank lending, again, Australia has, pretty robust and strong, risk appetite parameters. When you compare to other jurisdictions, the levels of bank losses here are much, much lower than you would see in other markets. Some of that is, frankly, by design. Australia is a unique economy. We have the fourth largest pension fund industry in the world, growing to the second largest in about 10 years, which for a country of 20-odd million people is truly remarkable. But what that means is that we export pension capital across the world, and we're a big provider of capital for long-term assets like infrastructure. So we export capital at the superannuation level. We then import capital at the bank level. The reason for that is twofold. One is more Australians have money in superannuation versus holding it on bank deposit. So in other markets with smaller pension markets, they would have more of their personal wealth in a banking system. So deposits in other markets are higher. And in Australia, we hold mortgages on balance sheet. And Australian houses are very expensive. So our banks have much higher levels of assets and lower levels of deposits, which means we don't fully fund our assets ourselves. So we go globally to raise money to fund our mortgage books and our business lending. And so when you are requiring to access capital globally, it's helpful to have unquestionably strong banks that can borrow overseas for as cheap a rate as possible. So that is a dynamic that's real in our country, just of in terms of the makeup of our capital markets. And I think our regulator's very cognizant of that, that if Australian banks had a somewhat weaker capital position, and we got into a little bit of trouble, would that have implications to bank viability? And so having a very strong banking system is important.
So is that fair to say, though, that is it an inevitable consequence then of wanting a robust banking system that we and we do have a lower risk appetite for business lending? Is that an inevitability, or is there something else that we can do on this which both preserves the strength of our banking system and doesn't put that in jeopardy, but also gives more money to the businesses, which we know we want to fund, and where business investment, frankly, in this country at the moment is really low, and that's a problem for all of us.
No, I think that's a conversation that needs to be had in our country around, is the calibration of our settings exactly right? I wouldn't expect us to have a very significant change. I can see why Australia is adopting Basel III as a medium-sized country that is essentially importing capital at the bank level. But it's always about calibration. And, could we change a few settings on calibration? Potentially. And I think that's a conversation that's worth having as a country. A lot of the dialogue around productivity to date has been around productivity of labour. We haven't had as much dialogue as a country around productivity of capital. And this would come under that.
Okay, thank you. I think I'll hand back to the Chair. Thank you so much for your time.
Oh, it's very good of you. Thank you very much. I'll hand over now to the member for Moreton for the next 10 minutes.
Thank you, Chair, and thank you for providing evidence today. I was going to start with AI, and I asked a question of your counterpart from the ANZ in reference to some job losses at the moment, and the question was this: are the roles or functions or responsibilities of employees going to be replaced by AI or automation? And I wanted to ask you the same question with respect to your employees more broadly.
Yeah, I think, as I said in my opening statement, AI is going to be one of the most consequential technology innovations in our lifetime. And I believe it will be as significant as the motor car, as electrification, as the internet. And all of those things ultimately improve things for the better, but they had positive and negative consequences to employment. And I think that will be the case here. I think the most important thing that we can do as a country is to encourage our workers to lean into AI, learn, adopt, skill up, because the narrative I've used in the past isn't that AI is going to take our jobs. It's that workers who know how to use AI well are going to take the job of workers who are afraid of AI. And so we need to make sure that as a country, we are skilling our labour force up to the greatest possible extent to maximise the opportunities that are going to come as a result of this technology.
Does that mean you think that there will be job losses as a result of AI and automation?
Over time, I think there will be, but we shouldn't run away from that. We have an economy that is short labour today. We're the country's biggest business bank, And when I talk to my business customers up and down the country, access to labor, skilled labor and unskilled, is one of the biggest challenges that I continue to hear. We're coming at the end of an economic cycle that's been a bit difficult for us, and unemployment is pretty incredibly low levels. So there isn't that much capacity in the workforce, and so.
So where do you see deployment of AI in terms of the functions for NAB?
For us, I think we're excited about the opportunity in software development. Mm-hmm. We're excited about the opportunity in customer contact. We have deployed a Gen 1 virtual assistant that talks to our customers, that the NPS on that is 35 percentage points higher than the more clunky traditional virtual assistant that we had as a bank a year ago. And it's defraying thousands upon thousands of calls where customers would have had to wait on hold and talk to someone. And so they're really enjoying that capability. And I think, over time, the quality and capability of these solutions are going to improve to the point that you actually won't know, unless it's disclosed, that you were talking to a robot, either via text or through voice.
Do you think that use of that technology has the potential for NAB to create cost savings for customers?
Potentially. I would like to think so. We run our bank where we're looking at, revenue and the cost to generate that revenue. And so obviously if we can reduce costs over time, that would be good. And I'd imagine share some of that with our owners and shareholders and some of that with our customers. But I can't overemphasize the point that we need to lean into AI versus run away, and reskilling and helping our staff is going to be incredibly important, and we are really focused on that as a bank, training and running workshops and training sessions to help them get up to speed. It's still early days, but this is coming to us.
I was going to ask, where is the customer data being stored for AI systems, and if it is being stored overseas, what controls do you have in terms of security and safety of that data?
No, we're very clear that all our data for Australians is housed onshore in Australia.
Okay. I want to move to payments, and we've seen obviously a lot of discussion of payments, and banks more broadly have said that they're supportive of banning surcharging but not supportive of the RBA reducing interchange fees. What's your view on that?
I do agree with the notion that surcharging has passed its useful date. It was introduced in another era when credit cards were a small proportion of the payment system and debit cards weren't used significantly. And now that's simply not the case. And so, I was here a year ago at this committee and shared a personal story where I was slugged a 10% surcharge for a cup of coffee. And so it was being abused as well. And so I think for all Australians to have certainty on the price of a good or service, I think is a good thing. What we also believe as the country's business bank is that small businesses should not pay the freight of that change. And so we need to work to ensure that the cost of acceptance of payments for small businesses continues to be reasonable. Australia is fortunate that today we are one of the lowest cost payment jurisdictions in the world, but I'm still in favour of and working with the RBA through their consultation process to minimise the cost of payments to small business. And we have engaged in that process. So it is also true that we think the current recommendations as described need some work and need some tweaking. Our view is that there are things that we could be looking at, like reducing interchange for small business up to a certain revenue level that we would be supportive of. Another approach would be differentiating around card present, where there's a physical card, or card not present, which are typically e-commerce payments. And I think many of the small businesses that would be impacted through surcharging would take card present payments. So there are a number of ways that we are engaging with the RBA to, I think, try and be part of the solution and support the essence of what the government is trying to do, which is to create certainty around payments, so we know what the cost of a payment is, while ensuring that small businesses are not significantly disadvantaged with that change.
So for clarity, you would support a reduction in interchange fees for small businesses?
Correct.
Yeah. Some banks have claimed that any reduction in interchange fees would result in would essentially see a reduction in fraud and other protections. Do you disagree with that?
We are spending significant amounts of money on frauds and scams. We spend more today than we've ever done. And I think that the safety and security of payments is not something that I would see being compromised.
By a reduction in interchange
Correct.
fees.
I think the concern that the banking industry has with the current recommendations as described is that the economics around the payment industry will be sufficiently harmed that it would reduce the ability for banks to further invest in the payment ecosystem, first of all. And second of all, it significantly harms domestic companies and banks in terms of reducing their profit pool while not touching the profit pool of large international companies, either tech companies, schemes, American Express, and what have you, and that we need a more integrated approach to looking at this topic.
Thank you. Just a quick couple on home loan offset accounts. ASIC's obviously raised concerns about potential issues with the application of home loan offsets as they should be operating. When you saw that, did you undertake any investigations into the operation of your home loan offset accounts, and what did those investigations show?
Yeah, we are working with ASIC. They've told us about their surveillance activities in this regard, and then we're looking at that to make sure that we're in good shape. We think we are today. What we're trying to understand is, have we been in the past, and make sure that there hasn't been any issues in the past. But we're actively working with ASIC on this matter.
Okay, thank you.
Terrific. So I might hand over now to the member for Bowman, if he's there.
I am here. Thank you, Chair. We've heard from the other banks this morning and yesterday in relation to their predictions in terms of interest rates for the new year. Just keen to get the House view from NAB on what you're expecting. Will we see rates lower at any point in 2026?
No, we do not. And obviously, this is a matter for the RBA, but our prediction is that we will not see further rate cuts next year.
Okay. And what do you predict inflation's going to be doing over that period?
We predict that inflation is going to come down marginally, but continue to be stubborn. The issue that we have as a country right now is we're growing around 2%, and next year we'll be growing 2.3 to maybe 2.5. And that's about as good as it gets for us now. As a country, we can't grow much more than 2.5% a year without triggering excess inflation. And this comes all the way back to my opening statement around the need for more productivity in our economy. Because without more productivity, growing at between 2 and 2.5% is the trend rate that we can achieve for the foreseeable future.
And do you maintain an assumption around what Australia's productivity trajectory could be over the next little while?
You know, we live in a wonderful country that has, as I've said, abundant energy resources, that is a place that the rest of the world wants to come and live and work. We can attract the highest quality migrants the world has, the best, because of the wonderful country that we live in. We've got English language, rule of law, beautiful beaches, lots of capacity to grow. You know, we shouldn't have a housing crisis when you think of the amount of land we have in this country and the amount of people we have in this country. And so, you know, Australia has been one of the best places to live and work for the last 100 years. And there's no reason why Australia shouldn't be one of the best places to live and work for the next 100 years. The issue right now is we are not today set up to replicate the incredible 100 years that we have had. And I think that ultimately is what this discussion around productivity is all about. And I've said before that generation after generation of Australians, people came to our shores and they could have absolute certainty that their children would live a better life than they would.
Would you say that we are facing, in our first time in our history, we're facing the prospect of having a lower standard of living in the next generation?
I think for the first time in our history, that is the problem. That for the first time in our history, parents can't look at each other and with conviction say their children are going to have a better life than they did. And that's what every parent wants. And that's what every parent could say with impunity for the last 100 years. And I think, you know, this is absolutely the dialogue we need to be having as a country. And it's within our hands.
Well, I want you to dig a little bit deeper on that one. We've got a lot of policy levers that we can control in the building you're sitting in at the moment, not necessarily the building I'm in, but wondering, you know, if you could just sort of crystal ball a bit, and what I'd be keen to do is get your perspectives, particularly from what you're hearing from your customers. You know, where are the challenges at the moment? Where are the obstacles to their growth? And what should we be doing as policymakers? You know, if you could give us a top three, or don't let me restrict you. You know, where would
it's
where
what
do we
I
need to
started off in the first place. It's housing, it's energy, and it's regulation. And they're the three things that we need to push into as a country. The biggest reason why Australia has plateaued on productivity is that in the last 10 years, all the jobs we're creating are in the public sector. 9 out of 10 jobs that we're creating are in the public sector. And the public sector typically is lower productivity work than in the private sector. And the reasons for that are the three reasons I mentioned: the housing crisis, the energy crisis, and it's making it too difficult for businesses to do what they want to be doing and do their work.
Would you say that federal government expenditure is squeezing out private investment and leading to stickier inflation?
I would say all government expenditure, not just federal government, is doing that. We had, post-COVID, a very significant fiscal stimulus in order to save the economy, frankly, from the public purse to the private purse. And that needed to happen. But ultimately, what it's meant is that, if anything, the public purse is today more constrained than the private purse. And so, you know, I think a bit more fiscal restraint on all parts of government is going to be important here to get the fiscal house in order, again, at the state and the federal level, and to kind of make way for the private sector to grow.
Okay. Can I just unpack a bit any other insights that you've got from across your book, particularly I'm thinking of your SME customers. You know, where are you seeing hardship? Where are you seeing risk? Where are you, as we look forward to the next year, where are the areas of concern for you or your customers who fit that cohort?
The first thing I would say is actually things are getting better. So that's not to say that there isn't still some concern, but things are getting better. And I'll give it a whack, but Peter, maybe I'll bring you in momentarily too, so you can think about what you might want to say. Firstly, on the consumer side, what's been pretty remarkable over the last year is we've had 3 rate cuts by the Reserve Bank. And at NAB, we give our customers the choice of whether or not they want to maintain their payments at the levels they're at, or they want to reduce their payments as a result of the base rate cut. And today, 80% of our customers have chosen to maintain their payment levels. In effect, they're paying down their loan faster because more of their payments are paying down principal and less is going to paying for interest. And that's a sign of them managing their money quite well. It's not to say there isn't pockets of hardship. There certainly still is, but it's not middle Australia that's facing it. It's typically renters or younger families that are having a tougher time. Middle Australia's actually doing quite well. If I turn to businesses and the commercial sector, a year and a half ago, there was a fair bit of stress in the economy with rising input costs. Energy was a big one, but not just energy. All goods and service input costs for our business customers were rising significantly. And over time, they were finding it less easy to pass those costs on to their customers. And so businesses were getting squeezed and margins were being impacted because of that cost pressure. We have seen that starting to abate a little bit. A great example that's quite encouraging is in construction. I live in Melbourne, and I've heard from some of my large developer clients that they're starting to see some of their subbies coming to them with cost reductions and saying, I can do this work for 5 or 10% less now. Some of that, I think, is because we're seeing a bit of the big build in Victoria coming down, and so some workers are being able to move to residential housing, which is a good thing. But that's a positive thing. So I think the input cost inflation is starting to abate. And so generally speaking, we think that hardship and delinquency is going to improve over the course of 2026, and that Australia is actually going to have a very good year next year. But maybe, Peter, I can bring you in.
Yeah, thanks, Andrew. I mean, it's a really, really good summary. Broadly, we're about where we would expect to be at this time in the economic cycle. I mean, typically what you see is that households start to improve first, and we've seen that, and I think that you would see that across the industry. There are overs and unders across the states, but broadly, household delinquencies are improving. Across non-residential, so business lending, there are overs and unders across sectors, but broadly, as we've just described, our outlook is that interest rates aren't going to come down because the economy is broadly doing pretty well, and that will support business. But there are hotspots. So, for example, particularly in the agri sector where there's been drought, that has caused particular challenges for some of our customers.
Okay. Thanks for your questions, Mr. Pike. We'll be able to come back. I'm intending to provide 10 minutes of additional questions for every member. With that, I'll hand over to the member for Reid.
Thank you, Chair. And Mr. Irvine, I want to congratulate you because you have managed to get furious agreement from a selection of the committee members about your statements regarding a push to more renewable energy and gas as quickly as possible and potentially being able to reach net zero by 2050 without jeopardising energy prices. That vision of Australia being a superpower when it comes to energy is something that you seem to have gotten agreement on. So I congratulate you on that. I just want to ask you...
Boutros Irvine.
I want to ask you, like these projects, they are a long time in the making. They take a while to build and plan. Would we be in a better position today getting to your energy superpower vision had we had a strong and consistent energy policy, say, 10 or 15 years ago?
Yeah, I think businesses and investors like certainty. And so the more we can have clear, defined parameters, the better. And the reason is the amount of money that is required to effectively deliver the transition to net zero is enormous. And as a result, the payback periods for investors to make a return on that investment are going to require 30, 40, 50 years of stable settings. And so whenever there is concern around what those settings might be, I think that can create a frigid response to capital, because capital wants certainty. And if capital can find certainty in other markets, it will go there.
And they're looking for certainty from government, I assume. Government in terms of their own commitment to net zero.
From everybody, from government, society, and also the value chain as well. So absolutely yes.
So any deviation from certainty, or if it becomes politicised for whatever reason, does that make it harder for us to become that energy superpower that you had that vision for?
My view is that we need to be focusing on the things that I highlighted earlier in this testimony, which is projects and getting projects delivered, and that I firmly believe that, again, we can bring all the energy we need domestically to have very low cost energy and meet our net zero objectives, and that dialogue that is changing what those parameters are makes it harder.
Can I ask about your views on direct financing for thermal coal-fired power stations?
Yeah, we haven't lent money to thermal coal in about 10 years, and we now have zero outstandings to thermal coal. I think outside of some remediation guarantees.
Some rehabilitation bonds, about 100, yeah.
Rehabilitation bonds. So we are not financing thermal coal.
And why not?
Because it's inconsistent with our policy setting around our financed emissions aligning to Australia's Paris commitment and net zero.
And I am particularly interested as well in your discussions around housing, and agree with the points that you have made, and would love to hear more about the, I think the $60 billion fund that you have set up around housing. How, and it strikes me that it's a slightly different model in terms of financing. You're looking for third-party capital.
Yeah, on the, so it's our ambition is very significant, and it's for both demand and supply. And I'll take supply first because actually that's the more important lever for our country. What we have said is that we want to originate and deploy significantly more capital over the next 5 years than we would have in the past, to help be an answer to the need for more dwelling creation in the country. And that not only are we going to use our own bank balance sheet to do that, but we are going to strike deals with third-party providers of capital that don't have our distribution. I have thousands of business bankers up and down the country that many of these capital providers don't have. And they like the quality of the origination that we do as a bank because of the risk-return profile of it, and they trust us to spend that money well. And so it's been very heartening that we've been able to do partnerships with third-party providers of capital, both Australian superannuation as well as global money that is attracted to the returns they can get in Australia. And they're happy to do that through our bank. And so, we think we can, on our own in that time, finance something like 50,000 dwellings, which is a very material contribution to what Australia needs to do. And we're very excited about that ambition, and we wanted to make a public statement around it.
Yeah, fantastic. And I applaud your ambition on that front as well. What would hold back that ambition?
I think the issues with regard to Australian housing development are well understood. We have an issue with planning being very, very difficult and onerous and taking a long time. And that ultimately is passed on to customers. We have an issue with not enough skilled construction workers in the country. And one of the things I've found particularly difficult to understand is that with the levels of migration that we've had coming into Australia over the last few years, so few have had construction skills. Something, like 5,000 or 10,000 of them know how to do construction of whatever various kinds. It should be far higher than that. There's no doubt that Australia could attract lots of people who could want to come and live here, who know how to be electricians or plumbers or bricklayers or carpenters. And so that's something that we need to work on to get more labour here. We need more medium density and high density housing dwellings because the household size of Australia has reduced pretty significantly over the last 30 to 40 years. And in fact, had we had no more Australians than 20 or 30 years ago, we would need 20% more homes because we have more people living in either single or with a partner without lots of children. And so housing sizes are smaller, which is driving demand for more dwellings. Another issue that's a difficult topic for government to hear is taxation. Taxation, it varies by state, but generally speaking, 40% of the cost to build a home goes to various levels of government. And so one of the things that we engaged in with the Productivity Commission was that we need to look at our tax settings as a country. And right now, too much of our tax take comes from housing and from land as a proportion of total taxes. That is, I think, hurting and making the housing crisis worse than it otherwise would be. So there are a number of issues that need to get addressed here to enable more housing to come to market. Now, the one thing that, and I know there's been some dialogue around house prices in this committee over the last couple of days. One thing that has been true is that house prices didn't increase as fast over the last 2 to 3 years as construction costs. Construction costs really ran away. And so a little bit of house price inflation actually could make some developments viable that were not viable in the past because of construction costs. And I am aware of a number of developments that are planning approved up and down the country, where we have said we would be prepared as a bank to finance that construction, where developers have not pressed go because of economic viability concerns. And so to the extent there is some house price inflation, that could also, over the 2 or 3 year medium term, stimulate more dwellings coming to market, which could be positive.
Thank you. I need to just move on now to Member for Casey for his next 10 minutes.
Thank you, Chair. Mr. Irvine, as a senior leader, if your organisation was pursuing a long-term strategy and that was delivering certainty for your organisation, but it was the wrong strategy for the organisation and was leading to negative outcomes, would you look to stop, reassess and reevaluate and potentially change that strategy to deliver better outcomes for your organisation?
When we look at strategy, we tend to think about that in 3 or 5 year terms. I think changing strategy every year can be quite destructive to an organisation.
But if you had a 25-year target and strategy, let's say, and you thought that was causing damage to your organisation, you would look to review that strategy if it wasn't working.
We actually revisit strategy every year to just test that it's aligned to our medium-term objectives and doing what we want to help drive the company. So yes.
Sounds like sensible leadership, Mr. Irving. I'd like to move across to agriculture. I know you finance around a third of the country's agriculture. My community is a strong agricultural community. It's an important part of our nation. I'm proudly from a farming family which did, I double-checked, bank with NAB, and we're very happy with the service. I was hoping you could provide, given the insights, and I do know firsthand that your team work closely with farmers, given the unique nature of finance in the agriculture sector. I was hoping you could provide a bit of an update, can be very top line, on how the sector's going, some of the opportunities and potentially some of the challenges they might be facing at the moment.
Yeah, generally speaking, our agricultural customers are doing very well. Commodity prices have been constructive. Harvests have been good. The price of livestock is robust, and so I would say, generally speaking, our clients are doing well. There are pockets of areas due to either things like weather that have impacted them, so floods in Northern Australia, New South Wales and Queensland, droughts in parts of Victoria and South Australia, have made it difficult, particularly in Victoria and South Australia. Some of our customers were really struggling to pay feed for livestock, and that was difficult. But I do think that's a momentary issue, and those customers are being supported by our bank and will get on their feet in time. Australia's agriculture is some of the best in the world. And our farmers are very, very innovative. In fact, if I could think of any industry in our country where we have really good technology adoption and innovation and entrepreneurship, I'm hard-pressed to find a sector that does a better job than the agricultural sector. So, you know, it's something that we're immensely proud of as a bank, to support 1 in 3 farmers. And, you know, we hope to continue to do that.
I think you'll find, as a general comment, one of the reasons farming has to be so innovative is that they are price takers, as a general comment, particularly in a country like Australia where we're dealing with 2 major supermarkets. Could you just talk through a little bit, very quickly, I guess, the economics of farming in terms of, again, their costs? What are they seeing, or what are you seeing your farmers are undertaking in terms of cost increases? Because one of the biggest, or the biggest challenge for farming outside of the weather, which has been around forever, is that they can't control the price, as I said, that they are receiving generally in market. So what are you seeing in terms of the cost base, and what are the main drivers of cost increases for farmers?
I think when I talk to our farming customers, they would highlight energy and rising cost of energy as a headwind. They would highlight the cost of fertilizer and other input chemicals as challenging. I think they would highlight access to labour as a challenge, and having good, consistent access to labour. So, you know, these would be things that would repeatedly come up in conversations with farmers when I'm with them.
And I guess more a comment, I would note that fertiliser costs are also a byproduct of energy, given it is very energy intensive. So there is in many ways a double cost there. That's before you look at the cost of cool rooms and things like that. Would you agree with the statement that, you know, energy is at the heart of ensuring our farmers survive? Lower energy prices are at the heart of ensuring our farmers survive. And if we can't control energy prices for farmers, that will be felt in the supermarket every time an Australian buys a product.
Yeah, having secure, stable, reliable and affordable energy is important for all sectors of society, and I'd find it hard-pressed to find a farmer who wouldn't agree with that statement.
But would you agree they're particularly vulnerable? Given they are price takers, they have less ability to increase their price to a Woolworths or a Coles. They have no ability, to be frank, to increase their price to a Woolworths or Coles compared to housing we just talked about. If the raw material costs of housing increases, they have the ability to increase the price to the consumer. Given a farmer does not have that ability, they are even more vulnerable to price increases for them personally, and then their flow on suppliers, whether you look at fertiliser, packaging, etc., etc. They are probably the most vulnerable community in this country in terms of a business sector to higher energy prices. In my opinion, I'm interested in your thoughts on that.
I think that's a hard comment to disagree with. Farmers are working really hard to improve yields, innovate on managing their costs and optimize their costs, and they're generally very, very good at that. But your point around them being price takers for commodity prices is a fair one.
And one of the trends we're seeing in the farming community across the country, I'm seeing and talking to many farmers, is we're losing generational farmers. So, in many cases, children aren't going into the business, and there's a consolidation of farmers. And in some industries, we're potentially seeing 2 or 3 large suppliers then dealing with one or with 2 large corporations, being Woolworths and Coles. Now, my theory of that trend, 2 questions. Are you seeing that trend? I'm conscious it can be anecdotal for myself. And if that trend continues, I see a risk for us as a nation that we have 2 or 3 big suppliers in each category, let's call it blueberries, 1 or 2 large corporations on the other side. The natural result of that is a comfortable higher pricing structure that costs the Australian people more. And if we don't, and the reason I ask that is because many of these farmers are getting out because of these rising costs, energy and other things. They can't survive unless you get to a certain scale. So I'm interested in your thoughts and any commentary you could add to that.
We have seen some corporatisation of Australian farming at the top end of town, for sure. So farms have generally gotten bigger and more sophisticated. Now, will that lead to higher prices? I'm not sure that's a leap that I would necessarily make, because there'd be economies of scale, adoption of technology, and other innovations that maybe larger farms are better able to pursue than smaller ones. So I'm not sure I would have the fact base to support higher prices from that. But it's also true to say that I have seen lots of examples up and down the country of farmers passing on farms to the next generation. And that gives me real hope that we'll continue to have a very vibrant, family-driven agricultural sector that's been the heartbeat of regional Australia for a long time. What's also pleasing is I'm seeing more women moving into farming and agriculture, which is really, really pleasing. I think it probably had been really a bit of a male bastion, and I can't tell you the number of agricultural customers I've visited where they're essentially led and run by women, which is just lovely to see. So I don't think all hope is lost on that. I think that our agricultural sector is still vibrant.
Oh, absolutely. And as someone that is proudly I won't call myself a 3rd generation farmer because that wouldn't be true. I'm not out on the farm, but as someone that's part of a 3rd generation farming family, it is so important that we continue that, and that is one of the fears I have, and that we need to feed the nation. I have other questions, but I'm conscious we are close to time, so I will just finish by saying thank you for servicing agribusiness, and I urge you to continue to service them the way you do, because they are so important to the country, and I will be watching.
Rolly, my tyrannical chairing has seen my name ripped off Christmas cards off the country, so I might move now to the member for Deakin for the final 10 minutes, and then we'll have a shortened break and resume at 3:30. Over to you.
No problem. Thank you, Chair. I read media reports that NAB has experienced some outages with some of its technology, including, I think, 3 hours out on its internet banking in October. I was wondering whether you found out what the cause of that last one was in particular.
Well, we're actually very pleased with our outage experience over the last few years. Our head of technology and operations, Patrick Wright, has been with our bank since 2018. And over that period of time, the number of high and medium ferocity or outages has reduced by around 80%, which is a terrific achievement. A big part of that is because we've moved over 90% of our applications to the public cloud, and the public cloud has much higher levels of resilience than was typically the case in our own environment. And more recent, we have 3 public cloud providers, and we're able to move something like 40% of our compute across those 3 cloud providers virtually instantaneously, which gives us significant redundancy. But it's also true that in any tech-intensive organization that now and then you have outages, and we have had outages. We're very conscious that, if anything, the single biggest thing that our customers dislike is when they can't use their bank's services. And so we really seek to minimize any outage. And I'll tell you, there's a learning review done on every single time there is an outage around why it happened and what can we learn to ensure that that particular outage doesn't happen again. Peter, I don't know.
If you're not comfortable telling me about the one in October and understand why, could you give me assurance that you know the answer to what happened?
Mm-hmm. Yes, we do.
You do?
Yeah, I mean,
excellent.
It was a simple coding error. I'm pretty sure from memory it was a simple coding error that should have been picked up and wasn't. And as Andrew said, you know, we every time there's an incident like that, there is essentially what we call a major incident review, where all the teams get together. What happened? What did we miss? How can we make sure that doesn't happen again?
Unfortunately, I'd say at least 8 out of 10 instances where we do have an outage are caused by change initiated by the bank. Now, 99% of the changes we initiate go through flawlessly, but the quantum of change in our technology environment is significant, as we're always seeking to improve, and that change is the biggest cause of issues in terms of production uptime.
As you pointed out, there has been a lot of change. Some recent commentaries also pointed out in the environment where there's increased cybersecurity risk and things like that, some financial institutions still have legacy systems that haven't quite gone up to date, and that is creating a vulnerability. Has there been a focus on work to make sure that legacy systems are being brought up to date, along with all this exciting AI stuff and things like that? Because obviously the weakest point is what we need to eliminate.
I can tell you with absolute certainty that there's nothing I'm more focused on than keeping our bank and our customers' information and money safe. And that's true of me, it's true of my management team, and it's certainly true of our board of directors. We know the threat vectors are ever increasing, and we work tirelessly to ensure that our capabilities, our perimeter, and any vulnerabilities that we identify are addressed as quickly as possible. And to be fair, we have a regulator that also impresses that upon us very consistently.
Have you found the regulators and cybersecurity supports from government helpful and facilitative?
Yeah, I am actually personally on the government's cybersecurity council, and I think the way that we are moving forward with a kind of Team Australia approach with government, ministries, telecos, and banks working together to make Australia a stronger, defensive, and harder to penetrate country it's going very well, and we need to continue to do that. But I applaud the way that things are being done in terms of cyber defences to date.
Keeping on the theme of a cooperative spirit, regional banking branches are obviously proving a bit of a challenge for the industry to make sure that we're sustaining the full suite of regional services. So big cash floats can be collected by the RSL and the like. How is work going with the sector to ensure that there is continued presence of full bank services across the regions? Yeah.
And this has been an issue for banks for quite a long time, as the number of in-person transactions has fallen year over year, and more people are using digital and mobile ways to do their banking. Some things that are, again, a little bit different for NAB than maybe some of the other banks. We have more of our branches in regional Australia as a percentage of our total network than any other bank, maybe with Bendigo. A reason for that is we're a very big agriculture bank, and so regional Australia is significantly bigger for us commercially than it is for other banks. So commercially, regional Australia is very, very important to us. And if anyone who lives in regional Australia, you'll likely see our NAB vehicles driving around all over the place. We're a big part of towns in Australia up and down the country. I'd also say that we've gone to a place where you're going to see far fewer branch closures from National Australia Bank going forward. In fact, at the last count that APRA did, I think the industry closed 150 branches. We closed 3. And repeat that number, please. The industry closed 150, or a little bit more. We closed 3.
Thank you.
That is not necessarily because we're just being great citizens. It's because we view branches as commercially important to our service proposition. And, I feel that branches have a significant role to play, and we're going to continue to invest in them. Now, I am also aware that there has been an industry peer who's extended their moratorium on branch closures. I'm not sure that's something that I think we would be keen to adopt. And that's not to say that we intend to have significant closures. That's not the case at all. But I just want to make sure that our branches are in the best possible places and they're being used well. And right now, I was just looking at our transactions per branch in the last few weeks and months, and we have some branches that aren't being used by customers. One branch in particular was being used about 3 times an hour by customers. It's just not getting the outcomes that I would want to get from a regional branch. And so, would I want to close that branch? Yes, I would. And maybe I'd like to open another branch in another regional town that would get far more usage from customers. So I'd like the ability to run the business well, but I can tell you with absolute conviction that we think branches are incredibly important. We are committed to regional Australia, and there will be no mass branch closure event while I'm in charge of the bank.
Do you think there are alternative service delivery models for some regions? Like one of your colleagues from another bank raised the potential for a single kind of location to be used by multiple bank organisations for customers come in. Obviously, then you have the vaults and all those things you need to be able to deliver large-scale cash services. Are you exploring alternative models for service delivery beyond Bank of Post, which obviously has an important role, with colleagues in other banks?
We are actually, and there's a live project that we're working on with our ABA peers. I'm still the chair of the ABA, so this is something that's been a bit of a passion project for me, and it's specifically with regard to multi-deposit ATMs. So let me explain what that is and why it's different from anything that we've had in the country today. So today, if you walk to a NAB branch and went to the ATM, any customer of any financial institution could withdraw cash from my ATM and I wouldn't charge them a fee. But only National Australia Bank customers could deposit into that ATM. and that would be true of any ATM in the country, that only the customers of that ATM's bank could actually deposit. What we are trialing that's completely new to the country is a multi-deposit ATM, that if we put it in a rural town or a very rural town, would, I think, have a big impact, because it means that every bank customer in that town could both withdraw and deposit funds into that ATM and get essentially instant credit. And that's, I think, a really big deal. You know, if this works and customers use this ATM capability, I think that's something that we could deploy more broadly and significantly increase access to cash from both a withdrawal and a deposit standpoint across regional rural Australia.
Tremendous. On that point, we'll now break until 3:30. We will return with the member for Wentworth asking questions and then go back to the member for Deakin. Thank you. Wentworth for her 10 minutes of questions. Over to you, Allegra.
Thank you so much. I wanted to continue on a little bit on the conversation we were having earlier about access, about businesses and growth, but also a bit more about the sort of regulatory settings. Perhaps starting then with banks' regulatory settings. There's a bit of a discussion around regulating for growth as well as regulating for risk. I know one action that the government has taken has been to establish a regulatory grid for the sort of finance sector. I'd love to get some feedback in terms of how that's going and where you see opportunities for it to go further if you do see them.
Yeah, I think the notion of a regulatory grid that simplifies the regulatory posture is something that we're very much in favour of. I would say it is still early days. There have been specific areas where we are seeing some emerging outcomes. For example, around data requests, we get very significant requests for data and information from many of our regulators, and often those data requests are duplicative, slightly different, and add much more excess workload for financial services players. And so that's an example where we're seeing some emerging improvements. But I would say it is still early days. As an example, at our bank, just this year, we have had over 800 changes to the obligations that we need to satisfy from all the regulators that we need to comply with. Maybe 300 or 400 of those are net new obligations, and the rest are changes. And so, whenever you have that velocity of obligation issuance and also requirement for compliance, that's a significant burden on business and industry. And I think that we're a big bank, but when I talk to my customers up and down the country, we do hear that from many small business, medium business, large business, that this is an example of things that add to cost and cost of compliance. And so, I think having a high bar for change and for new obligations and ensuring that they are required to get good, strong business outcomes, I think is something that we would encourage more of.
And I guess if you were seeking evidence of a change of culture, what would you look for? Because I think as someone who has, I think he was a bank CEO who said regulators have no natural predators, which is one of the things that has amused me as in terms of an expression. But I think more broadly, it's a challenge in public policy to sort of measure if we're actually making progress on something like right-sizing regulation. And so I'd be interested from a bank's point of view, how would you assess that either from your customer point of view or your own point of view to see whether we are making a sort of better balance of regulation and risk than we have historically?
How would you answer that, Peter?
Thank you for the question, Ms. Bender. I mean, there are I think probably a couple of data points that I can offer. We responded to 91 consultations last year, and as Andrew mentioned, there's 800 obligations, which is probably about 20% turnover in the total number of obligations. So, Chair, you mentioned at the beginning, and we responded about we need to be relentless and ongoing on managing risk culture and governance. That's because our organisation is not static. It's changing all the time. People are changing, systems are changing, processes are changing, obligations are changing. So in terms of what would help, I think it is, obviously it is good to be consulted, but can that, is the velocity or the volume of consultations potentially, as well as reporting. We are, there is reporting that commenced during the COVID period, which we're still doing. So, the ability to withdraw the need for reporting that served a valuable purpose at a point in time. Is there still a valuable purpose in the effort that goes into producing that reporting, and it goes to Andrew's point about productivity. It's just one more small drag on the productivity agenda.
An example I might offer on the risk of performatory legislation on obligations. I was out visiting a customer maybe a year ago that was a food manufacturer, and it's a small business. They were a South African couple who'd emigrated here maybe 10 or 15 years ago, and they manufacture essentially food from home for the South African community in Australia. And the specific issue that caused them real stress in their business was that there had been a change in the requirement on the size of the font on the label for the food that they sell. And unfortunately, the printing capability that they had was not able to deliver that new font. And so this is a small business that turns over, maybe 700,000 or 800,000 a year. And that change forced them to buy a $60,000 printer that added nothing to their customer experience or how they run their business. It was a real cost impost to them. And in that, did the person who was making that change in obligation in a government who was probably very well intended, did they know and were they aware of the consequence of that small change? And I give that as an example because it's exactly the type of thing that small business owners up and down the country regularly complain about. That makes it harder to do business here.
Yep. Okay, thank you. And I have many sympathies for that sort of, as you say, for that change, which is probably well-intentioned, but obviously has real-life impacts. My question then was just sort of to follow up on some of the comments you made earlier, was about the productivity of capital. You pointed about, we talked about labour productivity, and you were saying the productivity of capital is an area that we're not thinking about enough. Where do you think the opportunities are for productivity of capital in the economy that we're not realising?
Yeah, let me again provide some global context, and then we can go into that specific question. So given how Australia has adopted Basel III and essentially what we call unquestionably strong framework for our banking industry, what that means is that we hold higher levels of capital for Australian banks than you would have with international counterparties. And if you compare us with, say, the US, which has a very deep capital market, so one could argue that's not a fair comparison. But just for me to bring this alive for you, if we were a US bank with the amount of capital that we hold, we could probably lend between 30 and 50% more. So in terms of the productivity of $1 of our capital, it's 30 to 50% lower than it would be the case in the US market. Now, as I said, there are, I think, some good reasons for that to be true, given that we import capital at the bank level, and we're obviously a smaller, medium-sized nation and don't have the depth of the capital markets than the US does. But as I said at the beginning, I do think there is a dialogue and a debate to be had around whether the calibration of our settings is right, and are there areas that we could or should be tweaking, and I think a place to potentially push would be around business lending, and do we have the right risk parameters and capital weights for different sectors and different types of lending, and are we happy and good with our calibration and settings versus where they otherwise might be. So I just wanted to share that as just some perspective, and there are always trade-offs here, because if you move and tweak that calibration, you might see on the margin a little bit more probability of default, which could create more loss events over time. You could marginally increase the risk, and I think this would be very marginal, of possible bank failures, which you don't ever want to see. But these are, I think, the things that you need to always be weighing up as a society. We take it for granted that we don't have bank failures in this country. The US has them quite regularly. I wouldn't want to live in a financial ecosystem where that was the case. I think that's very stressful for depositors. And so this, I think the sanctity of your deposits always being safe in an Australian bank is a very important parameter. But this is a good place to spend some time as a country on whether or not we've got our settings exactly right.
Thank you.
Okay.
Thanks very much.
Well, thank you. I will pass it back to the Chair. Thank you so much for your time.
Thank you very much. And I'll now hand over to the member for Deakin and then go to the member for Bowman.
Thank you, Chair. I was wondering if you could update the committee on the work your bank is doing in relation to customers who may be experiencing financial abuse.
Yes. In fact, I have some... we were the first bank, I think 4 or 5 years ago, that introduced monitoring on financial abuse within payments. I think we see something around like 170, 180,000 cases a year of abusive language associated with a payment. So what we do in that instance is we provide a written warning to the customer, and thankfully when we do that, well over 90% of customers cease and desist from doing that. If they do not, we would then move to seeking to exit them from the bank because we simply have no tolerance for that type of language being used across our platforms. We also have spent significant time training our workforce to be able to better identify possible cases of financial abuse, be it elder abuse, partner abuse, domestic violence, and there are a number of potential vectors there, frauds and scams as well. And it's difficult, especially when the abuser is a family member and in a position of trust. And so that can be quite tricky and quite challenging. We also, as a bank, have grants that we give to people who have suffered financial abuse. These are grants that do not need to be repaid, in the kind of $2,000 level, but they, at the time of need for a potential victim of financial abuse, they can be life-changing for them. And so that's also something that we've been really focused on. This is a dynamic and evolving place, but we see some heart-wrenching stories of our customers being victims here, and we do our best as a good corporate citizen to try and help wherever we can.
So you were saying, and quite understandably, that the scenarios where it is a family member doing the abusing, perhaps they've got a power of attorney, that those are tricky situations. Can you outline any things you can and have done in that space to support individuals?
Do you want to take
that? So thank you for the question, Mr. Gregg. We've got a specialist team that's been trained to deal with this. They call the Customer Support Hub to deal with these particular sorts of circumstances. One of the measures that we've put in place is that in particular circumstances, say for example domestic or family violence, where an account might need co-signatures to operators, we've got circumstances in which we can enable one person to operate that account safely to access funds would be one measure, an example.
So that makes it easier to get the money.
Yeah, so so they can access their funds. If they might normally require the permission of what might be a violent partner, for example, and they're in shelter, there is now a process that we can work through that will enable to access their funds without having to get the co-permission, if you will, of that alleged domestic violent partner.
So what about a situation where the person in the position of power holds a power of attorney, for example, and is clearly trying to facilitate a transaction that makes no sense, like a child of a client is trying to withdraw $200,000 or move it into their own mortgage account?
We watch that. we have significant transaction monitoring around that, and we see elder abuse, where children, frankly, are sometimes looking to extract funds from vulnerable elderly parents. Again, we have a specialised team that looks into that, and it can be very difficult, and some of those conversations can lead to violence in our branches and those types of things too, which are really difficult.
So you mentioned that you're training staff to spot abuse. Is that training delivered across kind of reporting lines, all customer-facing roles and management? Which parts of your team are given that training?
I think all staff get mandatory training on financial abuse and spotting financial abuse. Then staff members that may see it more frequently would get additional training. And then in addition, we have this specialist team that deal with that all day long, and they would be our most advanced people in this area.
So colleagues can call them and go, look, well, this is the scenario, what do you think I should do, as well as that? So in that space, is there also the monitoring that you're using for that? Is that also applied to mule accounts to see if transactions are a bit sus, and so you can intervene?
Mule accounts have been really, really difficult for the industry. And there are times where mule accounts are mules at the time of origination because there's been identity theft. More often than not, accounts that were legitimate and in good standing become compromised, again, through identity theft. People, unfortunately, disclosing credentials that they shouldn't have done. And more recently, we've seen a significant increase in accounts being sold. We see that with foreign students leaving the country who have opened legitimate bank accounts. They're now leaving, they've done their studies, and it's a quick way to earn $100 to sell your account. You can go on to certain social media platforms and in the broad light of day see advertising for, buy a bank account. That makes things really, really challenging for us because, you've suddenly got an account that is going to start acting differently, and then we need to potentially create friction and block payments if we think something's going wrong. And unfortunately, we do that with legitimate accounts as much as mule accounts, and it's one of the areas where customer complaints have been rising, where we may have felt that an account might have been a mule because we're seeing practices changing from precedent where it actually was legitimate. And so this is an area we're constantly tuning our algorithms to get better. Pleasingly, in the last year, I think we were the leading bank in terms of identifying mule accounts and shutting them down. And we're going to continue to push in really hard on that because it's hard to scam customers if you've got no account to put the money to. And so that's a key vector for us to increase the safety of Australians, is to be a really difficult bank for mules to use.
Are you seeing business accounts misused as well, either through just false merchant coding or transfer or theft of businesses' accounts?
So business email compromise, for example, yes, that is possibly this after investment scams. That's probably the second most significant vector of scams and fraud that we see, and our frontline bankers regularly are working with our customers and identifying opportunities and reminding them if one of your suppliers is asking you to send money to a new bank account, for example, they've changed their bank account details, that's a trigger that you absolutely need to check. But that is a very significant vector of financial crime.
We're constantly educating our customers. We had a very large payment go through. It was actually in the public domain, well over $100 million. And it was a case of invoice fraud. And in this case, the company thought it was a bit of an odd one because the accounts had changed. But where they made a mistake was they called the number on the fraudulent invoice. and essentially corroborated that the invoice was real with the fraudster. Not the phone number that they had on file. That was the miss. And so we're constantly educating our customers to be vigilant here. The concern on the business side is that the amounts are bigger. And so the potential gains for criminals are larger. And so they're naturally drawn to businesses versus consumers because of the prize.
Are business bank accounts themselves being misused?
It's possible that business bank accounts themselves are either being used by mules or by organised crime. Again, we work really hard to identify that, work with police and with Austrac. But, you know, these criminals are sophisticated. They have, you know, high needs for earning, and they are relentless in pursuing opportunities to capture our hard-earned money.
Thank you. Member for Bowman.
Thank you, Chair. I just wanted to dig in a bit further to some of the answers that you gave to questions that I asked and some other members asked around the obstacles in the way of greater level of housing construction and greater housing supply. Mm-hmm. You mentioned planning approvals or, you know, regulatory hold-ups. I'm just wondering if you had any, and feel free to take this on notice, but do you have any particular insights as to where in the planning process that's occurring? Is it at the local level? Is it state level? I've got a lot of ones in my electorate that are held up through EPBC issues. Keen to get your perspectives on that.
I would say both. I think the predominant areas where we see significant friction is at both the local government and state government level. You know, there's very different levels of housing approval velocity at the local government level, and I think having more transparency around how local governments are doing on approvals, approval timelines, the amount of conditions that they are setting on developments would be really helpful because I don't think there's sufficient accountability around that. To give you a great example, I had a client in Sydney who was looking to get a development built nearby one of the new railway stations that are being approved. And this would be a classic example of where you would want high-density housing. They applied for a building that would have 30 stories, and I think they got approved for 8 or 10. And that's a terrific example of what not to be doing, because you actually have a location that can support density because of that train station. And so, you know, there's just, it's an approach of all the things that I can do to stop development versus asking yourself, how can I enable this to get done? It's kind of changing the mindset in our planning teams, both at local and state government, that I think would be helpful.
Do you maintain any data on that? Do you have any sort of metrics by which you're measuring that, or is it just a pattern that you've noticed?
Well, we certainly hear lots and lots of anecdotes, but, you know, I wonder if we could get information on, you know, how many development applications would have material changes required as a result of engaging with planning departments. You know, it's another area of transparency that I might encourage local authorities as well as the states to start showing.
Yes, it's an interesting one because it's one of the most vexed challenges that we face as policymakers. Yet it's one of the areas where we have the data is actually very opaque, particularly across all levels of government. But I was intrigued to see whether you had anything from your customers. But if you could maybe take that on notice, that'd be helpful. We can find that. The other one, can I just one quick one on that one before I move on to something else? Are you noticing a difference in the infill versus greenfield approach? Is it more apartments that are being held up? or is it across the board?
No, it's across the board. Yeah, we need more medium and high density, so we need more apartments and more townhouses. Those will also help with housing affordability and intergenerational inequality, because those dwellings are more likely to be lower cost. And so the more dwellings like that that we can deliver, I think the better it will be, because, we need to get Australians into the housing ladder. And, in most parts of the country, it's going to be in apartments or townhouses that people will be buying their first home.
Oh, absolutely. And you also mentioned about the need to get the balance or the focus right in terms of what skilled occupations we're bringing in through our migrant channels.
Yeah.
And you mentioned the significant lack of or the massive gaps that we've got in construction. Are there any other areas where you're noticing through the insights of your customers that where we are falling short in terms of skills?
I think STEM is another area. Science, technology, engineering, manufacturing. Australia is still not producing sufficient quantities of STEM graduates from its universities. So I think that's an area where we could push into. Construction certainly was an area. Hospitality 2 or 3 years ago was a big shortage because we had so many people leave our shores during COVID, but I think that's been addressed now. But the point I would make is that as a country, we should have a very dynamic immigration setting. And I think Canada is a good example of a country that's done this quite well, where every year you look at your economy, you look at the skills that your economy needs to grow and prosper, and then you're adjusting on some sort of point system the migrants that you want to be taking in more of. And so if you need more people with construction skills, you essentially should lower the bar for those people so that you will get more of them. And then when you have sufficient quantities, you can raise the bar and skew to other areas that will help drive your economy. So I think having a more dynamic focus on the skills the economy needs and adjusting regularly so that we get those people into our country would be really helpful.
Excellent. In your view, what regulatory and policy settings would best support the safe and responsible and accelerated AI adoption across Australian businesses? We talked a bit on AI, but I'm really keen to dig in a little bit deeper there. I'm assuming your instinct would be don't over-regulate it too quickly?
Yeah, for now I'd say less is more. And let's avoid over-regulating. I was at a panel a year and a half ago, and a question was asked about one of the panelists around where do you think Australia could lead in AI and AI adoption? And the response from the panelists was in regulating AI. And that wasn't the answer I was hoping to hear. I think that for now, I think we should let it go and watch it carefully. Because I worry that the harm of overregulation would significantly outweigh the harm of any possible impact from AI as we go. But we should stay very alert to that, watch it, and then see how it goes. Europe is a great example of what not to do. They introduced some pretty harsh privacy and data laws that really froze the adoption of AI in that market and essentially gave it to the Americans and the Chinese. And so we should be very careful not to do that.
Okay. Thank you, Chair.
Oh, tremendous work. Well, I'll hand over to the member for Reid, and then I'll go to the member for Casey after that.
Thank you. And I wanted to pick up on a through line that I sort of saw with your vision for being a energy superpower and the points around housing. And it struck me that really the piece around approvals and planning for both of those grand visions was what was holding them back. Do you think that there is some urgency? There is a debate at the moment around environmental reforms, and part of that debate is that these reforms should make it, if they are passed, easier to get approvals for renewable energy projects and housing projects done faster. Is that something that you think would benefit both of those grand visions that you've outlined?
I think so, yes. I would also add mining and minerals as well to those two in terms of planning and approvals, because there's significant value that our country could get. We have a lot of the resources that the world needs to decarbonize. Copper for conduction, uranium, lithium for batteries, uranium for nuclear that is being adopted in other jurisdictions, rare earths.
Yep.
And so we have a lot of what the world needs, and we've got to get it out the ground. And that's particularly important because the two resources that have created most of Australia's wealth over the last 100 years, coal and iron ore. Iron ore, the quality of the ore in the Pilbara is depleting. And now many of the Chinese refineries need African ore to be mixed with Australian ore to get to the right levels of quality, because we've been mining those bodies for so long. So iron ore is going away, slowly, but it's going to be less of the driver for our country's wealth over time than it has been. And then coal, because of the thermal carbon component of thermal coal, is going to start to become used less and less. So we need new sources of minerals. And we have them, we just got to get them out of the ground. And one of the things I hear from many of our mining clients is that, again, it takes something like 20 years for a mine from conception to actually producing. Recently, Canada has an existential crisis right now because of the economic impact of their southern neighbour to their economy. But the Prime Minister there made an announcement that he wanted to halve the time for a mine to go from conception to production and be a destination of choice for global mining companies to attract capital to Canada. And when you think about Australia and the resources we have, that type of commitment, I think, would be terrific. What I would say is that in the last year and a half, I feel unambiguously that we have a government that now understands how important the productivity of our country is, and that things need to change. And that is a very significant change to maybe where we were 5 or 6 years ago, where I think people were not yet accepting the fact that we had a problem. And now we do. What we now need to transition is from acknowledging and being very aware of the fact that we have a productivity issue to actually really doing something about it and moving from knowing it to acting on it. And I think, I don't think I'm speaking out of turn when I say that it's still early days in moving from knowing to acting.
We have those environmental law reforms that are being debated in the House at the moment. Would you say that if they were to get through, get passed and start to get implemented, that will be a huge driver for productivity?
Yeah, I think a simpler legislative environment will be helpful. But we also need to hold people who are approving things accountable. One of the things that I hear is that there's a lot of duplication between federal and state permitting that is likely very unnecessary. And so why are we forcing in either housing, in energy, or in mining and minerals, forcing companies to get the same approval twice from different places and from different people? And so that duplication and overlap is a problem that we need to lean into as well.
I just want to ask you about a bit of a sort of tangent to your housing discussion. And my view is that in Australia we are not good at getting people into the appropriate homes for their stage of life. And I am thinking in the sense of those who want to downsize, you know, empty nesters and they want to downsize. There are so many kind of friction points and barriers for them to, you know, they've got to sometimes take out 2 loans at the same time if they haven't sold their family home. What is it that we could be doing to make that transition for downsizers
easier?
Easier, yes.
Yeah. Well, I would go back to our tax system is probably one of the biggest impediments. Stamp duty is very significant. And so the transaction costs involved in selling and buying property are really material. And we do hear from many of our older customers that it's an impediment to them making the decision to downsize because of the transaction costs involved. And so, you know, could you look at if you have people over a certain age who are looking to downsize to a smaller property, could we have a tax concession for that? That's an example of something I think as a policy setting we should evaluate, potentially pursue, because what it would do is it would optimize, to your point, optimize our housing stock. The best way to get more Australians into homes is to optimize the housing stock we have. And so having empty nesters in big houses is not the best optimization of our housing stock. So I think it's something that could be interesting to pursue. All these things have costs and consequences. Yeah. But I do think that is an example of the type of issue we face as a country.
Have I got time for more questions, Chair?
Just on 3 minutes.
Okay, great. Just wanted to kind of move into scams. We are operating now in a very sophisticated environment where the individuals who are being scammed, there is a huge power imbalance, and you know, I genuinely feel for those who have been victims here, and I recognise all the work that the banks have done in being proactive. There is now so much sophistication that there's a lot of kind of cloning of legitimate websites. So there would be cloning of NAB banking websites that these victims would go in and try to do due diligence on. What are you able to do proactively to identify these sites and prevent them?
Yeah, that's quite hard. We had, with Meta, an example where we were made aware of fraudulent credit card offers being advertised on Meta platforms, Facebook and Instagram. And essentially it was, you know, a $200 annual fee for a card that was giving an enormous amount of loyalty points associated with that card that were like pretty unbelievable, you know, $1,500 worth of value. And we knew, we asked Meta to shut that down. And they did, but what we found up is it was popping up like weeds all over the place. And as soon as we got one shut down, 5 other ones opened. And this is the root of the problem that we need to get our digital platforms to solve for. And I think it's very important. In Australia, as a bank, if you want to open a bank account, I need to verify your identity and I need to know that you are you. And in the vast majority of instances, we do that and we do that effectively. And in fact, we have an ongoing obligation of perpetual KYC where we routinely make sure and update your information, your details, your home, and all those types of things. And more recently, we're asking our customers to actually do a live selfie to ensure that they're a live person when they're opening products. I contrast that with digital platforms where I can open up a digital account with a username and password with impunity. And in fact, I can open up thousands, nay, tens of thousands of accounts with all sorts of usernames without verifying my identity. And this is a problem for cyberbullying, for frauds and scams, for all these types of things. And I feel very strongly that the digital agencies should have an obligation, just like we do, to KYC people who are using their products and services. And it would create for a much safer environment for our children who are using digital platforms, and for everybody involved. And it would make far and away the biggest difference to frauds and scams, because the vast majority of those originate on those digital platforms. The problem that you have is it's economically problematic for those platforms because they make a lot of money based on these advertising for these criminal activities. And so it's not in their self-interest to do so. And because most of those are large international companies, we haven't yet made impacts. But when you look at what the government did recently around young adults not using digital platforms, I think that's a world-leading policy setting, and I would encourage our government to push into this one and see if we can be one of the first countries in the world to increase our requirements for digital platforms to improve their KYC capabilities.
Okay, thank you for that. I'll go member for Casey, member for Moreton, then myself, and then we will, just because of how tough I've been on the time, we'll have, if there are any urgent questions that you want to put to the witnesses, we'll have time for that. So over to you, member for Casey.
Thank you, Chair. Mr Irvine, I believe you've got a $300 million partnership with the Clean Energy Finance Corporation. Can you just talk me through that partnership and what that involves?
Yeah, in fact, I might ask Peter to talk to that.
Yeah, no, thank you, Andrew. At a high level, there are two products that we've agreed with the Clean Energy Finance Corporation, where that we offer to customers, and there is they provide I guess a rebate in terms of a lower margin to the customer. So it's essentially we have partnered with the Clean Energy Finance Corporation. We offer our products to the customers, and the CEFC then provides almost like a rebate, if you will, to our customers.
So does the $300 million end up? It doesn't end up with the customer as such. It ends up
reduced interest margin for the customer. Yep. So I think the two products that we have are an agriculture loan and an equipment finance loan.
Yep.
And in both cases, if the customer application complies with the clean energy setting, it means that we are able to offer a lower interest rate.
So the customer gets the lower interest rate. Is your margin still protected, in essence? Is that $300 million ensuring that your margin doesn't change? So if you were, let's use the EV cars, if you were loaning the $10,000 to someone to buy a combustion engine car, and you're loaning them $10,000 under this scheme, is your margin the same? Is that $300 million essentially covering your margin?
We can fact check that, but my understanding is that it is, and that it's the Clean Energy Foundation that's funding the
so it's the Australian taxpayer is, because the Clean Energy Finance Corporation is the Australian taxpayer. So I guess what I want to understand then is, given NAB's profit was $6.989 billion last year, given we hear this argument that you need certainty on net zero by 2050, and given you as an organisation are committed to net zero by 2050, and that certainty apparently is important for your planning, why is the Australian taxpayer having to pay $300 million to your organisation to protect your margin on a goal that you want to achieve? You know, why do we have examples where Fortescue is delivering a $5.2 billion profit and receiving $45 million of taxpayer money, as per media reports, to look at solar? So there's collectively almost $12 billion in profit, yet the Australian taxpayer, just in these two examples, and I guarantee I could find more, are looking at $345 million, given your organisation has a stated goal. Wouldn't you be prepared to take that margin? Why should the Australian taxpayer?
I think that's a good debate to have. It's for the government to determine why they have programs running like that. My suspicion is that they want to encourage transition, and so much like the rebate for household batteries, that is a current program that's stimulating more uptake of that particular program. And so, that must be one of the drivers as to why it's happening.
So given your organisation is committed, as you said, to net zero by 2050, if there was no taxpayer money available for this kind of program, would you still, as an organisation, to fulfil your commitment, reduce your profit margin to support that uptake?
Well,
or is it completely contingent on taxpayer money? And if it's completely contingent, then you don't need the target.
Well, I don't think it's completely contingent. There are global investor pools out there that are keen to invest in decarbonisation. There are super funds in Australia that are very strong in their green credentials. There are global, particularly European funds. Norway is a good example. And so it's possible that we could present an economic case to those investors that, we're originating a flow of business that they like a lot, that they might be able or comfortable with a reduced return for that. So it's also possible that we could raise finance from specific investors that could enable that. So I wouldn't say it has to be government. Ultimately, to date, we as a bank have what we call transition plans for our top kind of 200 emitters, where we work with them and we give both incentives to people who are meeting targets, as well as potential penalties for those who aren't, to encourage them to meet their commitments. It's not happening yet, but I think it's quite possible in time that carbon intensity becomes a key risk parameter in a bank's adjudication settings. And just like any other risk parameter, that can therefore drive the rate of interest that we would seek. So we're not yet doing that with mainstream businesses or even mainstream households.
Just conscious of time, Mr. Evans, thank you on that one. And you can take this on notice, and we'll put all four banks on notice with this. Are there any other taxpayer funds that your organisation is receiving as part of decarbonisation, et cetera, et cetera?
I'm not aware of any, but we will take that away and come back to this committee.
Because I think the Australian people would be staggered to learn that $300 million of their taxpayer money is going to an organisation that delivered a $6.989 billion profit last year. But I understand that's a government decision and a government setting, not yours. It's not a reflection on you as an organisation. You're operating within the parameters that the current government have set.
And to be clear, we don't get that money. The customer gets the benefit of that.
But it does protect your profit margin. So we can split that many ways. On green hydrogen, ironically, Fortescue actually owe the Australian taxpayer $45 million for their failed green hydrogen plan. We're still waiting for them to confirm when they'll return that money to the Australian taxpayer. Have you previously invested as or supported financially green hydrogen projects, and are you looking to continue to invest in green hydrogen? And if not, why not?
I'm aware of one transaction that we have funded in the green hydrogen space to date.
Was that when was that funded?
Relatively recently, but I'm not comfortable disclosing the customer.
Yeah, no, understand. In terms of nuclear, would you support removing the nuclear moratorium? And given nuclear is a zero emissions baseload power, if the moratorium did not exist, would that make it possible for private businesses and the marketplace to undertake business cases to see whether the financial situation stacked up in the current environment?
Look, I made some points on nuclear earlier in my testimony regarding the fact that, you know, if we do look at it, that I'd like it to be very fact-based and science-based, and based on economic rationale versus it being politicized, which my observation over the last few years, that whenever we have a discussion on nuclear, it's highly politicized on both sides of the argument, not just on one side of the argument. I think as a bank and private industry, if ever there was something that was legal in that jurisdiction and economically viable, that private industry would choose to participate in it, and we as a bank would likely lend money to it. But that's pretty hypothetical until that is in fact the case.
So you couldn't do a business case to understand if it stacks up commercially while the moratorium's still there? Yes.
Yes.
Thank you. Now, Mark Vassella, the CEO of BlueScope, has said that, I quote, Australian manufacturing is at a tipping point. Energy costs are 3 to 4 times higher than the US, and what was once our competitive advantage has gone. The Deputy Chair listed other examples, so I won't repeat those for time. Given that high energy cost risk to manufacturing, and given manufacturing is a highly capital-intensive business, I'm assuming your organisation will be lending significant funds to manufacturing organisations. Are you reassessing your risk profile for manufacturing businesses? And if you are, like, what is the long-term implications for Australian manufacturers?
I mean, we are still lending material amounts of money to manufacturing, and it's a significant sector for us. But it's also true that the borrowing capacity for any client is driven by their ability to service the loan. And so to the extent that they have input cost pressure and earnings are falling, that would mean that their ability to borrow would reduce over time.
Yeah, perfect.
Thank you. I'll hand over now to the member for Moreton for 10 minutes.
Thank you, Chair. I was just going to start with energy policy, where the previous member was talking a bit in his last set of questions. So in terms of energy policy certainty and stability, is it your view that certainty and stability in energy policy is important to the NAB?
I think I was asked the question by a previous member of this committee, yes. and I responded to say that I think, on balance, businesses like certainty, and capital wants certainty, because the costs of these projects are very, very significant, and therefore, and the return profile is often multi-decade in nature. And so, you know, a provider of capital is going to want to make sure that they're going to understand how things are going to work for the period of time that they're going to get a revenue stream against that deployed capital. And so
it's not just you as NAB, it's your experience as the business bank, as you put it,
in any
market. And all businesses benefit and want certainty and stability in the energy space.
I think that's a fair comment.
Yeah. Earlier you spoke about dialogue and narrative that essentially puts forward the idea that net zero and low energy costs can't coexist, and you said that was dangerous. Can you expand on that a little bit?
My point was that Australia is blessed with significant sources of energy, and that uniquely, frankly, we have sunshine, wind resources, hydro resources, and very large bodies of natural gas that we should be able to expeditely bring into our network, because the biggest driver of price increases, and this is economics 101, is always supply and demand. And so if you can bring supply to bear, that de facto will reduce prices over time. The challenge that we have in our country is we have not done a great job of bringing new sources of energy to the marketplace. And at the same time as we're seeking to decarbonize our grid, get rid of those old legacy coal-fired plants and meet the rising demand of energy for things like AI, we're struggling to get all those things done at the same time.
So narrative and narrative and dialogue and statements that suggest that net zero and low energy prices can't coexist is unhelpful to the economy?
I think focusing more of our dialogue on getting projects done, gas sourced, transmission addressed, is a better place to be spending our energy than pontificating about net zero targets, because I think they can both be done.
Yeah. So does that mean that impediments to renewables projects are unhelpful in that ambition that you're looking towards?
Well, let's get these projects done. Let's enable business to prosper. Let's get a look at the planning impediments, the green tape and the red tape, and push these projects through. The federal government has a role to play there. State government has a role to play there. And we just need to become much less tolerant of poor practices and all this time taken to get things done. And if we don't, as I said in my opening remarks, we're hurting households and we're endangering manufacturing on our shores.
And just to come back to the discussion that we were having earlier, there's currently no business case to say that nuclear would be viable here.
Look, I'm not sure I would agree with that comment. There are many other jurisdictions that have made a decision to prosecute nuclear energy, and I don't think that those countries haven't thought that through in a reasonable way. I think what might be different for us than some other places that we have so much significant sources of both renewable energy as well as gas that we may not need nuclear to the same extent that other jurisdictions might. But the notion that nuclear energy is bad and doesn't do what it says on the tin is not proving out in other markets.
Understand. You're saying that renewables is the better option for us. I was going to ask about low-income customers and some of the work that ASIC did when handing down its report. Can you outline the steps that the NAB has taken to implement the recommendations out of that ASIC report with respect to low-income customers being able to access the banking products that they're entitled to, please?
This is something that, as a bank, I don't think is that well known and something we're incredibly proud of, which is that since 2016, our bank has not charged any account-keeping fees to any consumers in the entire country. And we estimate that we have saved Australians something like $500 million in fees because they've chosen to bank with the National Australia Bank. Have we gotten the commercial benefit of that fee posture versus others? I'm not sure. We probably haven't. Why did we, though, do it? We did it because, I don't think we had sufficient confidence that we wouldn't create customer detriment. And, you know, if we didn't have 100% conviction that we wouldn't be on that ASIC charge sheet that just came out recently because we were charging fees to low-income and marginalised Australians or charging fees to dead people, and we didn't have enough confidence that we could manage that risk, and therefore we chose not to charge that fee.
Do you think that if you have been able to do that, do you think it's something that could be achieved by other banks as well?
I mean, that's for them to decide on. You know, we made a decision.
Let me rephrase. How have you been able to do that?
the bank chose to not charge for that fee, and hope that over time we would therefore get more Australians who would choose to bank with us, because we offer free banking to all of our customers in a way that some other institutions do not. And that's something we're very proud of as a company, and I would hope that more Australians would choose to bank with us as a result.
Okay, thank you.
Good ad.
Good?
Yeah.
Oh, okay, very good, very efficient. Gee, you've really had to assume the male form of a Delphic oracle today, Mr. Irvine, and been sought to comment on all sorts of things. I commend you on that. Can I just pick up on where the member from Wharton left off? This is on how banks are delivering services to customers in situations of financial hardship, because that's been a big focus of the hearings. Earlier this year, I think your bank was ordered to pay $15.5 million for failing to respond to customers facing financial hardship within the legal time frame between 2018 and 2023.
Yeah.
I understand you've made some changes to better support customers in financial hardship since then, including, I think it's called the establishment of NABCare. So I guess I wanted to ask, can you expand on how you've improved that hardship assistance and the processes? As a result of those actions, how many more customers are being referred and receiving that support? And finally, do you have an automated system for hardship request responses? And if any of those questions need to be repeated, please let me know.
Yep. First of all, and I don't want to beat around the bush on this, we were incredibly disappointed about finding that issue. What happened, we put in a new system, this was before many of our times, in 2016, for our NAB Assist team, which is the primary group that reaches out to customers who are behind in their payments. And unfortunately, when that system was built, there was a workflow that wasn't properly, that essentially didn't finish. And so if you had the misfortune of a colleague entering you into that workflow, you essentially went to Never Never Land. You got lost. We would have done.
So how did you discover that?
We found it in 2023 when we were essentially stopping a COVID. We had to introduce a specific provision for customers who were delinquent due to COVID. And as we were doing that, we found this 345 customers were in this queue, essentially, that were lost and not being properly given the service that they need.
Because this is my big worry about workflow design with the application of AI and how you will test the operation satisfies your expectation.
Yeah. So what's frustrating for us is that we must have known about that workflow discrepancy because we were guiding our colleagues in the work practices to not use it. And so that's very frustrating.
That's unfortunate.
And which is what, and then the other reason that we didn't find it, it was such a small proportion of customers who, so we would have done well over 100,000 hardship requests over that time, and there was only 345 that were here, that went into this flow. And so, unfortunately, we didn't know about it. We then were addressing this, a post-COVID process that we're essentially shutting down. We found this.
Did you assist those or go back and help those 345?
So we were horrified by it. Yeah. We immediately let ASIC know of that contravention of the code. We reached out to every single one of those customers to check in on their welfare and to see if we could be helpful to them. And thankfully, in most cases, they were okay. And we had a joint statement of agreed facts with ASIC around what happened there. And I don't in any way want to downplay its significance, but what I'm proud of is this is actually a good example of a bank that found something, owned it, fixed it, remediated with customers. We were incredibly sorry and angry, frankly, that it happened, and we've also, as a result of that, significantly improved our hardship practices. We are seeing materially less delinquency in our book, and yet our hardship numbers are way up on last year, which shows that we're identifying it far more often than we were in the past. Don't know if you have the specific figures.
Thank you, Andrew, and thank you, Chair, for the question. So one of the things that we've...
Sorry, in your answer, do you have an average time that it takes to process a hardship claim?
I think our obligation is to do it within 14 days, but I'd want to check the specifics. So.
Well, if you can take that on notice,
yes,
if your obligation is 14 days, how often, as a percentage, of the claims that you hit that metric?
Yes, no, we'll take that on notice, but there is an obligation from ASIC to respond within a certain time frame, and I'd need to double. I don't have that data
A standard
point.
obligation or a specific to NAB?
No, I think a standing obligation is my understanding, but I'll get the information for you.
Thank you. I'm sorry to interrupt your flow.
No, not at all. There are several steps that we took. First of all, we established, Andrew mentioned the NAB Assist team. We created a NAB Care team, which is about 200 individuals that are specially trained to deal with these circumstances, because often when a customer is calling us at what is a very stressful time of life for them, they often don't use the word hardship. So we've had to train our people to recognise from the conversation that they're having with the customer that actually this is a hardship case, and that they need to then take the appropriate action. Our better recognition of hardship circumstances has led to the increase in the cases that Andrew has mentioned. We've also changed the tools and language on our website to make sure it's more in plain English. We worked with behavioural scientists to reframe the language, move it away from what you might call legalese, which meets the sort of like compliance code, to actually what is it that's going to be easy to understand and refer to and guide someone who is in this very stressful life event. So there are a number of steps that we've taken. It goes back to the point earlier about being a learning organisation.
I think it's interesting. I obviously won't speak for members, but I think it is interesting to hear the use of a behavioural scientist to do that. There was an interesting discussion yesterday with some of the people that appeared before us around people's ability to navigate complex terms and conditions, and I wonder whether or not your institution would contemplate. I mean, at some point we do need to think about. We have to confront the fact that these terms and conditions are voluminous. Obviously, a risk aversion to a litigious mindset, but making it easier for people to navigate terms and conditions and potential use of behavioural scientists to aid in that might be helpful, don't you think?
Yes, absolutely.
Another thing I'd like us to be doing more of is having more language options for our customers as well. So if English isn't your first language and having to decipher some of the terms and conditions from banks, that must be a pretty high friction and pretty scary for some customers.
Yeah. Can you take on notice on a quite separate issue? I'd be interested to know whether or not NAB is investing in build to rent.
Very significantly.
Yes?
Yeah.
Okay, I'll put that on notice.
I think we're the biggest build to rent financier in the country, doing a lot of it, and it's starting to, we're trying to see a lot of traction.
Can I test your memory as to what that figure might be?
Oh, it's in the multiple billions of dollars.
We'll come back to it. On AI, talked about training up people. There's sort of two cohorts. I've heard this elsewhere. That people will likely be threatened in their jobs by the people who know how to use AI rather than AI doing it. I mean, I think there are a variety of. It's a dynamic issue, so there's a number of factors at play. How much does NAB invest in getting your own workforce AI ready?
We have, I think, today, something like 15 or 20,000 of our staff who have Microsoft Copilot use. We are doing we have multiple online and in-person training sessions to help people start to adopt solutions like that. That's the most democratized solution that we would offer our staff. You know, we have more specific solutions. So we have 4,500 software engineers. All of them have software AI capabilities to help them write software quicker. They're still accountable for the quality of the code, but we are seeing significantly more code being written because they're adopting the AI tools.
I think I might need to just interrupt you just because time's my enemy here. If you could take that on notice, it'd be interesting if you have a figure that you could point to.
On terms of training?
Training, your investment in training to get your workforce AI ready. There was something that you said when you were talking about account keeping fees that prompted a reminder of something that the CEO of CBA referenced yesterday in relation to getting rid of ATM fees. And I think he had a bit of remorse about that. It was kind of pitched as the good idea at the time. And I was really impressed that you said that you abolished account keeping fees and that there was some benefit in that. You see that abolition as a value proposition that has potentially attracted customers your way?
I'm sure there are customers who choose to bank with NAB because we don't charge account keeping fees, whereas others do. Certainly.
Yep. And finally, just on going back to AI, do you ever test your AI chatbots and they're delivering a customer experience that you would be satisfied with?
Constantly. We're very robust in our testing because, you know, at the end of the day, it's a proposition that we...
I know, I'm asking Andrew Irvine if he does it.
Oh, I do. Yeah, absolutely. Absolutely.
Mr. Whitelaw looked askance then.
In fact, he's one of our best adopters of AI.
No, that's so. Okay.
Yeah, I'm pretty keen.
I know you said was it the NPS?
Net Promoter Score. Yeah.
Was good.
But look, we've got to keep investing, and the quality of the technology is improving. My first experiences with these robots were really clunky and frankly unenjoyable. But they've gotten much better, and they're going to improve at a remarkable rate from here.
Yeah, okay. I've got to be hard on myself as I have on others, so I'll wind up my questions. We do have, if there's anything else that people wanted to canvass urgently, Mr. Gregg, have you got some? Okay. Why don't we go, Mr. Gregg, yourself, if you have any final questions, because we'll finish before 5 p.m.
Thank you.
Thanks, Broadcasting, for fixing my mic. Much appreciated.
I just had two. Was that coding error that you referred to before done? Was AI involved in that?
I don't believe so, but I'm not going to give a definitive answer on that. We have humans in the loop. So we
very clearly, our humans are accountable for the code that they write.
Yes, there are no AI agents dropping code into production.
No way.
Human in the loop every single time.
And satisfied with the oversight of that?
Well, in that instance, clearly not, because it led to an incident, and we're running a major incident report to see what happened.
But I don't think that was because of AI.
That's not because of AI. That's simply because there was an error in the code and it should have been tested before it went into production.
Okay. On a happier note, with housing, I was just wondering what changes you've made to your product offerings to embrace new forms of housing, like modular and other forms.
Well, we look at our practices. I think one of the areas where I think banks have been more reticent to lend is on smaller dwelling units. So, you know, one bedroom or studio apartments have typically been more difficult to get mortgages for, and given the cost of housing and the smaller size of households, that's something that we're working at. I think modular is very exciting. I personally went to see one of Australia's biggest modular home builders in Melbourne a couple of months ago, and was actually blown away by how quickly they are able to build high quality dwellings And so I think modular is a big part of the answer here for Australia. Right now, there is an issue with the ecosystem around insurance that we want to see addressed because...
what, on modular?
Yeah, on modular. Because essentially in a normal traditional dwelling construction, the insurance is properly taking the risk away from the homeowner. Right now with modular, there is too much risk to the homeowner when something leaves the factory to when it's fully completed on site. And so our insurance capabilities need to be advanced. And that's something we're a little bit reticent in, and that's a bit of an impediment to how much lending we will do there, because we don't want to be in a position where we lend money and a customer has real harm because they were uninsured on a site. So that's something we want to see addressed.
Yeah, I mean, the modular, it's a great solution. It does have different risk characteristics for the home buyer. So, for example, in the event of a manufacturer's insolvency, the home buyer might be placed in a position of negative equity because they've made payments, but they've got no house or it hasn't even been started. It could be still sitting in a factory, for example, and it's harder to get another constructor if you're building a house, a typical house, and the builder goes into liquidation. You can get another builder to step in and complete the project. Yeah. But with modular, that's not as straightforward. So there are different risk characteristics, and we want to be very, very sure, to Andrew's point around the account keeping fees, we want to be very sure that we can get this right for customers and that they understand what they're getting into and the product is correctly configured for them before we go forward.
But this is a big part of the answer, and we've got to get to a point where we can do this safely and lend money to modular housing in exactly the same way we do for traditional housing development.
So is that something like with stage release of funds and things like that, is that something you're working on, whether you can be part of the solution to that, or are you just waiting for insurance to come out?
No, we're not just waiting and hoping that one day our problems will be solved.
I'm very pleased.
We're very much engaging with modular housing providers. Why I went to visit them and talk to them about what we could and should be doing. So, you know, we're pushing into this and we want to be part of the solution.
Yeah.
Thank you.
Before I hand over to the member for Reid, I have to commend the Australian Banking Association in leaning in on re-examining the mortgage products that would be extended to purchase of modular homes. I think that's helped create an environment that the banks, the members of the ABA, could then contemplate the design of products. So I think it's been very good, and obviously insurance needs to now. Hopefully the Insurance Council of Australia can undertake a similar role in dealing with the issues that you've rightly raised today. Member for Reid.
As the biggest lender to businesses, where are the sectors that you are seeing the biggest growth in business lending to?
The biggest growth in the last couple of years has actually been in utilities and energy, but it's still not at the quantum that we need it to be for all the reasons that we've talked about in this committee, but there's been a lot of growth there. Data centres is another big area of capital consumption, which I think is a good thing. Australia's building domestic compute capacity to enable the AI innovation of the future, and I think that's really important for the economic health of our country as well as for national sovereignty. Defence is becoming a very significant growth vector in WA and in Northern Australia. We're seeing very significant growth in the defence industry. And we're very clear that we want to, as a bank, support the defence industry with our lending practices. So that's an area of material growth. And then the more traditional areas are also doing relatively well: commercial real estate, and agriculture. So it's pretty diversified.
Yeah, it does sound like it. And just my final question, Chair. In the time that you've been the CEO, has there been a business that has the growth of which has really impressed you?
Like a sector or a specific company?
Or both, yeah.
I think from a sector perspective, the data center area has been very impressive around how quickly they're growing and scaling. And we're very fortunate in Australia to have some global leaders, AirTrunk and NextDC. These are really wonderful organizations that are, going to create real sovereign capability and wealth for our country and should be applauded. And that's really pleasing to see.
Thank you.
Casey.
Yeah, Mr. Irvine, you did well not to pick really a favourite customer there. It's a little bit like picking favourite kids. You don't want to, you might upset people. So, as someone who spent a lot of time in sales, we love all our customers equally. So, well played there. Just want to quickly touch on deposit deception and the ACCC inquiry that found 71% of bonus interest accounts did not receive the bonus interest rate on average each month over the first 6 months of 2023. So just a list of questions, and happy that some are detailed. If you don't have that detail, we can take them on notice. But does your bank offer personal savings accounts that require consumers to meet hurdles to gain interest?
We have only 2 savings products, which is quite different from many of our peers who would have many. And so we have an interest saver and a bonus interest product. And we regularly look at the rates of customers getting the monthly interest rate. And I think we generally are at 84 or 85% of customers with our bonus interest product who actually achieve the bonus rate of interest. And we are proactive ensuring that customers are well informed. So, for example, if a customer didn't get interest 1 month, we will send them a notification on what the criteria are to remind them of that. Another example is in order to get bonus interest, we want, I think, is it no or minimum number of withdrawals? I think it's no withdrawals.
So the reward saver, if a customer's about to take money out and potentially forfeit the bonus interest reward, they get a warning in the app.
Before they actually make the payment, we give them a warning to say, with this account, you will lose your bonus interest if you proceed. So we really try and again, be on the customer side here and give them the knowledge and information to manage this better.
And have these changes come about since the 2023 inquiry? How recently have you started to put these measures in?
I think we were pretty proud of the fact that our customers were getting those levels of bonus interest rates even before that inquiry. And so I think in our submission, we highlighted some of the things that we were doing that I don't think was common practice. That's not to say that there weren't things that we learned as a result of that inquiry that we also started doing. But I think by and large, this was an area where NAB was doing relatively better than peers.
So we've had some testimony, there's been some others had significant increases from, say, 23 from the inquiry to now, but it sounds like, and you don't need to go year by year, but your it's increased, which is positive, but didn't have that quantum primarily because you're already at a high level of people redeeming.
Correct.
That's a
correct.
fair summary.
And I'll tell you, back to our culture as a company, we would have been very unhappy having a product that customers weren't benefiting from. And so if we had a product where 40 or 50% of customers were getting that bonus interest, we would have looked at that, we would have talked about it at management, it would have gone to our board customer committee, and it would have been fixed.
Yeah, that's fantastic.
Two quick questions, one on tech cost and another on scams. On tech costs, the rising tech and cloud services costs feeding into your cost base, are you tracking that risk?
Yeah, no, it's material, and and the tech companies are very good at making sure that the bill increases all the time. That's why they have such high valuations. One thing, again, that's unique to NAB, we have 3 cloud service providers. So we are not...
not all eggs in one basket.
Not all eggs in one. That's very important. And even more, I don't think other banks are here yet, but we can move 40% of our compute virtually instantaneously between cloud service providers. And what we're seeing from these providers is you're seeing, I'll call it the Uberization of pricing. So when they have compute that's contested, they start surcharging. And when they have excess compute, just like airlines who have unsold seats, they provide pricing benefits to their customers. And so the ability to have multiple providers and the ability to move compute means that we are as effective as we can be at optimizing our costs, but they are material and they'll be ever increasing.
Okay. Finally, before we finish up, the Scam Victims Alliance raised something that really concerned me in reference to the resolution of scam complaints.
Okay.
And it was what really got me is that they would only the claim that banks would only reimburse after prompting victims to sign either a secrecy or a non-disparagement clause. Does your bank engage in that kind of approach? How have you got an opportunity to outline how you try to assist people where they have been scammed to get restitution?
Yeah, I don't believe we operate in that way, but I will confirm.
Yeah, we'd have to check. I'm also confident we don't.
You can take it on notice.
Yeah.
I will be putting some questions on notice in that regard, but it is something that I've asked other banks that have appeared, because I'd be very concerned if that were the case.
I would agree.
Yeah.
We have another thing that we're proud of as a company is our AFCA rates. AFCA, I think with the industry, 31% of the time they are in favour of the customer complainant versus the bank. I think for us it's
about 11%.
It's much lower. And so again, we're really, really thoughtful around complaints and complaint volumes. And I'm very pleased that in the last year, the number of complaints to our bank are down 14% year over year. So again, we're working hard to be a better bank for our customers.
Well done. Can I just now thank you for appearing today? Very grateful for your engagement with the committee. The committee secretariat will contact you in relation to any matters arising out of today's hearing, and you'll also be sent a copy of the transcript of your evidence as well, so you'll have an opportunity to request corrections to any transcription errors. They sometimes occur, and it's good to get them picked up. So I thank all the witnesses. I want to extend my gratitude to the members of the committee for their forbearance. I think it's helped in the smooth management of some very big hearings over the last 2 days, and also to the committee secretariat for their incredible amount of work in supporting our efforts today. And with that, I will now declare the public hearing closed.